This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, Matt Miller, Paul Sweeney, live in the Bloomberg Interactive Brokers studio looking at these markets. A sell-off today, perhaps on the back of a more hawkish, or certainly a hawkish Fed commentary from yesterday. Similarly, we had the Bank of England today hold steady. Again, they had some hawkish rhetoric. S&P off at 0.9%. NASDAQ about the same here. Yields, we got the 2-year Treasury trading. It's off 4 basis points, 5.13%, whereas the 10 years up 7 basis points, 4.47%. WTI crude oil up about 0.6% off its high, but still above $90 per barrel. Right now, let's head down to Washington, D.C., world and national news with Amy Morris.
There you go. Thank you, Paul. Ukrainian authorities say Russian missiles have been pounding cities across Ukraine today. At least 3 people have been killed. Others have been trapped under rubble. The missile attack was Russia's largest in more than a month. And it comes as world leaders are meeting at the UN General Assembly in New York, where Ukrainian President Vladimir Zelensky denounced Russia as a terrorist state. Now, Zelensky is in Washington, D.C. today. House Speaker Kevin McCarthy won the support of a few hardliners as he's working to pass a short-term spending bill and avert a government shutdown. Bloomberg's Anne-Marie Hordern tells us more.
What he is doing is the debt ceiling strategy, which is make sure he can keep his party together, the Republicans together, to pass a bill, even though this is going nowhere with the Senate, which is controlled by the Democrats. But at least he's able to show his right flank of the party that he's explored all of these options.
Bloomberg's Anne-Marie Hordern. Lawmakers have just 10 days now, maybe less, to act to avoid a shutdown. Bloomberg chief U.S. economist Anna Wong says a lapse in federal funding would cut 0.2 of a percentage point from the GDP for the quarter each week it lasts. An age limit for politicians is being talked about in Congress now. It is not sitting well with some of the older lawmakers. Texas Congresswoman Sheila Jackson Lee is 73 years old. She'd only have 2 years left under this proposal. It caps political service at age 75.
It undermines the people's ability to run their government as they choose.
Jackson Lee says it would be up to voters, or it should be, to decide if someone is too old to serve in office. Rupert Murdoch, as you may have heard, is transitioning from his roles as chair of Fox Corporation and executive chair of News Corp. Fox reports the 92-year-old Murdoch decided to make the transition in November. His son, Lachlan Murdoch, will become the sole chairman of both companies. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris, and this is Bloomberg. Matt and Paul.
All right, Amy Morris, thank you so much. We appreciate it. Coming up, we're going to check in with Dana Peterson, chief economist at the Conference Board. The Conference Board released their leading index, came in a little bit softer than expected, so we'll break that down. So, Matt, let's continue on a little bit of a Hollywood beat. We were talking about Rupert Murdoch earlier, but one of the big issues is the strike by the writers and the actors. Looks like there might be a little bit of a headway here. The Writers Guild of America and the group representing major Hollywood studios said they would meet for a second day, which is an encouraging sign that talks are progressing in a labor standoff that has lasted for months. I think they went out on strike in May.
Yeah, it's been forever.
And they haven't really had much headway, but at least they're talking now.
Which, by the way, is very difficult for the writers, right? Much more difficult for them than it is for the studio bosses because they're, in a lot of cases, living paycheck to paycheck and not getting paid. So this strike, I think everyone hopes would come to an end. And then what happens with the actors? Do they?
I think they follow suit.
Follow suit.
They follow suit.
That's what I would expect for them to come to an agreement after the writers, because certainly the studio bosses are thinking about both at the same time.
So the studios made a new offer, and the Guild will give its response on Thursday. The companies have agreed to one of the union's major demands, which is additional payments for the success of TV shows on streaming service. So that's a big one. Another major request by the union, minimum staffing levels for writers, is still in dispute. So the real challenge here for both the companies and the union is how to navigate a work agreement in an industry that's undergoing just tremendous fundamental change as they try to evolve from the traditional pay TV model where you paid through your cable bundle or your satellite service to one now of streaming. And then artificial intelligence, also a big issue for the writers. So lots of big issues on the table. Hopefully we can get it worked out soon. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
We got a lot of green on the screen here, but the volume is light.
We constantly underestimate the strength of the U.S. consumer.
This is a market that's much more optimistic or bullish than maybe central bankers are.
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
The supply chain has still got dislocations globally and here in the U.S.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Dana Peterson, chief economist at the Conference Board, get her analysis of some of the leading indicator data that they look at. And David Kudla, founder, CEO, and chief investment strategist at Mainstay Capital Management, is going to join us to give us his market call. And then Barry Ritholtz, founder of Ritholtz Wealth Management, host of Masters in Business. He's going to check in with us on his weekly chat. And I can't make any promises, but it will likely veer into some type of car talk. And that's typically what happens. But first, let's kick things off.
That's okay. We can wait for that. Stocks continuing yesterday's post-Fed sell-off. Even with a pause, investors latching out of the higher rates for longer narrative. 10-year yields, they're up right now 6 basis points, 447. Especially problematic for the growthier stocks. Right now, ARM Holdings, some of the individuals on the move, briefly sliding below its IPO price. Broadcom sank in a report that Google is considering dropping the company as one of the suppliers. Meantime, the former St. Louis Fed President Jim Bullard tells Bloomberg he's expressing confidence the U.S. can avoid a recession.
Yeah, I think the prospects for a soft landing are very good, but you haven't landed until you get inflation back to 2%, so you're only partway through this process, but prospects are looking good.
Right now, the S&P 500 below 4,400, 44 points lower right now, a 1% decline. We're 43.57 on the index. The Dow Jones Industrial Average, 180 points lower. And right now, the NASDAQ 100, 174 points lower. That is a decline of 1.2%. Again, the 10-year yield, that is up right now 6 basis points. That's at 447. All right, bear with me. A Minneapolis art gallery, asking $9.85 million for a walk in the woods. The first of more than 400 paintings Bob Ross produced on air for his TV series,
Bob Ross.
The Joy of Painting.
Let's build us a happy little sky. We just take this blue and we'll make some little crisscross strokes.
Ross died in 1995. He hosted that show from 1983 to 1994. In each episode, he'd speak directly to the viewers, and he encouraged everyone to paint.
And there were a group of little kids, great for little kids. You put that on the TV.
Little kids.
Calming.
Me and my buddies in high school, we used to skip out on like fifth period, you know.
Yeah. Where's he going with this?
Over to Davidoff's house and hang out.
Hang out?
Well, you know, and watch Bob Ross, you know. He'd always put a little friend in the corner, you know.
Were you like eating Oreos and drinking milk while watching the show?
We probably had the munchies at that point, is what you're getting to, I think. But I think it's amazing that one of his paintings, it's selling for $10 million.
I didn't say they're going to get that, but that's
what they want.
And remember, those paintings, that took like all of 5 minutes or whatever to paint those things. Yeah.
Wow. Great show. All right, good stuff. John Tucker, thank you so much. We appreciate that. Matt Miller and Paul Sweeney live here in the Bloomberg Interactive Broker Studio. We're also streaming on YouTube.com. We bring you news throughout the day here on Bloomberg Radio, but now you can get the latest news on demand whenever you want it. Subscribe to Bloomberg News Now to get the latest headlines at the click of a button. Get informed on your schedule. You can listen and subscribe to Bloomberg News Now on the Bloomberg Business app, Bloomberg.com, plus Apple, Spotify, and anywhere else you get your podcast. How about that? Looking at the markets here, as John was just reporting, S&P off 1%. Jess Menton joins us here. She covers all the equity markets for Bloomberg News. She joins us here on our Bloomberg Interactive Broker Studio. What are you looking at, Jess?
Well, I know the focus has been so much when you're looking at what's happening in the yield space and its effect more broadly when we're talking about technology and so-called growth stocks, but I've been looking at what's happening with the Goldman Sachs basket of non-profitable technology shares.
Non-profitable technology shares. They have got quite a basket to choose from, I'm guessing.
It is. Okay. So this is a company, or not a company, but an index rather, when you are looking at, say, Roku, Peloton, Lyft.
What's the ticker?
It is actually GSXUNPTC index is what that is.
People driving along are like, what was that?
Let me write that down.
I will also put this in our chat for you, Matt Miller, so that you could grab that. You look at that, down about 3.6% today, on pace for its worst day since August 2nd. If you look on the flip side, you look at the NASDAQ 100 index, that's down about 1.2% today, especially if you're looking at this Goldman Sachs basket. This quarter, it's already down close to 12% and has been more pressured than when you're looking at its counterpart there for the NASDAQ 100, down about 2.5% this quarter. So when you're looking at that Goldman basket, it really peaked out in the middle toward the end of July and has continued to come down since then. So when you're looking at more of these kind of micro type technology names and unprofitable type names that are typically money losing type companies, those ones are getting much more pressure than when you are looking at its big tech companies.
I just put it up against, by the way, the meme ETF, and they track perfectly, obviously. Just almost a correlation of 1 there.
Right. And so those are particular names that I've been keeping a close eye on as far as just given the moves there when we are talking about technology and kind of looking under the hood there. I wanted to also point out with home builders, we did get KB Home. The ticker symbol on that is KBH. It's down about 4.6% on pace for its worst day since September 5th. It did report earnings and actually beat those expectations in its latest report, though soft gross margins and an orders miss, unfortunately, is pressuring the stock. But also more broadly, if you look at this particular index, it's S15 Home Index. So this is where it's going to house other home builders like D.R. Horton, Lennar, Pulte Group. It is down actually more than 10% from when it peaked out in mid-July, so technically also, again, once in a correction there. So there's a drawdown feature that I do like to use in the terminal to see that. So it's something that I've been tracking, written some, taking stock columns about recently. So and so those are some particular corners of the market when you are looking at home builders and that. But also, if you want to look at something that might be more of a bright spot today, FedEx, of course, we did report earnings after the bell yesterday, post-Fed. FDX is the ticker symbol on that. If you look at its stock today, it's up 4.3%, on pace for its best day since June 27th. It's actually up, if you look at its stock, more than 75% since its low it made a year ago, when it also had those concerns about those that basically the company needed to have these cost-cutting efforts. But since then, if you look basically a year later, it had better than expected results, and it also continues that extensive cost-cutting efforts there. And also you've seen a wave of different analysts boost those forecasts. So if you look at Citi, it actually has a buy rating with a price target, raising that to $300. It previously was $295. Jefferies does have a hold target on that, but it has raised its price target to $265 from $245. So that was more of a bright spot today in the midst of a lot of red out there.
Yeah, FedEx, I mean, if you can cut costs in a time when people are just getting more and more boxes, I know it's not pandemic level, but I mean, that trend is a great long-term trend. And if you can also deliver some cost cuts, that's a recipe for a stock that is up 75% on the trailing.
Cost cuts are one thing, but you know what? You want to hear from FedEx a positive outlook on growth,
especially
because
what that means for the global economy
exactly,
as well.
Exactly.
Yep.
And I can never not think about Castaway.
Yes, exactly. Great movie.
The great Tom Hanks movie with the Wilson
co-star
volleyball, and he flew for FedEx.
Very low-cost actor salaries. In that,
you look at UPS, though, ticker symbol UPS, it's down about 10% year to date. I mean, it also was going through those negotiations with the wages, with its workers in recent months, too. So a little bit of a different story there when you're looking at its rival.
By the way, that new IPO that we're looking for, right, is Amer Sports or Amer Sports.
Yeah, AMER.
They own not only Solomon, but Wilson.
Yep.
I wonder if they'll use that at all.
Yeah, they could.
In their roadshow.
Wilson. Yep.
Or the Fish song. You know, there's a Fish song. Wilson. Dun dun dun.
Any fish fans in here other than Matt Miller?
Oh, boy.
What about JT? What about...
Let's go back to that painter.
Yeah, exactly. All right, Jess Metton, thank you so much for joining us. Jess Metton giving us kind of an update on what's happening out there in the equity markets. And a little bit of economic data today in addition to the jobless claims and Philly Fed home sales. We also had the leading index came in at negative 0.4. Consensus was for negative 0.5. So a little bit better than expected there. Dana Peterson joins us, chief economist for the Conference Board. Dana, what did you learn from your index that you released this morning?
Well, it's still telling us that the leading indicators are suggesting that there's going to be a recession at some point over the next 12 months. Certainly when we look at the details, the financial market indicators as well as the expectations gauges for consumers continue to be negative, and also jobless claims tick down a little bit. But all in all, this measure has been negative for 16, 17 months, and it's continuing to tell us the same exact story.
Is it, I mean, it's been telling us the same story, but the economy's pretty good shape here. How do we kind of put those two together?
Sure. I think the thing is that within that measure, you don't really have services embedded, and you don't have all the labor market indicators in there. We do have labor market indicators in the current economic conditions measure, and that has continued to say that everything's okay. And that's because we continue to see positive payroll gains and real incomes are rising year on year, especially as inflation comes off. And so that's really the current situation. But again, we're trying to look ahead. And when we look at what's going to be facing the consumer and businesses going forward, we're looking at very elevated interest rates for longer. Certainly the Fed indicated that it's not going to cut interest rates that much next year. Maybe they have one more hike this year, but then only 2 cuts next year. And we're also looking at a situation where consumers are going to have to pay down their debts, and those debts are going to be much more expensive going forward, including having to pay for student loans. So all of these things are going to coalesce into an economy that we think is going to be slower and potentially experiencing a short and shallow recession.
How is the consumer looking? And I know Tom always points out the bifurcation, and that is, definitely a thing. If you're the CEO of an automaker, you're getting $25 million a year. So the consumer, from that consumer looks great. But if you're one of the UAW workers, not so much. We start to see a buildup in credit card debt. We start to see more and more delinquencies we're hearing in terms of credit card and auto loans. As you point out, student loans need to be repaid again. So that debt pile that's getting more expensive is also growing, right?
It is. When we look at consumer credit card debt, it's back to where we were on the trend before the pandemic. And you're absolutely right. Delinquencies are rising. They're back where we were in 2019. So all the gains have been wiped out. And when we look at charge-offs, especially by banks that are not in the top 100 ranks, those charge-offs are very elevated and even above where we were back in 2019. So we're looking at a situation where the consumer is coming under pressure. Folks are using credit cards to finance their spending, and it certainly isn't coming into a very good picture, we think.
How about the labor market here as it relates to this economy? We had the initial jobless claims once again come in, better than expected, better than last month at 201,000. It's this labor market, despite all the doom and gloom out there, to the extent there is still resilient.
Well, I think you need to look at the labor market 3 different ways. So yes, you do have some companies that are still hiring, and those are mostly the companies where they need people to show up to work, such as healthcare, restaurants, hotels, even public administration. And so we're definitely seeing job gains there, but those gains are getting smaller and smaller and smaller. And then on the other end of the spectrum, you do have layoffs, and those are mainly companies that did very well during the pandemic and not so much this now past the pandemic, certainly tech, finance, transportation, warehousing. But you still have a large group of companies that are hoarding workers. And the reason why is they don't want to have to let everybody go, especially if they think that the downturn is going to be short, it's going to be mild. But we are seeing them cut back on hours. Hours are back down to where they were pre-pandemic after a surge. And certainly wage growth isn't as aggressive as it used to be. And we're seeing companies pull down job ads, and there's less quitting. So there's definitely cooling in the labor market occurring.
Yeah, it does seem like the strength is a bit deceptive, you know. But you know, I keep thinking that, and then we keep getting these amazing data points. So, or much better than expected data points. At what point does that turn around?
Well, I mean, the data that I'm looking at seems to be mixed. Certainly, when we look at retail sales, they were negative in terms of month-on-month gains in real terms after adjusting for inflation. When we look at payrolls, yes, 187 was very good, and in most years that'd be great, but we saw pretty significant downward revisions to prior months. And when you start seeing downward revisions to payrolls, it creates a trend, and you have this downward momentum in general. So I think that, and also when we look at inflation, headline is going in the wrong direction. Hence, the Fed signaled we're not done with interest rate hikes. And certainly there's concerns that the Fed will raise interest rates so much and that the cumulative tightening is going to weigh on the economy and cause a more disastrous situation. So I think we need to parse the data very carefully. Yes, there's some things that are surprising to the upside or slightly better, but even our own leading indicators, even though it wasn't -0.5, it was still -0.4. It's still negative. So I think we need to look closely at the data and see that, yes, the U.S. economy is slowing in line with what the Fed wants regarding its monetary policy tightening.
So again, so just to be clear, Dana, are you guys at the conference board saying maybe a shallow recession next year is possible, likely?
Yeah, so that's our call. Yes, we do expect recession. We keep having to push it out because consumers have been spending. But again, a lot of that's using debt. But yes, we do have a recession call for the first half of next year. Again, not very long, not very deep, and we'll get out of it pretty quickly.
And then hopefully we get straight back to zero interest rate policy as quickly as we can, right?
Exactly. That's when life is good. Dana Peterson, thanks so much for joining us. Dana Peterson, chief economist for the conference board. I mean, we need rates to come down because I got a refi. Dude.
Well, the Fed says rates are going to come down to 3.9% by the end of 25 and 2.9% by the end of 26. And I feel like there's a bias. I feel like we all... the markets and the Fed kind of want to get back down to nothing, which I don't know if that makes sense. I mean, isn't it healthy to have decent interest rates?
I don't know. I mean, what we hear is that was just abnormal to be that low for that long and representing all the stimulus that came in after the great financial crisis and then even more so with the pandemic, that isn't normal economic or fiscal policy. So we'll have to see how that plays out. But right now, looking at the yields here, the 2-year, it's off 4 basis points, 5.13%. And again, not a bad place to kind of hang out for a couple of years if you're just looking for some nice return. We'll talk to Barry Ritholtz coming up in just a moment to get his thoughts on that. The question is, do you buy a Dodge Challenger with Scat Pack or do you invest in the 2-year Treasury? What would you do, John Tucker?
I know I'd invest in the 2-year Treasury.
Yes.
But I know that's not a view held by everyone here in the studio.
Well, but you're getting closer and closer to the end of your Subi life.
So. All right. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Oh, good morning, guys. Cisco Systems has agreed to buy Splunk in a deal valued at about $28 billion. It's the biggest acquisition yet. Now, more from Bloomberg's Ed Ludlow.
Splunk is a data indexing business. Basically, you can monitor network users in real time. It has a cyber security element. For those investors or Cisco and Splunk investors out there, this deal will not impact Cisco's previously announced share buyback program. Splunk CEO Gary Steele is actually going to join Cisco's executive team and report into Chuck Robbins.
Now, Cisco right now down about 3.5%. We have Splunk, though, soaring up about 21%. NVIDIA CEO Jensen Huang is betting on India to become one of the world's biggest artificial intelligence centers. Bloomberg's Saritha Rai tells Bloomberg TV why the country is so appealing to the company.
The fact that China has been banned by U.S. export controls to be, buyer of high-end and most sophisticated graphic processors that are key to AI development. India is the next potentially big market. India is also a really large talent base for AI workers, and also India is a manufacturing site potentially.
Now, Wang visited India's Prime Minister Narendra Modi earlier this month. Shares of NVIDIA right now, they are down about 1%. And Google may stop using Broadcom's AI chips. The information is reporting it could happen as soon as 2027 as the tech giant looks to develop the chips in-house. Both companies have been in a months-long pricing dispute. The move could reportedly save Google billions of dollars a year. Alphabet shares right now down about 2%. I'm Lisa Mateo. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. A lot of red on the screen for the risk assets. Now, Treasury is also extending losses. The 10-year yield's approaching 4.5% today, so that's a level last seen around 2007. Government debt, by the way, down 0.6% so far this year. And I know you know, price down, yield up, opposite also true. That's weighing on risk assets, especially the technology shares. That's the post-Fed meeting picture that's still in the driver's seat for risk assets. You also had some data today, applications for unemployment benefits falling to the lowest level since January last week, indicating a healthy labor market that continues to support the idea of higher rates for longer. Amazon among the worst performers in the NASDAQ. That's down about 3.4%. The stock's been pulling back amid increasing expectations that regulators are going to file an antitrust lawsuit there. S&P 500, 44 points lower, 1% decline, below 4,400, 43.57 on the index. The Dow Jones Industrial Average down 175 points. The NASDAQ 100 is down 177 points. The 10-year yield, 7 basis points higher. That is at 479. It does kind of raise an interesting question. Do you buy treasuries for the price increase or for the yield?
Well, it's a win-win, I would think, right? Because if the price doesn't
has been
increase,
going down.
No, fine, but I'm just saying, if you're going to hold them, you're not a trader, right? So if you're going to hold them, I'm talking about you, John Tucker, you're going to get 5%. You said you want the 2-year? Fine. Buy it. If the price doesn't go up, then you're still getting a 5% return. That's fat, right?
I'm trading like every 10 minutes.
Yeah,
so.
he's out there.
Yeah, I'm out there. I'm a player.
Sure. My take on the Challenger decision is when I buy my Dodge Challenger RT Scat Pack wide body, what I'm going to do is pay in cash, and I feel like I'm making a 7% return. How?
Can we just...
Because I'm not financing it for 7%.
Kids out there, don't follow his example. Buying a vehicle is not an investment in any way, shape, or form. That thing starts to go down in price.
It wasn't until the pandemic.
As soon as the wheels hit the pavement.
Not right now.
All right. John Tucker, thank you so much. We appreciate that. Matt Miller, Paul Sweeney live here in the Bloomberg Interactive Broker Studio. So, all right. As expected, the Fed did not raise rates yesterday. Good thing. But, boy, they had some hawkish sentiment after that, and which the markets are kind of saying, all right, we get it, we get the message. But the question is, where do we go from here? So let's check in with our next guest, David Kudla, founder, CEO, and CIO at Mainstay Capital Management. So, David, I guess it's a kind of a hawkish pause yesterday from the Fed. Does that mean we need to be a little cautious here?
We do need to be a little cautious here. And I do like the fact that that's been referred to as hawkish pause. That was also the name of my garage band in high school.
What a sweet name.
Yeah, right. But yeah, we are saying that we need to be cautious here, not run for the hills, not go to cash, but simply we expect more volatility. We've had 2 pullbacks in August and now in September, and with what did the Fed tell us yesterday? Higher for longer is going to be even higher for even longer. And, it obviously surprised the markets. It was like a 2022 day where stocks and bonds went down together. And again today.
Well, we've got some inflationary impulses or events maybe right now, right? I mean, the UAW so far is only striking the Bronco plant, the Colorado plant, and the Wrangler plant. But guess what's going to happen to those car prices? I mean, if John Tucker were to invest in a Ford Bronco, that's going to appreciate in price because they're not making any right now. And that could spread across the sector. So they're likely to raise again, right? Especially if this strike goes on.
Yeah, they are likely to raise again. And, look, the labor market has remained tight. GDP has remained positive and very positive. Atlanta GDP now forecast, I think, for 4.9 for the current quarter. And we've got some issues out there. You've talked about them on the show today with credit card debt and delinquencies, auto loan debt and delinquencies, and those types of issues. But labor market is strong. The economy so far has remained resilient because the consumer, which is 2/3 of our economy, they might have be running out of their pandemic money, but now they're borrowing to continue to spend.
All right. So David, given that, I mean, one of the aspects of the market that is kind of fueling maybe a little bit of inflation concerns out there is energy. I mean, we got WTI crude oil up again today. We're now over $90 a barrel. How are you playing the energy space? Do you guys have exposure there? Do you think it's played out? How do you view that?
We're significantly overweight energy right now. And, we know that this rise in oil prices is somewhat being manufactured, by the Middle East. It's more of a supply demand than a demand issue. But we see the surge that we've had here recently tapered off a little bit, and a resurgence again today in crude. But we think we're headed for $100 a barrel, and we think that energy, if we're looking for places to hide out in this market, or just where we tactically see an opportunity, we feel very good about energy.
What do you think about it looks like to me, David, that the Fed and that the market, certainly Paul Sweeney, wants rates to go back down as quickly as they can to near zero interest rates. They're forecasting 3.9% for 2025 and 2.9% for 2026. And I just don't know why we want rates to be lower and lower.
Yeah, one thing we know for sure, if that's the forecast, that's what it won't be, right? The forecasting interest rates, whether it's 28 to 2019 when there was supposed to be at the end of 2018 4 rate cuts in 2019, and we got rate hikes, and what we had this year. Earlier this year, the first half of the year, the market rallied on the hopes of a Fed pivot. And what we learned yesterday is not only is a pivot not anywhere in sight, but rates are going higher. And so talking about rates in 2025 or 2026, and especially the Fed forecast, we've seen how wrong it's been. So we want rates to come down, but I think we're seeing less as a chance for that. The other complicating factor is the massive deficits that we have to finance, and the ballooning federal debt that needs to be financed. There's just going to be so much supply. out there driving rates higher or driving rates higher on bonds.
David, let's talk about the fixed income market. What are you guys doing in the fixed income space? I mean, I can sit there at a 2-year and get 5.13%. That's not bad.
That's exactly what we're doing, and we think that's what investors should continue to do. If you've been in long duration this year, you're getting hurt pretty bad right now. Year to date, the 10-year is down about 1.5% in price, but on the shortest and very short end of the curve, 1, 3, 6 month instruments, whether it's in high yield or corporates or treasuries, and whether in floating rate, you're looking at 5, 6, 7% gains year to date. So it's a very stark difference between the short end of the curve and the long end of the curve. So for the income portion of the portfolio, if you stayed ultra short term duration or floating rate, that's been a positive for your portfolio, where you get out to the intermediate term or longer term, and the long duration bonds have just really suffered this year.
David, what happens to rates if/when, I guess when is probably better, the government shuts down?
The market has, I think over time, it's just paid less and less attention to the annex in DC. There was a time where the market really reacted. It will have a short-term reaction. It'll in the markets, but I think it'll be very short-term, and that's even if we get that shut down. But I think most market participants we just know now to ignore the annex in DC.
Good. When I got into the business, David, in the mid-'80s, it was all about Japan. A lot of focus on Japan as a growth story. And then, of course, we've gone through a couple of decades of not so much growth. Now, however, I'm hearing a lot about Japan, like the most I've ever kind of seen since the late '80s. What are you guys doing there in terms of exposure?
Yeah, we're mostly, we've repatriated dollars to the U.S. Europe was good earlier in the year, but we've got Germany in a recession and almost flat GDP growth for the Eurozone. Japan, on the other hand, if we look at what's happened in terms of their corporate profits, their valuations are lower there on a historical basis and relative to the G7. And it's also a story about monetary policy. The ECB and the Bank of England may be pausing for a while, but they've been, we've seen many hikes in the Bank of England, ECB, and the Fed. And Japan is there barely tweaking, almost not at all, their monetary policy. So from that standpoint, that's been very good. Currency exchange rates are very good to be able, or actually, there's some hedging you need to do in there. But we like Japan.
Yep, absolutely. It's interesting how it has come back after so long where there was really no growth there. David Kudla, founder, CEO, and CIO of Mainstay Capital Management, also a founder-sponsor of Engage, the world's largest student stock pitch competition and conference hosted at the University of Michigan. Right now, let's head down to Washington, D.C., world and national news with Nancy Lyons.
Thanks, Paul. Ukrainian President Zelensky is on Capitol Hill meeting with congressional leaders today. The visit comes after Russia launched a wave of attacks across the country overnight, and as Congress weighs the Biden administration's request for an additional $24 billion in support for Kyiv. A group of House Republicans is opposed to President Biden's request and is concerned about the $100 billion in funding that's already been approved. Zelensky will also meet with President Biden at the White House. Congress is 10 days away from a government shutdown, but House Speaker Kevin McCarthy is reporting some progress with hardline conservatives who have opposed a short-term spending bill. Bloomberg's Jody Schneider is following developments in Washington.
He's got a few more of these hardliners in his camp now, perhaps. He basically had a closed-door meeting more than 2 hours late yesterday, and he came out still short of votes he needs to pass a Republican-only spending bill. Problem with this bill, of course, is it won't go anywhere in the Senate, and the president wouldn't sign it anyways.
Bloomberg's Jody Schneider reports Speaker McCarthy offered the hardliners a $64 billion cut to the cap on spending from this year's debt ceiling deal. That could clear the way for a vote on the stopgap by Saturday. 92-year-old Rupert Murdoch is stepping down as chair of Fox and News Corp after a nearly 7-decade career. He's one of the last of the media barons, a list that also included Ted Turner and Summer Redstone. Murdoch's eldest son, Lachlan, will become sole chair of the company and will continue as Fox executive chair and CEO. In a memo today, Rupert Murdoch said the companies are in robust health. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Well, the sell-off in stocks continues today after the post-Fed declines that we saw yesterday. Policymakers did keep rates on hold, but also delivered what is considered we'll call it a hawkish tilt. The narrative weighing on risk assets, especially technology. Discussion now focuses on what's next for the Federal Reserve after the central bank did keep those interest rates unchanged. Jennifer Lee, the senior economist at BMO Capital Markets, won't rule out a hike next meeting.
We've got another month and a half or so before the next announcement, and of course we've got this noise coming up with the strikes, depending how long they're going to take, whether or not we're going to get this shut down. So the data are going to be noisy. Right
now, the S&P 500 45 points lower. That is down over 1%, below 4,400 on the index, 43.56 right now. The Dow Jones Industrial Average down 164 points. That's down about 0.5%. The NASDAQ 100, 183 points lower, down almost 1.25%. You have shares of Amazon, Broadcom, Cisco, NVIDIA, and Alphabet, all leading losses in the NASDAQ 100. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Matt and Paul.
John Tucker, thank you so much. We appreciate that. Matt Miller, Paul Sweeney live here in the Bloomberg Interactive Broker Studio, streaming live on YouTube as well. So go check it out there, Bloomberg Radio. You can search there on Bloomberg, on YouTube.com. I think the only thing between our next guest and the golf course is me and you in this interview, Matt. Barry Ritholtz joins us. He's the host of Masters in Business on Bloomberg Radio. He's also the chairman and chief investment officer of Ritholtz Wealth Management. Barry, your Federal Reserve stayed put yesterday, but still talking tough, aren't they?
Yeah, they have not been afraid to really communicate what their intentions are. We can disagree with them and we can argue with them, but you can't say they haven't warned the street of their views and they haven't told people this is exactly what we're going to do.
So they still have 2 cuts priced in next year, and I've been asking everybody today about, where the Fed ultimately wants to be, because they have a forecast for 3.9% at the end of 2025 and 2.9% at the end of 2026. It feels to me like even though higher for longer is the current mantra, they want to be long-term low. Is that the right way to be?
They want to be long-term. They've said they want to be long-term high.
No. They're forecasting 2.9% at the end of 2026. Like, why? If they achieve a soft landing and the economy's okay, why would you want rates to be 2.9%? Isn't it healthy to have a solid 5?
I'm sorry. Did you say 2026?
Yes. Yes.
All right. So let's laugh about that for a moment, and let me point out that the quarterly dot plot has been so wildly wrong for all of the past 5 years, just looking out 4 quarters, just looking out a year ahead, to think that anybody on this Federal Reserve or anywhere else has the slightest idea what the state of the economy is going to be, what inflation is going to be like, what interest rates are going to be like in 2026, it's not merely laughable. I would call it malpractice, because you have to know GDP, whether or not we're in a recession, what's going on with employment, what's going on with inflation. These guys can't forecast a quarter ahead, 3 years. It's hilarious.
I get that. I mean, my question is
radio here.
My question is really just, is the bias right now to try and get back down to ZIRP? Like, is that where we want to be? Because over the last 50 years, we've averaged like 4.6% on the Fed funds rate. So, isn't that healthy? Or I guess it's, it depends on where our start is, but isn't it healthy to have the real rate of return like around 5%?
So let's start with ZIRP, which is a great place to begin.
What is ZIRP?
ZIRP was zero interest rate policy.
Thank you.
Was actually traces back to 9/11, but really it's a post-financial crisis emergency footing. So if the Fed is at zero, your assumption should be, hey, something is either systemically wrong with the financial system, or we're in the midst of a really, really bad crisis or recession. So zero should be off the table. What we want to do is get to neutral, which is the English way of saying English way of saying we're not encouraging inflation, we're not discouraging inflation, we're at a balance. The problem is the economy runs hot and cold. I don't mean recession-wise or bubble-wise, but some quarters are better than others, and you kind of have to allow a little bit of inflation. You don't want to cause a recession. When we look at CPI now, a lot of this all comes back to the 2% inflation target, which, as former Fed Vice Chairman Ferguson showed, is really a made-up number that goes back decades and doesn't correlate with anything. So the focus on 2%, I think, is misguided. What we want to see is stable prices and as close to full employment as we can get. I think the Fed sometimes gets so wrapped up in their models, they forget first principles. Price is stable, full employment. From there, what the actual Fed funds rate is, whether it's 4, 4.5, 5, is almost irrelevant.
Hey, Barry, I know how you hate throwaway terms that people use all the time, like it's different this time and there's cash on the sidelines, things like that. But how about the one discussion I hear a lot of is soft landing, hard landing, no landing? I don't know.
True. What the heck does that mean?
I don't know. How do you think about just where the economy's heading and how to kind of describe it?
I love that. I love that question. Listen, the first things first. Do you have a job? If you have a job, okay, so things are pretty okay. Are you getting paid enough? Are you seeing regular raises? Are you keeping up with the cost of living? That's where we all start. When we take it to the next level, we want to know, what are consumers spending? How much is the broad economy growing? And are we investing in our future? So it's a little more complicated than just, are we in a recession or are we in an expansion? One of the things that I've liked that this administration has done that we haven't seen in a couple of administrations is a little bit of industrial policy and a lot of infrastructure spending. You go back to Eisenhower and the interstate highway system. That was an economic boom that we built on that lasted decades. The same thing with the Kennedy administration and NASA and space exploration. That led to amazing technologies, everything from microwaves to semiconductors. Very often the private sector can't make a commitment to invest in R&D that doesn't have a return for decades. Only Uncle Sam can do that. I'm glad to see we've sort of moved a little bit back in that direction, because just think about the benefits of big, bold policy initiatives and how they've manifested in a robust economy. So to me, soft landing, hard landing, is the economy expanding? Are people working? Are they able to pay their bills? Are they out spending and enjoying life? As long as that trend continues, we're great. Occasionally there's a recession. That's the nature of things. You just don't want it to be too severe and too damaging.
Isn't AI another huge impetus for economic growth?
100%.
Yeah.
I've been playing with a software product called Perplexity, and I've been using it to every time I have a new guest on Masters in Business, I use it as a way to double check and make sure I didn't miss anything. And you'd be surprised how often AI is going to find stuff that my researcher and myself just Googling the history of somebody's career misses. And the fascinating thing is this product continues to get better. Every one of these AI models continues to improve. And I think what we're looking at now is twice as good as it was a month ago. But I can't even guess where these things are going to be a year or a decade from now. They're just getting better and better. This is on the same level as the internet. This is going to be a productivity boom. Absolutely, 100%.
All right, Barry, thanks so much for joining us. As always, Barry Ritholtz, host of Masters in Business on Bloomberg Radio. More coming up. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Thanks, Paul. The IPO train losing its steam. Instacart, Arm, Klaviyo, they've all moved lower since their trading debut. Bloomberg's Simone Foxman explains why.
We're a little still above those initial IPO prices, but we definitely saw some weakness in yesterday's trading, especially as we got that news from the Fed, that Fed decision suggesting higher for longer, when the juice really came out of the S&P 500. Now, part of this could be analyst-driven as well. The banks that were involved in this IPO still in quiet periods, and Instacart, the initial analysts coming out with some very lukewarm takes on how that company will do amid competition.
Now we have Instacart right now. They're up about 0.5%, but Arm right now down 4%, and we have Klaviyo right now down about 0.3%. And a computer glitch caused quite a mix-up for customers of a popular wireless service. Bloomberg's Gina Cervetti has that story.
T-Mobile customers who logged into their accounts recently may have wondered whose information they were seeing. Some online customers saw other subscribers' billing and account data. T-Mobile blamed a temporary glitch, saying there was no cyber attack or breach and that fewer than 100 customers were affected.
Now, T-Mobile shares right now down about 0.7%. And Uber Eats wants to make its services more accessible. Starting next year, those under federal nutrition and healthcare assistance programs will be able to use food stamps to pay for food and groceries from the app. Now, Amazon, Instacart already do it. Uber Eats is also working with managed Medicaid and Medicare Advantage plans to accept flexible spending account cards. Uber shares right now down about 4%. Those are the company stories we're following this hour. I'm Lisa Mateo. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, looking at these markets, certainly a bunch of red on the screen here, no doubt. S&P 500 off 1%, the NASDAQ off 1.2%, so still a little bit of fallout from that hawkish pause from the Federal Reserve yesterday, certainly impacting markets. Yields to your Treasury, it's off 4 basis points, 5.13%, but still that 5 handle gets your attention. The 10-year yield is 4.47%, up 7 basis points. WTI crude oil is steady here, just under $90 a barrel. It's been bouncing around within a $2 or $3 range. We keep an eye on that. Right now, let's head down to Washington, D.C. We're going to get world and national news with Amy Morris.
Thanks, Paul. A possible government shutdown is less than 10 days away, but a small victory for the House Speaker could mean a turning point in negotiations. We get details on that from Bloomberg's Amy Morris.
Speaker McCarthy won the support of a few hardliners last night as he worked to pass a short-term spending bill to head off a government shutdown. After the closed-door meeting that lasted more than 2 hours, McCarthy was still short the votes that he needs to pass a GOP spending measure, a measure that has no chance of passing the Senate, but he says they are closer. And if he does succeed, the measure would at least set parameters for a possible negotiation with the Senate on federal spending. In Washington, I'm Amy Morris, Bloomberg Radio.
Rupert Murdoch is stepping down as chairman of the boards of Fox and News Corp and will become chairman emeritus of each company. His son, Lachlan Murdoch, will become sole chairman of News Corp and continue as executive chair and CEO of Fox. We get more on the story from Bloomberg's Katie Greifeld.
In a statement Thursday morning, Lachlan Murdoch congratulated his father on, quote, a remarkable 70-year career. Of course, Rupert Murdoch, age 92, he built what is now a global media empire over the course of those decades.
Bloomberg's Katie Greifeld. Fox News and Murdoch did pay a price for the network embracing claims the 2020 election was stolen from Donald Trump. Fox recently agreed to pay Dominion Voting Systems nearly $788 million to settle a defamation suit related to those false election claims. The Biden administration is moving to grant temporary legal status to nearly 500,000 Venezuelan migrants already here in the U.S. It means they'll be able to work legally. It's also designed to ease the burden on cities taking in migrants, with border crossings returning to near-record levels. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Paul, Matt?
All right, Nancy Lyons, thank you so much. We appreciate it. Matt, if I wanted to buy an EV, say I just bought the new BMW X3 internal combustion engine. Yeah, very happy with the car. It's awesome. If I wanted to go EV, would I pay a premium for that?
You would definitely pay a premium. Okay. The vehicles are more expensive, especially.
So yet another reason not to do it.
Right. Well, there's that, the expense and the subpar charging infrastructure, at least in this country, that I think would be arguments against. The other thing is, not only do you pay a hefty premium, but you're likely to see much more depreciation, after you roll it off the lot. Whereas a lot of gas-powered cars are going to be worth now even more used than they are new. That doesn't seem to be the case with electric cars. But typically, with any new technology, there is a tipping point in terms of adoption. The first 5 to 10% of people that buy a new microwave or the new cell phone or whatever are the early adopters, the tech geeks. And then when you hit that tipping point, you generally see adoption just shoot up. And the tipping point phrase, of course, coined by Malcolm Gladwell. And the Washington Post writes a story about the fact that America has passed the EV tipping point, but so many buyers still want just gas cars. So it's not happening the way we saw it happen in Norway, where they hit 5% back in 2013, and now they're at 80%.
Wow!
In terms of all new vehicle sales are full EVs. But in the U.S., something seems to be holding us back. Right now, about 7% of new car sales are EVs, but we're waiting to get to that tipping point where all of a sudden we're off to the races. We still have not hit it.
Nice. The Norwegians leading the way in EVs. How cool is that? I just got the regular old gas, happy as a clam. We'll see how it plays out. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
We got a lot of green on the screen here, but the volume is light.
We constantly underestimate the strength of the U.S. consumer.
This is a market that's much more optimistic or bullish than maybe central bankers are.
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
The supply chain has still got dislocations globally and here in the U.S.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
Hey, Matt, we got some smart people coming up in this hour. I think we're going to have to raise our game a little bit. Jay Hatfield, CEO of Infrastructure Capital Management, he's going to join us. Woo Jin Ho, Senior Tech Analyst at Bloomberg Intelligence, to talk about that Cisco Splunk deal. We're going to get to David Welch, Detroit Bureau Chief for Bloomberg News, and talk about the auto strike, where we go from here. And then a special guest, we're going to check in with Laura Martin. She's a media analyst at Needham & Company. She's got some great market calls. We want to get her thoughts on Rupert Murdoch stepping down at News Corp. But first, speaking of smart people, let's go to Charlie Pella for Bloomberg Business.
Hi, thank you very much. And here's what's going on. Stocks lower across the board. The Dow, the S&P, NASDAQ, post-Fed all in the red, with the S&P down 48 right now at 43.54. That is a drop of 1.1%. Dow Jones Industrial Average down 187 points. That is a decline of 0.6%. The NASDAQ Composite Index now lower by 175 points, down 1.3%. 10-year yield 4.47%, with a 2-year 5.13%. Spot gold down $12.50 the ounce to $19.17, drop there of 0.6%. Bitcoin at 26,585. Bitcoin right now down by 1.9%. And West Texas Intermediate crude still below $90 a barrel at 89.87. It is up today by 0.2%. Reaction to the Fed decision certainly being digested today by markets. Again, Caterina Simonetti is Senior Portfolio Manager at Morgan Stanley, and she was a guest right here on Bloomberg Markets.
The Fed acted as expected. We expected that they're going to take, a breather from the rate hikes, but it is a very data-driven Fed. So, and data has been conflicting. Just let's take a look at this week, where unemployment numbers are down, and yet, it's very clear that there's some, economic pressures out there, specifically with rates, being so high, and, that is affecting consumer in one way or another.
And you can hear more of that conversation on the Take podcast. You can download it wherever you get your podcasts. Cisco Systems buying software company Splunk in a deal valued at about $28 billion, marking the computer networking equipment maker's biggest acquisition. Cisco shares down now by 4.2%. Splunk surging 21.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pell, thank you so much. We appreciate that. Matt Miller and Paul Sweeney live here in our Bloomberg Interactive Broker studio. We're streaming live as well on YouTube, so head over to youtube.com and search Bloomberg Radio. As Charlie was just reporting, we got lots of red on the screen here. Let's get to some individual names here. We welcome Carmen Reinecke. She's a Bloomberg Equities reporter for Bloomberg News. Carmen, what are you looking at today?
Yeah, so we are seeing a lot of red. One of the first names that we're looking at right now is Broadcom. It's down about 3%. It's headed for its biggest decline in about 2 weeks after a report that Alphabet is potentially considering dropping it as a supplier of the artificial intelligence chips as soon as 2027. Now, this is a big deal. Apparently, Google executives have been looking at this for a while over the price of Broadcom's chips. Obviously, AI has been such a huge theme this year, and at the same time, companies are also looking to cut costs and, be able to plow as much into developing, those systems as possible. So Broadcom down a little bit today on that news.
I think it's so fascinating because, Apple has wanted to do this as well, move away from paying a third party to make their chips and bringing the design in-house. Now, they've done very well in a lot of ways, but they've also had to back off, as we saw earlier this week. So, maybe Google is going to have to turn it around down the line as well. But I think really fascinating story. What about the Cisco Splunk takeover?
Yeah.
I mean, so much fun just to say.
Cisco Splunk.
And I don't know, what do they even really do? Are they making routers? They power the internet, whatever. But are we getting back towards M&A?
I mean, this is a big deal for Cisco. As you were saying, it's its largest acquisition. It represents, I think, about 10% of its market value. And also, that $28 billion that they're paying for Splunk is about a 31% premium to its closing price Wednesday. So shares for Splunk up 21%. That's the best since 2013, a really significant jump there for that company. And yeah, I mean, I think it's interesting to see, maybe M&A is back in the game again. This is, an AI move, right? Cisco trying to move forward on that and just, bolster itself to compete.
Well, on a down day, we got a stock that I like to follow, and Kriti Gupta has always provided great reporting on this. FedEx had some good numbers, I guess.
Yeah. So, it's up. It was up about 7%. Now it's down more, or it's up about 3.5%. But it raised the lower end of its fiscal adjusted earnings forecast, and that prompted quite a few Wall Street analysts to also raise their price targets on the stock. They were feeling good about the company's sort of turnaround, the cost reduction process that they've made, and they highlighted strong performance in its ground unit. They additionally said that the guidance for 2024 is still conservative. So I think taking into account, potential weakness in the economy, all of those things. So yeah, really a good report there from FedEx.
All right, I can't help but notice these IPOs that we've had. I mean, the good news is for the equity markets that the IPO market appears, somewhat open, and that's generally a bullish sign for the equity market. And they get the one-day pop, so everybody's kind of happy on day one here. But then those gains kind of fade. What's happening with our good friends at ARM?
Yeah, exactly. So this morning we saw that ARM fell below its IPO price, and that's for the first time, since it went, public. And exactly, so these IPOs have been really important. We've been watching ARM, Instacart, also Klaviyo yesterday. Investors are saying, they're excited for these companies to come to the market, but then, seeing these stocks decline shows that there maybe isn't as much optimism, or that there's maybe a little bit of pessimism, or thinking, okay, what is actually the appropriate valuation for these companies going forward? So yeah, that's what we saw from ARM today. It dropped below that IPO price and has trended down a little bit even from then throughout the day. So we'll see what happens. We're watching all of those.
Very good. Carmen Reinecke, equities reporter for Bloomberg News, joining us.
Now, is it Reinecke or Reinecke?
It's Reinecke. I know that's not the correct German pronunciation, but that's how my family says it.
I say, well, no.
How would you go?
Reinecke is. Reinecke. I mean, just because I have been in Germany for so long.
I know.
But I believe that your name should be pronounced the way you pronounce it. So
yeah, there we go.
Whatever your mom and dad say, that's correct.
That's benevolent of you. How is your German on a scale of 1 to 10?
My German is quite good. I'd say a 7.
Okay.
But the thing is, you can get conversationally fluent in German and still be far, far, far away from a 10. Okay. So I think it's easy to speak German in a way that everybody in a bar or a store would understand me, but it's difficult to speak it on a level where you could write a PhD doctorate, for example.
Okay.
But most Germans just copy their PhD doctorates anyway. So
ChatGPT nowadays. Yeah. All right, we had the Bank of England today hold interest rates steady. Still, there's concern there, and even more so in the continent.
Dude, so much. You had this, the Swiss central bank holding rates steady. We were expecting a raise there. You had the ECB.
So like skiing there this winter.
The ECB coming out and saying, well, Stornaris has said they've reached a peak in rates, and the next move is likely a cut. So, yeah,
let's
looks
break
like
it
a turning
down.
point.
Let's break it down. Jay Hatfield, he's the CEO, founder, and portfolio manager at Infrastructure Capital Advisors. Jay, what do you make of the economy over there in Europe, given what we're seeing from some of these central banks?
Thanks, Paul and Matt, for having me on. So as we discussed last time I was on, we're laser focused on Europe, and really what gave rise to that was this huge global bond meltdown. And so we started to study the global monetary base and noticed the ECB had shrunk it by 500 billion, and overall it's dropped by 3%. Which we think is a critical indicator of both inflation and growth. And then we started digging in, and I'd recommend you send your ECO default to the Eurozone if you have a terminal, which you should, but to track Europe, because it's more difficult from the US. And if you look at that data since I was on last, It's really horrific. It might melt your face, so be careful when you look at it. So both Germany, both retail sales and industrial dropped by 0.8%, which doesn't sound like that much, but that's for 1 month, just July. German GDP was, for the end of the second quarter, it was down 0.6 year over year. Italy, industrial production was down 0.7. So it looks like, particularly those two countries are in an absolute free fall. Now we'll know better, so that's why I would set your default when we get the August data to see if that validates July. But if this is happening in the U.S., it would be this would be all we're talking about.
Well, I mean, I'm looking at the ECFC, the economic forecast for the Eurozone. I don't see a recession out there in forecasts, but you think there is real risk?
Well, I think that's the ECB's forecast, and they have a little bit in common with our Fed in that they may not be the greatest forecasters ever created. So we just look at the real-time data, and like I said, if U.S. retail sales are down 0.8 and industrial is down 0.8, like we would say, oh my God, this is horrific. So I just would urge everybody to look at not just that data, but also the monetary base, and really look at how Italy responded to that hike. They were just excoriated, the ECB, for good reason, because they're going into a significant recession. So we think this is the key risk, but on the other hand, that could be very bullish for the U.S., because if Europe starts to go into a recession, then global rates should calm down. And that's really, I would argue, the key overhang on today's market is just we have a big global sell-off in bonds.
So if Europe is going through a recession, how are you positioning for that?
Well, we do, as you know, we're always cautious in August and September and early October. So we do think, I mean, we're sort of fortunate in that we have conservative dividend type stocks, defensive dividend stocks, preferred stocks, MLPs, and large cap dividends. And they've all outperformed the market during this time, which makes sense because they have lower betas and they're more defensive. And even within those portfolios, we've positioned them to be more defensive. For instance, with preferreds, we actually benefit in our main fund, PFFA, because we have fixed to floating 52%. So longer for higher is actually good for that, the income of that fund. So we think it's a good time to either be in those type of stocks or it's okay to be in cash. Although we're sticking for now to our 4,300 to 4,600 call on the S&P. If rates keep selling off, then we could easily get to 4,200. But we do think that this global growth story declining is going to get out there. Tomorrow is the European PMI, and we think that'll be weak, although it is really Germany and Italy and the UK that are the weakest, so there are other parts of Europe that are okay.
So we continue to see dollar strength right now. The Bloomberg Dollar Index, that's the way I track it, is at 1256. I saw it this morning right around 1260, which is punchy. I walked in, Paul commented, wow, gold's taking it on the chin, and that's part of that trade, obviously. Does that continue? Do we see euro parity? Do we see Japanese yen at 150? And then do we start to see intervention?
Well, if our scenario plays out, absolutely. So we think the U.S. is resilient because of the resilient auto sector and housing, which usually crack during recession. In fact, we have some new data. The average recession, you have a 13.4% decline in investment, but consumption is flat. Normally grows at 3.3, so it comes down. But it's really the driver of a recession is investment. So if we're right about the U.S. that we're resilient and Europe is plunging, then that trend should continue. And that is bearish for commodities. And one reason why we think oil will cool down, because it's really not just rallied, it's rallied plus another 5% because the dollar is appreciated. So that's a headwind and would validate our $75 to $95 range on oil, which would be bullish for inflation. So, but we do think the dollar will continue if we're correct about the U.S. economy dramatically outperforming China and Europe.
Are we going to, if we have a U.S. government shutdown, what's your view on that? And is there any way to
and a prolonged UAW strike? I mean, both of those things.
Well, we call
inflationary, right?
Yeah, we call refer to the government shutdown as the government vacation, because if you really look at it, they furlough the employees, but they still pay them.
Yeah.
So it's actually a good rationale for Fitch to downgrade the U.S. because we have the most ridiculous budget process ever, where you, quote, shut down the government, but you don't save any money. So, and if you look, the market actually trades up. Now, I'm not sure it's going to trade up this time of year, but so we think that's irrelevant, good for the media to report on, but not critical for investment. The UAW strike, I think, is critical. Full disclosure, my daughter is a member of the UAW, so you could take this with a grain of salt. She's in the Berkeley division of the UAW, so she's covered by them. But we do think that autos, we don't really believe in persistent inflation, except for auto services. If you look at auto services, they are ridiculously high, like 19% on insurance, 15% on repair. Hasn't even started coming down. So if we have the strike, that's just going to get extended out, and that may give the Fed more reason to not cut rates or pause. So I would focus more on that. I don't think it's a big issue for the overall economy, because to some degree, if you have less inventories on these sort of wildcat strikes, then you have less chance of massive layoffs because we have a shortage.
Let's rip up the script for a second.
Oh. There you go.
I mean, she's in the Berkeley unit of the UAW. So that's the United Auto Workers Union. And I mean, having seen Oppenheimer recently, I know that these places of higher education get very involved with unions. Mm-hmm. She's clearly not putting cars together at Berkeley. What does she do?
I'm very proud of her, and I think it's a good backup career to move to Detroit and assemble cars. But the teachers, the TAs are members of the UAW, which I find fascinating.
Yeah,
and they
me
already
too.
had a successful strike. So I indirectly benefited from that because they had a pretty substantial pay raise. I don't think they're going to do any wildcat strikes, but they're definitely getting emails and they're supporting their brethren in Detroit.
I had no idea.
Yeah.
Well, you better unionize those TAs, because sometimes the professors.
Yeah, but in the United Auto Workers, surely there's a teachers union.
Yeah, exactly. But the UAW is good on these strikes things. I mean, they know what they're doing.
Well, the last couple of presidents of the UAW are in prison.
Yes.
So they weren't very good at
They
these
weren't
strike
very good
things.
at that, right? All right, Jay, thanks so much for joining us. Jay Hatfield, CEO, founder, and portfolio manager, Infrastructure Capital Management. Looking at these markets, again, kind of taking a breather here, no question about it. The S&P 500 off 1.1%, and the NASDAQ off 1.3%. So definitely some concern out there. And on the yields, 2 years off 3%, 5.15% on your 2-year Treasury yield. That seems pretty attractive relative to buying a Scat Pack, Dodge Challenger, whatever it is.
I'm saving so much money, though, by paying cash.
You are. You're not paying that interest, right?
Not paying this. I think right now 7.99% is
Nice.
typical offer.
Right.
And yeah.
We'll have more coming up. This is Bloomberg. Let's get some company news right now with Ms. Mateo.
Thanks, Paul. Pharmacies are facing a shortage of Moderna and Pfizer COVID shots. Bloomberg's Kimberly Adams has that report.
It's a bumpy rollout for the first week of the new booster shots. People are being turned away from pharmacies that don't have enough shots and finding their appointments canceled. A spokesperson for Rite Aid said the manufacturers are experiencing delays in shipping. CVS Health and Walgreens also said some stores have yet to receive vaccines.
All right, so let's check in with a few of these pharmacies. Rite Aid right now down about 7%. We have CVS Health down up about 1%, and Walgreens down about 0.5%. Amazon is doing away with plans to place fees on merchants that don't use its shipping services. The 2% fee, it was supposed to go into effect on October 1st, but documents reviewed by Bloomberg show it's been scrapped. Now, the change comes as the U.S. government is set to file an antitrust lawsuit against the company. Bloomberg's Gina Cervetti has the latest on that.
3 Amazon executives have been added as defendants in a Federal Trade Commission lawsuit, accusing the online retail giant of making it hard for customers to cancel Prime subscriptions. The 3 declined to comment, but an Amazon spokesman said adding them to the suit was unwarranted, and that the company has always made it clear and simple for customers to sign up for and cancel Prime.
And shares of Amazon right now down about 3.5%. Darden Restaurant says wealthy diners are trading down to cheaper wine at its higher-end locations like Capitol Grill and Ruth's Chris Steakhouse. CEO Rick Cardenas said he's seeing more softness among households with incomes above $125,000 compared to last year. Now, the restaurant chain posted a first quarter profit and sales beat. Darden Restaurants right now are lower. I'm Lisa Mateo.
headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:21 on Wall Street. We do check markets all day long at Bloomberg. The Dow, the S&P, NASDAQ, all declining. We are very close to session lows. Stocks are dropping after a labor market reading this morning reinforced the case for the Fed's higher for longer stance. 10-year yield now at 4.47%, with a 2-year that's yielding 5.14%. The S&P is down 48 points, a drop there of 1.1%. We've got the Dow Jones Industrial Average down 197 points, a decline of 0.5%. NASDAQ down 174, a drop now of 1.3%. Spot gold down $12.50 the ounce to $19.17, down 0.6%. And West Texas Intermediate crude now at $90.25 a barrel, up 0.7%. Broadcom is on track for its biggest decline in 3 weeks, following a report that Alphabet's Google is considering dropping the company as a supplier of artificial intelligence chips as soon as 2027. Broadcom down 1.7%, Alphabet, parent of Google, down 2.2%. Recapping, 10-year yield 4.47%, the S&P down 48, drop there of 1.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie Pello, thank you so much. We appreciate it. Matt Miller and Paul Sweeney here in the Bloomberg Interactive Brokers studio had a nice M&A trade in the technology space today. Cisco intends to acquire Splunk for $157 per share in cash, representing approximately $28 billion in equity value. Let's get a sense of what this deal really means in the tech space. We welcome Woo Jin Ho, Senior Hardware Analyst for Bloomberg Intelligence. All right, Wooj, in this space here, first of all, just tell us what Splunk is. What do they do?
Sure. Splunk is a company that does infrastructure software. They provide observability and help monitor the hardware and the networking components that's within a corporate IT. As more things move to the cloud, companies are trying to better understand how data traffic is moving inside the cloud. So Splunk plays a very critical role.
That makes sense then. Yeah. So they're like going into the cave, into the dark recesses of the internet and checking things out to make sure all the gear is good, right?
Well, let's think of it this way. So Cisco, if we use the cave analogy, Cisco is the pipes in that cave, and then Splunk is the scope that goes through the pipes.
Interesting. All right, so
Splunk is, I guess, the best name they could come up with
for that.
Yeah, because if you think about scopes looking in pipes, that's
spelunking, right? Yeah. Exactly.
Yeah.
All right. So, what's Cisco's strategy here? What's kind of the takeaway from you in the street?
Yeah. So it's fairly straightforward, right? If long followers of Cisco know this, they've been trying to move to this hardware-only model to a perpetual software model. Everyone loves recurring revenue, and for Cisco, it's really tough road for given that they used to be a book and ship type of company from a revenue generation standpoint. They've been acquiring software companies, and they've also been developing their own software for sale. And what we've seen over the past couple of years through M&A, that software is going to be about 25% of total sales and about 45% of product sales. And Splunk is going to help them augment that software component as well as that recurring revenue component.
So Cisco, I mean, is a giant company, right? Splunk is, the deal is, what, $25 billion or so? And Cisco is a $216 billion company. Are they very acquisitive? Is this how they build rather than organic growth? And do you think they have any more coming up?
Yeah, so great question. I mean, Cisco, among all the companies that I cover, is probably one of the more acquisitive companies that I cover. However, they don't typically do deals of this size. They go for smaller tuck-in technology deals and hope to grow it from the inside. $28 billion is the largest deal that they've ever done, and it's going to drain all of that excess cash that they have, but. Given that they generate about $15 billion in cash flow annually, they really should be able to do more deals if they want to. But I think large deals going forward are going to be off the table for the time being.
So how about from a valuation perspective? I'm looking at Cisco stock off a little bit here today. What's the valuation pencil out to?
Yeah, Splunk, from a valuation perspective, it's about 6 times forward sales. If we talk about the fast-growing software guys, they typically run anywhere between 8 to 12 times. Some of the slower growth, where Splunk can fall into, are in the 5 to 6 times. So this, from a valuation standpoint, it's right. It's a good valuation, but it is on. Cisco tends to buy slower, more mature companies. So this is high on the Cisco perspective, but right size from a software perspective.
All right, so I'm looking at the comp function, Matt Miller's favorite function, COMP for Cisco, and I see, over the last 5 years, this has had a compounded annual return of about 5%, has Cisco, versus the S&P 500 about 10, and then the information technology S&P 500 information technology sector index about 18 or 19 times. So Cisco really underperforming from a stock price perspective. What's the story behind that?
Yeah, if you look at it from a past couple of years, I think people were very concerned about sustained order activity because of the macro backdrop. Look, if you look at the revenue growth, it shows 10 to 12% for fiscal 2023. But if you look at fiscal 24, we're seeing that revenue growth fall off to about 1% next year. That's actually a good thing. I think heading into the print last quarter, people were thinking that sales would decline because of the drop-off in orders. But the ability to deliver revenue growth for the year shows that it's not going to drop off that much. Now that being said, that's one of the reasons why they're going after companies with more recurring revenue like Splunk. And over the long term, it's going to help with the business model in my mind.
Are these companies, destined to be changed by AI? I mean, are they already being? Is there already dramatic upheaval due to the AI kind of stock market revolution? Is it hitting the ground in corporate culture?
Yeah, well, for let's just say Cisco and the networking guys of that ilk, right? They've already been using AI and automation for quite some time now. There are other companies that have utilized it a lot better, but as more of the hardware and software become disaggregated, you can actually automate a lot of functions. For example, let me give you, whenever our PCs go down, the network would be able to know automatically which PC it's down and how to fix it right away, right? And that could save a lot of manpower hours. There's a lot of coding that's involved. So the whole space is destined to go AI. The question is that what does that mean from a network management operation standpoint? And at the end of the day, it's all about saving costs on AI, right?
Yeah. Out of your hardware coverage, your networking coverage, what are the names you're most excited about when you talk to investors? Where's kind of the most interest?
Well, the most interest is right now is Dell and HPE, quite frankly, and the other name is Arista. So those are the three names that most people are interested on. Arista is mainly on cloud AI data center infrastructure, and that's where they see phenomenal growth. But the other area is the revival of Dell and how AI servers can potentially drive a faster revenue growth profile versus the 3 to 4% that they usually have, to maybe another point or two in growth and better margins going forward.
So I guess the question is, within the tech stack, what's the big theme that's kind of driving your space these days?
Yeah, look, it's like everybody else in tech. It's AI, right? And I think I mentioned it to you once before on other shows. AI has turned into a drinking game on conference calls. So no, it really is. If you don't have an AI growth story as part of the long-term thesis, you're really not going to see the valuation expand.
All right, Wooj, thanks so much for joining us. Appreciate getting a few minutes of your time. Woo Jin Ho, Senior Hardware Analyst, Bloomberg Intelligence, via Zoom from the Bloomberg Intelligence global HQ in Princeton, New Jersey. I saw John Butler in the background, Geetha Ranganathan in the background there. So good stuff.
That's your crew.
That's my crew. Yeah, absolutely. I used to sit with those folks back in the day. So nice to see some M&A out there. We see some IPOs over the last several weeks. Got some M&A. Is this
starting
kind
to
of
pick up? Still feels kind of tepid, but yeah, I hear you.
Yeah, I'm starting to pick up just a little bit. But again, there are a lot of smart people like Jay Hatfield we just talked to. They can paint some pretty dire economic outlooks if you want.
For sure. He's focused on on Europe. That's where his bearish call is. But you hear, I've been quoting the Torsten stock list for a couple days now. There's a lot of headwinds here.
Yep.
And when you tie in also the UAW strikes and the government shutdown, it can get dramatic. Now, I love how Jay pointed out that only the media gets apoplectic about the government shutdown these days.
Right.
We freak out about it, hoping for clicks, right? But in the rest of the world, no one really cares.
Yeah, I guess. It's just, and they kind of just look at us and say, what else is new? You guys always do that. Yeah. And at the end of the day, our good friends down in Washington, D.C. tend to find a way to move forward, and that seems to be the expectation here. S&P 500 off 1.1%. Right now, let's head down to Washington, D.C. We'll get world and national news, and we'll do that with Nancy Lyons.
Thanks, Paul. The exchange of gunfire is intensifying in Ukraine as Russian troops push toward Bakhmut. And Russia has launched the largest missile barrage since early spring on Ukraine's power grid. The grid operator says the attack left parts of 5 regions without electricity. This ramped-up fighting comes as President Biden hosts Ukrainian President Volodymyr Zelensky at the White House. Biden is expected to announce a new military aid package that's said to be worth hundreds of millions of dollars and is aimed at helping Ukraine recapture territory from invading Russian forces. It's also expected to help strengthen Ukraine's air defenses ahead of anticipated Russian airstrikes over the winter. House Republicans, though, are pushing back on any increased aid, with many also requesting better accountability of the dollars already spent. The United Auto Workers Union is weighing an expansion of its strikes against the big 3 automakers. Union President Shawn Fain has said the targeted strikes could hit more plants by noon tomorrow if the companies do not sweeten their deals. Yolanda Downs is a union member and says she's ready to walk out if necessary.
I want the levels to be balanced. I want everyone to make a good living and a fair living.
Stellantis has joined Ford and GM in furloughing some employees because of the ripple effects of the strikes. Analysts expect plants that assemble the popular F-Series trucks, Silverado, and Ram trucks will be the next targets in that walkout. A new study suggests a link between diet soda and autism. Researchers at the University of Texas Health Science Center found pregnant moms who drank 1 can a day were more likely to give birth to a child who's on the spectrum. The study looked specifically at the sweetener aspartame. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:40 on Wall Street. We do check markets all day long at Bloomberg. We have got the Dow, the S&P, and NASDAQ all declining. In fact, we are very close to session lows once again, with the S&P down 49 now at 43.52, a drop of 1.1%. The Dow is lower by 204 points, down 0.6%, and NASDAQ is down 177 points, a drop there of 1.3%. 10-year yield 4.47%, with a 2-year 5.14%. Gold down $12 the ounce to $19.18, drop of 0.6%. West Texas Intermediate crude back above $90 a barrel, $90.19 right now, up by about 0.6%. Well, what about the interest rate backdrop? Chris Grisanti is Chief Equity Strategist at MAI Capital Management, and he was a guest earlier today on Bloomberg Surveillance.
We've had 5 interest rate cycles between Paul Volcker and now. 4 of the 5 ended in a hard landing. So to think that the biggest and fastest won't, you're really betting on, against history. Stranger things have happened, but you usually don't make money by betting on strange things happening.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Rupert Murdoch, the 92-year-old media magnate who created Fox News, is stepping down as leader of both Fox's parent company and his news media holdings. Right now, we are looking at shares of News Corp higher by 1.7% and Fox Corp up by 2.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pell, thank you so much. We appreciate it. Matt Miller, Paul Sweeney live in the Bloomberg Interactive Broker Studio, streaming live on YouTube.com as well. UAW, the auto workers, they're on strike. I think there's going to be escalation of that strike maybe sometime tomorrow. Doesn't really feel like it when you just kind of hear the rhetoric here that they're any closer here. I'm not really sure what's happening. David Welch, he knows what's going on. He's a Detroit bureau chief for Bloomberg News, following this very closely. David, what is the latest from Detroit?
Well, I think we'll probably have more plans go out tomorrow. It's not set in stone, of course, but the rhetoric from the union people, the negotiators who I spoke to on the picket line at Stellantis North American headquarters yesterday, was that the latest offer made really didn't change the economics, didn't do much in terms of pay, didn't have enough in terms of job security, product placed at plants, so workers will have something to build for years to come, which is something the union is very concerned with at Stellantis. It looks like we can go out more. Now, look, we may have a bunch of offers flying in over the next 24 hours, actually less than that at this point, about 18 hours to avoid a strike, a further strike, more plans. But I don't know, I get the sense here that the union isn't done making their point, that they haven't been heard, they haven't been taken care of. So I think we'll see more plans go down.
It does seem like Stellantis is trying to quiet quit Dodge and Chrysler. They don't have any products lined up for next year. They're going to stop making the Challenger and the Charger, and so they only have the Durango for Dodge, and Chrysler only has the Pacifica, as far as I can tell. Is that what they're doing? Are they just quietly snubbing these brands out?
Man, they've been quietly quitting a lot of the traditional old Chrysler brands for a long time.
True.
I mean, think back 10, 15 years when they had, almost a mirror image product line between Chrysler and Dodge, and also they even had some of the SUVs similar to what Jeep has. So will they stick around? They did show an electric sports car. I think that would be sold by Dodge. Does that come back? I mean, in any case, the Dodge and Chrysler brands will be, a shadow of what they once were. I think as long as they keep minivan sales going, and they're a big player in that, I think they would have to keep the Chrysler brand, but they can run it as a sole brand too. I mean, Ram is no longer a Dodge, right? It's a Ram pickup. No one calls it a Dodge Ram anymore. It doesn't even say Dodge on it. It's sold by those dealers. But, that just shows you what they could do with branding that would get rid of the overall brand. And if you think about Stellantis, I mean, you have all the names. They already had brand soup when it was just Fiat Chrysler. You had Fiat, Alfa Romeo, Lancia, and then you had all these Chrysler and Jeep brands here. Now you've got, in addition, Peugeot, Citroën, and DS, which is their luxury brand. So that's a lot of brands to manage, even for a company that size. So, yeah, I could see these potentially going away. Doesn't mean the plants have to go away. They could build products in those plants. It just might be called something else.
Well, it does show also that the workers are moving beyond the initial kind of economic demands that they had to some extent, right? They're no longer just focused on pay increases, getting a defined benefit pensions, and the 4-day work week, which I guess they're willing to jettison some of those, but they do want some guarantees that they're going to be able to build cars next year and the year after.
Look, I thought that was the most interesting thing I came away with from the picket line yesterday is there were several negotiators there from the union Stellantis bargaining team. And I said, well, what's the holdup here? And he said, job security, product. We want product. That was the first thing out of one of the negotiators' mouths. He said product. And product means job security to the union guys. And he didn't say pay. And, Stellantis is at 19.5%. Ford, GM are at 20% over 4 years with their offer. And, if they're far apart on cost of living allowances on top of the pay increases, they can kind of figure out what the number is. I mean, that's a matter of going back and forth. But the fact that they didn't say it was pay anymore, and they didn't talk about poverty wages and all the sorts of things that they have been talking about, that tells me that maybe they've either settled or they're pretty close on the numeric, the dollar and cents issues here. And now it is potentially down to job security. Now, the problem with that is over the weekend, Mark Stewart of Stellantis said that the company wants to maintain the right and the flexibility to pick what plants make what. And that is a very different thing than guaranteeing products in a plant over the next 4 years. So we'll see what happens over the next day, really. And then if there is further strike, I think there will be, it'll be over the next probably week. So we see what happens with these plants. So,
okay, is there any growing consensus, David, about how long this could last?
Everyone's favorite. It's everyone's favorite parlor game. Most bettors, if there was a Vegas betting room on this, so that Sean Fain, the union president, would have another round at least of plant shutdowns. So let's say he had a plant each or maybe more at each company tomorrow. I'd say he'd give them probably another week to see progress. And some have thought we'd see 3 rounds of this. So there'd be another one, yet a third round of plant walkouts. I think it'll be 2 or 3. So that could have us out, for a total of another week and a half, 2 weeks or longer. But, not many workers haven't had to go without so far. So the union does have strike pay, firepower to spend. And the workers they may be tired of hearing about this, but they're not tired in the sense that they can't pay their bills because they're all working.
What have we heard from the dealers?
The dealers are short on product for the obviously specific products that are being shut down. I think in our reporting, Chevy in particular is short on Colorado pickups, and you can see why. Like that pickup's a pretty good deal. It's quite capable for what you pay for it if you don't need a full-size Silverado. And I think they were fairly lean on inventory going into the strike for that vehicle. Jeep sales overall had kind of been slumping before the strike, so taking down the Wrangler plant, may not have hurt them all that much. Ranger and Bronco are popular vehicles, though, and I know they're pretty tight on Bronco right now. So right now, that's what dealers are unhappy about, and I think they're worried that the union will step it up to the bigger vehicles, F-150, Silverado, Ram pickups. And they're also very worried that they would hit a parts plant, and that's real aggravation right there. You hit a plant that makes replacement parts, and people are waiting, weeks to get their car fixed. You've got frustrated dealers, angry customers, and a headache for the customer service executives at the company.
That is no bueno.
No bueno. All right, David. Thanks for checking in with us. David Welch, he's the Detroit bureau chief for Bloomberg News, giving us the latest on this auto worker strike.
I'm out of here.
Where are you going?
I'm going to broadcast live television internationally, globally.
Exactly. All right. Good for you, Matt. Appreciate giving us the extra 20 minutes here today. Big news in the world of media. I mean, really big news. When you think about media moguls, there's a bunch of them. Sumner Redstone, John Malone. I mean, you think about Ted Turner, but certainly at the absolute top of that list, you got to put Rupert Murdoch in. It was announced by the company today that he was stepping down from his role as chairman at Fox and News Corporation. We want to get some perspective on that, and nobody better than Laura Martin. She's a senior media analyst at Needham. She's covered this industry, this company, and this man for decades. So, Laura, thanks for joining us here. I guess it's not unexpected. I mean, given that he's 92 years of age, but still a big day in the world of media and for News Corp.
I agree with you 100%. I think you and I both, Paul, thought that Sumner Redstone would outlive this guy, but it just wasn't true in the end.
You're right.
It was like Paramount versus Fox. I guess Fox won. But yeah, I think Wall Street's been expecting this guy to step down for the last decade, and here he is finally stepping down at 92. It's unclear how heavy a hand he's had in the business of the company for the last 4 years. So I don't know how much will actually change with him stepping down, but certainly the last of an era. I think John Malone's the only one left that's sort of still on the board of Warner Brothers of that old guard. I don't know if that's a positive or a negative, but it's certainly about time for changing of the guard.
Yeah, absolutely. And, Rupert Murdoch and the original News Corporation now split into Fox and others certainly had...
News has been criticized for that. I wouldn't be surprised to see the son, who's younger, bring it back more towards news and less about entertainment.
Laura, I know you were, at the Walt Disney had an investor day a couple days earlier this week here. What were your takeaways there? Because one could argue Bob Iger, boy, this is as tough as it's ever been to run a media company.
I agree. I think the skill that people underestimate that Bob Iger has, like he said twice, I'm going to quiet the noise. I think that is Bob Iger's core value skill, which is he put back the organization so content is first. He's going to quiet the noise with DeSantis. He's going to quiet the noise with regulators and all the local communities. He has 170,000 park employees. He's going to quiet the noise, and he says, we're going back. Our job is to entertain, not to be issues focused. So that's an easier task, and it's safer for the Walt Disney Company. So I think he's going to go back and create sort of this cone of silence that lets creative people do creative things. And I think the reason that the Disney content has been so poorly received at box office is because of all the noise. And he's going to go back and say, look, our job is to entertain. Let's keep our eye on the ball and let's make great stories that have nothing to do with the issues surrounding us in the real world. And I think that's good for content creation.
How do you think, was there any, I guess, to what extent did they frame the whole move towards streaming? I know this was an investor event focused on the theme parks, but obviously the big issue for Disney and for all the media companies is how they're going to effectively evolve into streamers. What's the current thinking at Disney?
So, Paul, it was so interesting. I mean, and that was if you've been in the audience with me, that was one of the big silences. They did not mention streaming. They did have the ESPN CEO on stage, and that has to do with streaming because he's eventually going to launch a core ESPN app, but totally unclear on timing. The things he was saying he wants to integrate into this app sound to me like they're going to take 3 years to execute, which just doesn't even mean it's in an investment time frame. So really a lot of silence around the strikes, around the streaming business, around the linear TV economics, which was super top of mind because of the charter deal resolution. Really, real silences on that. The main focus was they're going to double CapEx to $60 billion over the next 10 years, and they're going to sink it into parks and cruise ships and Disney vacation villages, and they're going to try some management contracts out here in Palm Springs near me. So that was really, I would say, 3 hours of the total 5-hour day, and then there was an hour of Q&A and an hour of ESPN, the core app launch and what it's going to entail. But they didn't talk pricing and they didn't talk timing. And that was the only time they touched streaming at all.
Interesting. What's the feeling that, I get your opinion about this CapEx and the focus on the parks and the cruises? Is that a good strategy in your opinion?
I think the most interesting thing to me, Paul, I think you were in the room when 5 years ago, I said this big, and in 2018, when they said big shift to streaming and the stock ran way up, and it was like streaming is our growth driver. And I felt exactly like that moment again, but with theme parks. And so theme parks, as you know, Paul, have much more capital intensity. So if this is going to be their growth driver, the valuation multiple of Disney should come down compared to when we thought growth was going to be driven by streaming, which is much more capital light in theory.
Yep. And I know you focus a lot on return on invested capital, but it seems like Disney gets the best out of that, theme park CapEx relative to anybody else out there.
They do. Their returns are absolutely fabulous compared to other people, but compared to the virtual world, real life assets, they have regulatory risk, they have COVID disease risk, they have shutdown risk. You've got parks in Shanghai and Hong Kong. So a decent question is, look, the Chinese government is using Apple as a pawn because U.S. is trying to kick out TikTok. They're like, well, we're not going to let employees of the government use Apple phones. At what point do they suddenly use Disney in Shanghai Disney as a pawn too, right? So there's risk in real assets that don't exist in the global virtual world, because if they kick you out, it's okay. You can go make money in France or Argentina.
Right. All right, Laura, thank you so much for joining us. The absolute go-to voice when we want to talk about the big media stories of the day, and Rupert Murdoch stepping down as chairman at News Corporation and Fox, certainly one of those. Laura Martin, she is a senior media analyst at Needham & Company. She's based out in L.A., so certainly feet on the ground. Coming up, Sound On with Joe Matthew from Washington, D.C. That starts right now.
our nation's capital. This is Bloomberg Sound On.
The Biden administration says we're making good on a long-held promise. Ballooning budget deficits in Washington. We're in a bizarro political world here.
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
Most people, including most Republicans in Congress, understand that we need to get aid to Ukraine.
Who's going to take us in a rational way into the future and lead our country?
This has really become kind of the new frontier in American politics, is this battle between red states and blue cities.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Kevin McCarthy goes with the right flank, but he just lost Donald Trump. Welcome to the fastest show in politics as the speaker pursues a stopgap plan to avoid a government shutdown that has no chance of passing the Senate in its current form. Trump, meantime, urging Republicans to vote against it. We're only 9 days from a shutdown. We'll get the latest from Jack Fitzpatrick at Bloomberg Government with insights from Mark Goldwine at the Committee for a Responsible Federal Budget. He'll be here in just a moment. President Zelensky is in town, meantime, meeting today with lawmakers and the president about funding the war in Ukraine. And the Senate just confirmed a new chair of the Joint Chiefs despite the Tuberville blockade. We'll have analysis on all these stories from our panel. John Sidolides is here from Trilogy Advisors, along with Lincoln Mitchell from the School of International and Public Affairs at Columbia University. It's all ahead. After a look at Wall Street, let's get up to date on the markets right now. Charlie Pellet in New York. Hey, Charlie.
Thank you very much, Joe Matthew. Indeed, the Dow, the S&P, and NASDAQ all in retreat. In fact, we're at the lows of the day right now on the S&P. A 50-point drop to 4352, down 1.1%. We've got NASDAQ down 170, a decline of 1.3%. The Dow down 235, now down 0.7%. 10-year yield, 4.46%. The 2-year, 5.13%. Gold down $10.50 the ounce to $19.19, a drop there of 0.6%. And West Texas Intermediate crude up 0.3%, $89.86 a barrel on WTI. Applications for U.S. unemployment benefits fell to the lowest level since January last week, indicating a healthy labor market that continues to support the U.S. economy. Zach Griffiths is senior strategist at Credit Sites.
So I think if you're seeing the labor market starting to show signs of tightening again, and I think overall we've seen better balance in the labor market recently outside of this jobless claims print, that would be more supportive of a balanced approach. But I think the pop today is really the 1-2 punch of the Fed yesterday, jobless claims this morning, and the Bank of England, even though they kept the policy rate on hold, they did up their pace of quantitative tightening. So a lot of hawkish developments to consider.
You can hear more of that conversation on the Bloomberg Surveillance podcast. You can download it wherever you get your podcasts. U.S. mortgage rates up for a second week in a row. The average for a 30-year fixed loan now at 7.19%. Home builders are trading mixed right now. KB Home, after earnings, down 3%. Lennar, down 2.6%. Toll Brothers, down 3.3%. Recapping, S&P down 48, down 1.1%. 10-year yield, 4.46%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you. Welcome to the Thursday edition of Bloomberg Sound On. I'm Joe Matthew in Washington. Thanks for joining us on the radio and on YouTube, where you can always find us. Search Bloomberg Global News. You know, we've got the cameras lit up here in the radio studio in Washington. It's already been a day, and this is getting to be a recurring theme here as Republicans bring a procedural vote to the floor of the House to engage debate, not actually even pass a bill on defense spending, and this didn't end the way the leader hoped.
On this vote, the yeas are 212, the nays are 216. The resolution is not adopted.
Yeah, the House now for a third time. You hear a little groan there, failing to start debate on this Pentagon spending bill, $826 billion, which really is making everyone feel like a shutdown may be more likely or imminent here. It's going to be a working weekend, at least on Saturday, before everyone goes home for the Jewish holiday. And even if a CR gets passed in the House, it doesn't stand a chance in the Senate. That's where changes will happen and things get very complicated. And then there's, of course, we've got the holdouts here, the rogues in the Republican conference, namely Matt Gaetz, who says no continuing resolution, especially if it requires Democrats.
If Speaker McCarthy relies on Democrats to pass a continuing resolution, I would call the Capitol moving truck to his office pretty soon, because my expectation would be he'd be out of the Speaker's office quite promptly.
He always has a way. Speaking with reporters outside of the House, Marjorie Taylor Greene weighing in a conversation earlier with Bloomberg. There were a bunch of mics around, but speaking with Bloomberg about the continuing resolution. Again, that's the stopgap bill that would keep the government from closing. DOA, she says.
As far as the CR, we had an over 2-hour meeting, and what I heard in the meeting is there were 7 or 8 people that were a no on it, and so to me it's dead in the water unless they change something. Dead in the water. And then, of course, there's Donald Trump, who got to Truth Social last evening here. I need to pull it up so I can do this properly. Truth Social to talk about his take on this. Now, remember, Kevin McCarthy has been an ally. Some even arguing that this is why he brought up the impeachment inquiry, was to help Donald Trump, who writes, a very important deadline is approaching at the end of the month. Republicans in Congress, he says, can and must defund all aspects of crooked Joe Biden's weaponized government. I'll skip down a little bit here. Use the power of the purse and defend the country. He says this is also the last chance to defund these political prosecutions against me and other patriots. So we've got a problem here. And that's where Jack Fitzpatrick comes in to help us solve problems. He doesn't make them. He's Bloomberg Government's Congress reporter, and he's in the House of Representatives right now. Jack, it's great to have you. We just went through the latest here. This procedural vote on military spending has failed now for a third time in the House. I know they're working through Saturday. Is there a chance that a continuing resolution can pass?
At this point, they don't have the votes for a continuing resolution. Really, the defense procedural vote failing is a sign that they don't have support to move ahead on anything at all. The defense appropriations bill usually would not be the problem, and it really is not the problem now. It's just that there's a broad sense of chaos in the House regarding anything on the topic of funding the government. So they're still having conversations. Leadership is negotiating with the conservatives on possibly more spending cuts, the immigration provisions, setting up a debt commission. The talks are still happening, but they clearly do not have enough support to do something to avert a shutdown in the House.
You've got a big guest on Capitol Hill today. I was actually up there earlier, Jack, and I got stuck in all the street closures as President Zelensky's motorcade went up to Capitol Hill. He's already met with Chuck Schumer. He's actually been was invited to speak to all the senators, a little bit different in the House. Here's what Schumer said coming out of their meeting.
There was a single sentence that summed it all up, and I'm quoting him verbatim. Mr. Zelensky said, if we don't get the aid, we will lose the war. That's a quote from him.
Was there pushback from Republicans in that room?
No answers to the questions. Jack, I won't ask you to get into the entire debate over Ukraine funding. But with regard to this exercise now, are lawmakers giving up the ghost on this going into a continuing resolution? Where would the money come from?
Well, this is a big issue regarding how they're going to fund the government, because for one, there was supposed to be, at least if you ask the White House, there was supposed to be a big pot of money coming for additional aid for Ukraine. Now, some of this can come from the Department of Defense because they have drawdown authority. Some of this was actually supposed to backfill that for the Department of Defense, but they requested about $24 billion in funds for Ukraine. Regular funding bills, what the government usually does, has small pots of money. I think there's one for about $300 million for Ukraine, but not very much in the context of this war to defend themselves against Russia. If they do not have a deal to tack on to a stopgap or to something, a bill with a significant amount of aid to Ukraine, that would be considered a significant failure by Ukraine, by the many Republicans and Democrats who support that. So just getting a stopgap measure, just avoiding a shutdown would not really do it with regard to U.S. aid to Ukraine. There has to be a negotiated significant dollar figure that a lot of people in this building are looking for.
Interesting to hear Michael McCall today say that we'll just write it into the appropriations bill if we have to. Clearly, this is yet to be figured out. Zelensky will be going to the White House, and this will continue on through the day, going to the Pentagon for the first time as well. Jack, it's great to have you. I know how busy you are, and we appreciate it. Jack Fitzpatrick at Bloomberg Government joining us from Capitol Hill at a critical time here. What did I say, 9 days, and we're done, and we can't figure out a stopgap, never mind the whole thing. That's why we wanted to talk as well with Mark Goldwine, Senior Vice President, Senior Policy Director at the Committee for a Responsible Federal Budget. Mark, it's great to see you. Welcome back. We have a lot that we could get into here. I'd be curious your thoughts on some of the options. But is the committee kind of like everyone else in Washington and expecting a shutdown at this point?
We've been actually doing some surveys of experts, and I'll say the odds of the shutdown are going way up.
Way up.
You always assume they're going to do something at the last minute to avoid it until they don't. And it's hard to see how we get from here to there.
If you're following this, you're playing along in your home game, they think they can pass a CR in the House, the Republican-led House. Then it goes to the Senate. They attach Ukraine funding. They attach disaster relief. It comes back to the House. That's where the problem lies, right?
Well, the House can't even pass a CR yet.
Well,
they can't even get their own CR.
I'm talking best case scenario.
Best case scenario.
Yeah.
And the House and Senate, not only did they disagree on things like Ukraine and disaster, they disagree on the top line. Normally, a continuing resolution just takes last year's numbers and extends them with small modifications. But the House wants to go significantly below last year's numbers, and the Senate in some ways wants to go above. So they don't even have fundamental agreement on the number, let alone the things that are attached to it.
And it's happening against the backdrop of this, test of the Speaker's authority. Does that feel real to you, or is Matt Gaetz just, having fun entertaining his followers?
Well, you have to understand, the rules they set up for the Speaker puts him in constant state of vulnerability. So in the past, the majority of the majority was kind of the rule. If the Republican Speaker could get most Republicans on a bill, he'd put it forward. Speaker McCarthy seems to need almost the entirety of the majority. That's a really different criteria.
Yeah, boy, it sure is. The Problem Solvers Caucus is reportedly working up something here. They've agreed on a plan that would, in fact, make a lot of people happy if it ever saw the light of day. It calls for all 12 appropriations bills to be passed by January 11th, right? So this would actually push us through the end of the year here. It would include Ukraine. It would include disaster relief. And it would create a debt and deficit commission. Now, I don't know if this is going anywhere, but the idea of a debt and deficit commission, kind of brings us back a little bit to the super committee and some of the swings that we've taken at this before. Would the committee support something like that? Because I believe that's something that you've encouraged in the past. How about in the form it's being proposed here?
Very strongly. We just put out a letter with 11 of some of the top policy experts on the left, right, and center, all calling for a fiscal commission. The appropriations we're talking about right now, they cover a quarter of the budget.
Right.
So that leaves 3/4 of the budget undiscussed, plus all the revenue. This commission is probably our best way forward to have an honest adult bipartisan conversation over Medicare, over tax policy, over Social Security, and over other parts of the budget that, frankly, politicians are too excited to beat each other over the head with and not interested enough in solving when it's out in public.
Interesting. Do you have a sense of what's going to happen in the next week here? Even if Republicans do finish their work this weekend, the shutdown would happen at the fiscal year, not, say, a month from now, because you don't expect a CR to pass. Or is this just anyone's guess?
It's anyone's guess. I think they could come together at the last minute with a short kick the can.
Yeah.
We could be in a shutdown and then we have to reopen. I hope that whatever they do, they take very seriously this idea of a fiscal commission, because we're not going to solve any of our budgetary challenges just looking at the defense and the non-defense appropriations.
Remembering, of course, there was a debt ceiling deal. What if he brought that back to the floor now? What would happen?
So what's interesting is the whole purpose of that debt ceiling deal was to set the number so that the appropriators could fight about other stuff.
And we're still arguing over that number.
We're still arguing
over the number. The deal never happened.
The House wants to go way below the deal. The Senate actually wants to go above the deal. Nobody actually wants to stick to the deal.
But he passed it at one point. Could he do it again? It's just amazing. You
Maybe
go
it's a
away
good
for August
question.
recess and you come
Yeah.
back and we're in a different reality somehow.
Yeah, it'd be interesting to ask the folks that voted for it whether you support the deal, but you just don't support what would come out of it or not. Remember, again, there's this unanimity among the majority problem, right? So not every Republican voted for that deal. Yeah, perhaps the same ones that voted for the deal would vote for the appropriations, but then Speaker McCarthy is at risk of a vote of no confidence, effectively.
What does it do having Volodymyr Zelensky here? As I was saying with Jack, right in the middle of all this, the motorcade rolls up. He's meeting with leadership, at least on the Senate side. I know he's meeting with the Speaker as well, not so much the rank and file. There's a bit of a disruption here, and it reminds everybody of this thing that we can't seem to agree on. Does his arrival make it more likely that Ukraine will get another dose of funding, or is it interrupting the flow?
Maybe a little bit of both. I do think that ordinarily the need for emergency or disaster funding actually can kind of grease the wheels, excuse me.
Yeah, right.
So the hurricane money needed in Florida, et cetera. But in this case, the Ukraine funding has become controversial in some circles, and it may actually be an impediment to a final deal.
Does the committee want to hear a conversation about revenue, or is it just about funding responsibly, living within our means? It seems we never talk about the potential of hiking taxes to try to close this gap.
We have to talk about revenue. Look, there's about $1.5 trillion a year we spend through the tax code on various tax breaks. The idea that we would talk about the real spending but not the tax spending is a little bit silly. And it's another reason I think this fiscal commission can help. I worked on the Simpson-Bowles Commission in 2010, on the super committee in 2011, and
So you know
Democrats
all
and
about
Republicans,
this.
I do. Democrats and Republicans both agreed we need to talk about entitlements, we need to talk about revenue.
Yeah. Did Donald Trump just guarantee a shutdown? Did you see what he put on Truth Social?
Something new, or
he's urging Republicans to vote against what he calls a very important deadline at the end of the month. Republicans in Congress can and must defund, he says, all aspects of crooked Joe Biden's weaponized government. And I could read the rest, but...
Well, there's a couple of ways this can go down, right? The one is that the House Republicans come together on something they can negotiate with the Senate. And the other is that this is a bipartisan bill. One way or another, we are not going to have the government shut down for the entire next fiscal year. So even if it shuts down, it will reopen at some point, and we will need the votes for that.
You like to think it will. Let's hope we're not about to make history. Mark Goldwine, great to have you back. Someone we want to stay in touch with while this is being figured out. From the Committee for a Responsible Federal Budget, our neighbors here in Washington, where he's Senior VP, Senior Policy Director. I'm Joe Matthew in Washington. We'll assemble our panel next. John Sitalides, Lincoln Mitchell are with us, only here on Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 121 on Wall Street. We do check markets all day long at Bloomberg. The Dow, the S&P, and NASDAQ are all lower right now. Oil is resuming its rally as Russia bans exports of gasoline and diesel. West Texas Intermediate crude up 0.4%, $89.95 right now for a barrel of West Texas Intermediate crude. Stocks lower across the board, again off session lows, but the S&P remains down 39 points, down 0.9%. The Dow Jones Industrial Average down 138 points, down 0.4%. The NASDAQ Composite Index lower by 134 points, down now by 1%. 10-year yield at 4.46%, with a 2-year that's yielding 5.13%. And again, West Texas Intermediate crude up 0.2%, $89.87 for a barrel of WTI. Cisco Systems is buying software company Splunk in a deal valued at about $28 billion, marking the computer networking equipment maker's biggest acquisition. Cisco shares, they're down now by 4.2%. Splunk is up 21%. Recapping, stocks lower, S&P down 39, down 0.9%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
If Marjorie Taylor Greene says a continuing resolution is dead in the water and Donald Trump urges everyone to vote against it, we're done here, right? Should we pop back next week, maybe a week from tomorrow, just to usher in the shutdown? I'm Joe Matthew in Washington, where we don't have a lot of progress being made on funding the government here. President Zelensky is in Washington. Maybe he's making progress. We'll find out as we go. But let's assemble our panel. John Sidolides joins today, principal at Trilogy Advisors, and Lincoln Mitchell's with us as well, political analyst and lecturer at the School of International and Public Affairs at Columbia University. It's great to have both of you gentlemen with us. Lincoln, what's your thought today after everything that we've learned? Another procedural vote to fund the military's failed on the House floor. You know, the headline will be Republicans in disarray. Maybe that's accurate, maybe not, but we're trying to cut through the noise here a little bit and actually figure out what's going to happen. Does the government shut down a week from tomorrow?
What puzzles me is how the Republicans think this is possibly in their interest. There would be some kind of argument to be made that maybe this helps Donald Trump in a Republican primary, but Donald Trump has wrapped up the Republican primary. I don't see how the American people look at the shutdown and somehow blame Joe Biden outside of the Republican base. What the Republican Party is demonstrating here is they are neither interested in nor capable of governance. So do we get to a shutdown? You know, I don't love making predictions, but it certainly is looking that way. Now, anything can happen, but what you don't hear from Marjorie Taylor Greene or Matt Gaetz or any of the other shining intellectual lights of the House of Representatives is we're going to begin serious discussions and we're going to have earnest negotiations. That's kind of what it would take to get from here to there. So we could very well be heading to a shutdown.
Is that the expectation, John? There's still 9 days here to figure something out. But if nobody can agree on the basic principles of funding the government, whether it's adding Ukraine funding or funding disaster relief or adhering to a deal that was already made 2 months ago, maybe this is a foregone conclusion.
Well, that depends on the premise, Joe, that everyone agrees that a government shutdown must be avoided. And I'm not sure there's agreement across the Republican caucus on that front. You may have a number of members who feel that in the short term, it's very valuable to be able to take a stance that you're willing to shut down the government for X number of days, ideally not for weeks or months, of course, to be able to take a stand on issues that matter to constituents in certain of the districts of these members who are most adamant about border security, about immigration reform, about disaster aid and whatnot. And given the fact that the House leadership is dependent on a razor-thin margin, this is maybe just a consequence of what it means to have 5 votes to stay in the speakership.
That's a great point. I'd love to hear from both of you on this visit from
Volodymyr Zelensky. He's already been to Capitol Hill, met with Chuck Schumer. He's met with Speaker McCarthy, who's singing a slightly different tune now than he was, saying that Joe Biden is failing to make the case to the nation when it comes to funding for Ukraine. Michael McCaul met with him as well. This is, of course, the chair of the House Foreign Affairs Committee, very pro-Ukraine funding, says we should be giving them everything they are asking for right now. And here's what he said about the funding process.
Right now, as troops are going in with no air cover, they have to take the mines by hand at nighttime. We wouldn't send our troops into that situation. So we need to give them everything they need. If this administration won't give it to them, then I submitted that we write it in our appropriations bill. We write the weapons that he asked for, that this administration won't give. We write that in our appropriations bill. And I think the Democrats at the table, whether it be Steny Hoyer to Nancy Pelosi to the whip and Chairman Mr. Meeks, we all agree.
They agree, Lincoln Mitchell, but I don't know about everybody else. Is that how this ends? Where somebody like Michael McCaul, with the help of, I don't know, I guess Mitch McConnell in the Senate here, they actually write the funding into the fiscal year budget as opposed to fooling around with the stopgap bill that's apparently not going to pass.
Well, as somebody who would like to see the U.S. continue to support Ukraine in this conflict, I'd like to see that. The more certainty we can give to Ukraine and to Ukraine's president that this funding will continue and that it won't be jeopardized by American politics, the better that it is for Ukraine, and also the better that it is for American interests in the Eurasian landmass. So I support that. My sense of this, and I follow this pretty closely, I've spent a lot of time in Ukraine, I talk to people there a lot, is that the perception that the problem here is that the Biden administration isn't doing enough is pretty far from the consensus, right? The real issue, which is the subtext of, I think, what you've been saying, is that there is real disunity within the Republican Party. That disunity will grow because as Donald Trump again returns as the leader of the party, he does not support Ukraine in this conflict. So if I were Mike McCaul, what I would be focused on is making sure I had support from my caucus. And then you can push the Biden administration to do more. In fact, there are some disputes about what, to be sure, I'm not ignoring that, about what kind of weapon systems we should be sending. But the stronger we can concretize that commitment, not just for the rest of this year, but so that it's not dependent on the outcome of the 2024 presidential election. It remains true that if, like me, and I don't know, your listeners are going to have a range of opinions on this, of course, but if you support Ukraine and if you think defeating Putin is important, the single most important thing we can do here as Americans is re-elect Joe Biden. And you know who knows that very well is Vladimir Putin.
John, we've talked about Ukraine quite a lot over the last year and a half. We're coming up on 2, I guess, at this point, which is pretty remarkable. What's going to come from this visit? It's different when you're in person.
Well, not only is it different because it's in person, because last time he was here last year, he was heralded as a tremendous hero on the world stage. And if you recall, I believe then Speaker Pelosi and Vice President Harris unfurled the Ukrainian flag inside the House of Representatives, which actually offended a large number of Americans who are wondering why foreign flags are being raised inside the U.S. Congress. Look, CNN just released a poll a couple of weeks ago that shows most Americans are becoming very skeptical, not about the heroic sacrifice of the Ukrainian people. And I think there's wide consensus in America that this has been a very, very catastrophic episode for the tens of millions of Ukrainian people who continue to suffer to this day. But to what extent will this remain an open-ended war? I mean, right now we're about $110 billion in combined military, financial, and humanitarian aid for Ukraine. Meanwhile, in the United States, we have this massive crisis on the border, right? Thousands of people flooding in every day, rampant crime in our major cities, inflation that is affecting tens of millions of Americans. And we're wondering, how do we justify borrowing from China to be able to provide arms to Ukraine to defeat a Russia that is now in a wartime economy and is planning on attriting and wearing down Ukrainian resistance until there's either a new president in the United States or even in Europe now, Ukraine's strongest ally, Poland. The president yesterday was talking about dealing with Ukraine as if it was a man drowning and looking to pull down other NATO countries into the abyss that Ukraine may be headed in. So I think if President Biden finally stepped up to the plate and offered a speech to the American people explaining in detail why this is of such tremendous importance, perhaps he could move the needle in the other direction. But there's been very little policy, political, and rhetorical leadership by our nation's leaders on this issue to the American people.
I'd love to hear from you on this, Lincoln. Number one, is that true? Should the president make an address to the nation on this? Would it even make a difference? And I say this knowing that President Zelensky asked to address a joint session of Congress again, as he did last December, and Kevin McCarthy said no.
I mean, John makes some very good points there, right? He's absolutely right. It should not fall to a foreign leader to make the case to the American people why the United States of America should fund his country. That is absolutely the responsibility of the president, in this case, Joe Biden, who supports that leader. And he has not made that case well enough, in my view. And it absolutely is. Why should I, or any of us who are Americans listening to this, be told how we should spend our taxpayer dollars by the president of a foreign country, right? So that is the responsibility of Joe Biden and people on both sides of the aisle if they support Ukraine. And it is also, I'm struck also by the comparison between Zelensky's last visit, because my sense here is that Zelensky is overplaying his hand a little bit. I cannot think, and I'm pretty old, I cannot think, I mean, outside of like Mandela when he first got out of prison or something like that, or various human rights activists, the leader of a foreign state who has been so just unambiguously heroized by the American media and the American people. And Zelensky is just an ordinary guy who is president. I mean like that. He's the president. He won an election. But if we continue with this, Zelensky can do no wrong. Now that gets pretty tricky. And the American people also, it's one thing to say we support Ukraine. It's another thing to say we support Ukraine forever, as John points out. So this is for Joe Biden and the administration and people on both sides of the aisle to make the case, not to a foreign leader, no matter how charismatic he is.
He'll be at the White House a few hours from now, and we'll be tracking his steps through the nation's capital. John Sitilides and Lincoln Mitchell, fascinating conversation already. Coming up, we're going to look at what happened in the U.S. Senate. The chair of the Joint Chiefs has been confirmed, and no, Tommy Tuberville did not drop his blockade. We'll talk about it next with John and Lincoln after we get a check on world and national news. Nancy Lyons has that from the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Joe, you've been talking about it. Ukrainian President Zelensky continues to make the rounds today in Washington as he presses for more U.S. aid. He first met with lawmakers on Capitol Hill and came away feeling pretty good.
I think we have very strong dialogue with senators.
Notice he said senators. House Republicans are the ones pushing back on any additional U.S. aid. Zelensky also stopped by the Pentagon and visited the 9/11 memorial. He'll also be meeting at the White House with President Biden. House Speaker Kevin McCarthy has failed again to advance a bill funding the Department of Defense, dealing another huge blow to his efforts to avert a government shutdown.
Ranking Democrat Jim McGovern of the Rules Committee.
We'll do this defense appropriations bill that represents the kitchen sink of MAGA culture wars. The Republican majority in this House is a joke.
Republican Mark Alford.
The only shutdown that we are in favor of is a shutdown of the woke indoctrination in our military, the shutdown of the infection of socialism.
Long-serving Rules Chairman Tom Cole has seen this all before.
Magically, we probably won't be too far off if we come to an agreement of the numbers that are laid out in the debt ceiling deals.
Talks to avert a shutdown will continue down to the wire. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow, the S&P, and NASDAQ all declining, all in the red right now, with the Dow at 34,304, down 136 points. The S&P 500 index is down right now by 38 points. That is a drop of just about 0.8%, while the NASDAQ Composite Index is down 133 points. For NASDAQ, a decline right now of just about 0.9%. 10-year yield, 4.46%, with a 2-year 5.13%. Gold down $9.50 the ounce to $19.20, a drop of 0.5%. West Texas Intermediate crude holding right around the $90 a barrel level, 90.01 right now, up by about 0.4%. Stocks are dropping. Treasury 10-year yields rising alongside the dollar as the latest reading on the labor market reinforces the case for the Fed's higher for longer stance. Weekly jobless claims are down, indicating the labor market is offsetting weakness in other sectors of the U.S. economy. And with that story, here's Bloomberg's Vinny Del Giudice.
Claims dropped to the lowest in more than 5 months, even as finance and technology companies make cuts. Underscoring the resilience, the total number of workers on unemployment also fell. The economic outlook is cloudy, though. Last month's index of leading indicators dropped. It's been down since April 2022. Existing home sales faltered, too. Vinny Del Giudice, Bloomberg Radio.
Broadcom is on track for its biggest decline in 3 weeks, following a report that Alphabet's Google is considering dropping the company as a supplier of artificial intelligence chips as soon as 2007. That report from The Information. Broadcom down now by 1.5%. Shares of Alphabet down by 1.3%. Recapping, stocks are lower, with the S&P down 38 points right now. That is a drop of 0.8%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
They've confirmed another in the U.S. Senate, 96-1. How about that for General Randy George, the next Army Chief of Staff? And you're saying, what happened to the blockade? Well, it's still in place. Senator Tommy Tuberville of Alabama still blocking more than 300 military officer promotions here in his seemingly never-ending objection to the Pentagon's abortion travel policy. And I say another because the big one came down just a short time ago. It was late yesterday, actually. C.Q. Brown, next chairman of the Joint Chiefs of Staff, Senator Chuck Schumer, the majority leader, made this decision to bring them to the floor to get around the blockade and spoke about it earlier today.
These men should have already been confirmed. They should already be serving in their new positions. The Senate should not have to go through procedural hoops just to please one brazen and misguided senator. But this is where we are.
Bloomberg caught up with that senator earlier this morning outside the chamber. Here's Tommy Tuberville.
Problem is, we've been doing this for 7 months. We could have been doing a few a week, but they refused to do it because they didn't think they were wrong. Well, they're dead wrong on this. And so the American people, on a controversial subject like this, abortion, need to have their voice heard through their senator and congressman. It doesn't need to be dictated from the White House with a memo or the Pentagon. So we have a hold now and still on around 300 promotions. They need to be promoted, but that's up to Schumer. If he wants to bring them to the floor, we'll confirm them.
Which could take the better part of the rest of this year, based at least on what Democrats are suggesting. Tuberville seems to think it would move a little bit quicker than that. Let's reassemble the panel for their take. John Sitilides at Trilogy Advisors and Lincoln Mitchell, political analyst, lecturer at the School of International Public Affairs at Columbia University. John, this, I guess, is setting some sort of precedent. It's what Chuck Schumer said he didn't want to do and said he wouldn't do. But the military does now have at least a top commander in the chairman of the Joint Chiefs. Was it the right move?
I don't know if it's the right move, Joe. I think what this really comes down to is there's two different issues, I think, at play here. One is obviously this procedural issue involving abortion, right? A very, very polarizing issue in American politics. But clearly, Chuck Schumer had the ability to allow for each nominee to be debated, it just would have chewed up an enormous amount of time on the Senate floor. And so Senator Tuberville exploited Senate rules, which give great powers to each senator to hold up debate, to pursue policies that he or she may wish to. And as he's, I think, effectively done, he pointed out the fact that Senator Duckworth had done the same thing with, I think, 1,100 promotions back in 2020 over the issue of Alexander Vindman. So Tuberville is exercising the leverage that's available to him on this issue, but I think there's a larger constitutional issue here that I think is more important to the American people, and that is, can the executive branch unilaterally change legislation that affects executive branch policy decisions? So in this case, the Defense Department allowing for paid travel for service members to have abortions. And that is something that the Senate and the House have already voted on in the past, and they prohibit that. So can the executive branch override congressional legislation without the vote of the people? And I think this is going to be an important precedent for other very polarizing issues in the months and years to come.
Well, I'll tell you what, Lincoln, Tuberville says just bring that policy to the floor. And it's kind of, I guess it's unknown right now what would happen. You can speak to the vote here that just took place, or these two confirmations. I know that you are not a fan of the Tuberville blockade, and a lot of lawmakers get very upset. By the way, that's Democrats and Republicans who believe this is impacting military readiness and that it's the wrong way to make a point on this. But does Chuck Schumer have the votes if he actually brought it to the floor to defend that policy?
I think we need to be careful about some of the sleight of hand that Tuberville is using here. Abortion is not a controversial issue. Access to abortion early in a pregnancy is an opinion that a majority of Americans support. The reason it's controversial is because the minority that opposes that idea is overrepresented in the U.S. Senate and a number of state legislatures and in the Supreme Court. So to say this is an issue about which Americans, are completely polarized is a bit misleading. And when we should remember that. If you were to go to the floor with this bill, you would have, however it was phrased, the House voting along party lines saying you should not be able to travel to get an abortion if you're in the military, and the Senate saying you should, and then the president, if possible, vetoing it to, depending on how the yes or the no's were phrased. We know that's how it would go. We know this is now an issue that is essentially a party line issue. The point to underscore for Tuberville, and he's right, we could have a long debate about every single one of these appointees, and the Senate could do nothing else. For a party that's happy to shut down the government, maybe that works. But the point to underscore for Tuberville and anyone who supports him is that the position then is that the national security of the United States is less important than women in the military being able to have reproductive freedom. And look, that's a policy dispute. Not everyone's going to see it my way on that. I understand that. But that is the position. And, the legislative pyrotechnics of Chuck Schumer or Tommy Tuberville or the military or the Biden administration has to work around that. But that is the position that Tuberville is saying. And again, he's entitled to have that position. But, this is from a party that for as long as I remember lectured me because I wasn't tough enough on national security and didn't care enough. Well, they don't seem to care so much either.
Was the issue of military readiness, there's also the matter of military families, John, who are in many cases are living in temporary housing. Their kids didn't start the school year the way they were supposed to because they thought they were moving. One of the parents in that house is not getting an anticipated pay raise because of it. This is why people are questioning, I guess, the morality, if I can use that term, of Tuberville's approach. What should be said about these military families? Just the cost of being in the military?
Unfortunately, they're caught up in the vise of this debate. And there's a trade-off involved here in every type of a decision, whether it comes to policy, legislation, or regulation, and there's never going to be a perfect solution. I mean, I can't speak for Senator Tuberville as to what the impact is on these families and to what extent he is sympathetic to their plight. But he clearly feels strongly enough about this, as do the voters in his state, and as do the voters in a number of other states whose senators may support him, even as there are those that oppose him. So this is the democratic process. Sometimes it's ugly, and there are very human consequences to it, but this is the price that some lawmakers are willing to pay to achieve their objectives.
Well, that's clear with Tommy Tuberville. I just wonder if Chuck Schumer just made it less likely for him to drop this blockade by putting these votes on the floor. We will not know, of course, until he makes that decision, if a decision is made. John, thanks for the time today. John Sidolides at Trilogy Advisors. Lincoln Mitchell stays with us for some final thoughts straight ahead here on the fastest show in politics. They found the wreckage of that missing F-35 this week. Now the eyewitnesses are coming forward. That's next on Sound On, only on Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Paletta. Firm Holdings is exploring the introduction of a subscription service in a bid to create more recurring revenue beyond interest collected from its buy now, pay later plans. Affirm shares, they are lower right now by 6%. Cisco Systems is buying software company Splunk in a deal valued at about $28 billion, marking the computer networking equipment maker's biggest acquisition. And with more on the story, here's Bloomberg's Ed Ludlow.
This is so in line with Chuck Robbins, right? A networking gear seller like Cisco adding the software services in complement to that. Splunk is a data indexing business. Basically, you can monitor network users in real time. It has a cyber security element. For those investors or Cisco and Splunk investors out there, this deal will not impact Cisco's previously announced share buyback program.
And shares of Splunk are surging now by 21.2%. Cisco is lower by 4.1%. Rupert Murdoch, the 92-year-old media magnate who created Fox News, is stepping down as leader of both Fox's parent company and his news media holdings. Broadcom is on track for its biggest decline in 3 weeks following a report that Alphabet's Google is considering dropping the company as a supplier of artificial intelligence chips as soon as 2021. Broadcom down 1.6%, Alphabet down now by 1.3%. And Heinz is voluntarily recalling 83,000 cases of its famed American cheese. Those are our top company stories at this hour. This is Bloomberg.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
We're live from Washington on the radio and on YouTube, where you can always join us. Search Bloomberg Global News, and we'll meet you in the studio. Kaylee Lyons joins the conversation in just 5 minutes. Let's first get up to date world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. The House continues to have trouble finding common ground on government spending, failing again today to come up with the votes to allow debate on a Republican-drafted defense bill. Bloomberg government's Jack Fitzpatrick spoke with Bloomberg Sound On about the ongoing tensions.
The defense procedural vote failing is a sign that they don't have support to move ahead on anything at all. The defense appropriations bill usually would not be the problem, and it really is not the problem now. It's just that there's a broad sense of chaos in the House regarding anything on the topic of funding the government.
Bloomberg government's Jack Fitzpatrick, there are just 9 days left before government funding runs out. Rupert Murdoch is stepping down as chairman of the boards of Fox and News Corp and will become chairman emeritus of each company. His son Lachlan Murdoch will become sole chair of News Corp and will continue as executive chair and chief executive officer of Fox. We get more from Bloomberg's Katie Greifeld.
In a statement Thursday morning, Lachlan Murdoch congratulated his father on, quote, a remarkable 70-year career. Of course, Rupert Murdoch, age 92, he built what is now a global media empire over the course of those decades.
Bloomberg's Katie Greifeld. Fox News and Murdoch paid a price for the network, embracing claims the 2020 election was stolen from Donald Trump. Fox recently agreed to pay Dominion Voting Systems nearly $788 million to settle a defamation suit related to those false election claims. The Biden administration is moving to grant temporary legal status to nearly 500,000 Venezuelan migrants already in the U.S. It means they'll be able to work legally. It also is designed to ease the burden on cities taking in migrants, with border crossings returning to near-record levels. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Back to you, Joe.
Nancy, thank you. We're still waiting to learn more about this F-35 stealth fighter jet that went missing, remember, in South Carolina after the pilot ejected a couple of days ago. Now, we told you they did find wreckage from that jet in a field that was outside of the area they were even looking in. So apparently this thing flew for a minute. Still not sure why it wasn't pinging anyone or why it was so hard to find. Remember, they had to actually put out a phone number to ask for the public's help on this. And eyewitnesses are now emerging. One woman in Williamsburg County, where the plane went down, tells NBC News that she and her family, they were out there having a little time in the backyard. They saw it go almost inverted just before it crashed. And Randolph White, also from Williamsburg County, he heard the jet when it was going down right over his house. He says he was inside shaving. And if you ever imagine what that sounded like, try to imagine. Well, imagine no longer.
I heard a screeching, between a screech and a whistle. I said, what in the world is this?
Yeah.
And I heard a boom. Then my whole house shook.
His whole house shook. He says he didn't realize it was a plane at the time. He thought it was a meteorite, so he didn't call anyone. Lincoln Mitchell, I don't know how you lose a stealth fighter, but with men like that, at least we know what they sound like.
That's right, and that's the beauty of radio. I'm not an expert on military aviation. However, I do recall being on Bloomberg Radio a few months ago where I was asked about UFOs. So I'm not saying anything, but maybe we should try to explore that connection. I don't know how the military loses an airplane. I'm glad that gentleman who was shaving, I hope he didn't cut himself or anything like that. I mean, obviously, I hope everyone's okay.
I knew I could count on you. Lincoln, it's great to have you as always. Don't be a stranger. Lincoln Mitchell, political analyst. He lectures at the School of International Public Affairs at Columbia University. And here's a little something you might not know. Lincoln writes a Substack on baseball and politics. And you got to check it out. It's called Kibitzing with Lincoln, of course. How about Randolph White? Can we do that again?
I heard a screeching, between a screech and a whistle.
Hour 2 of Sound On starts right now.
Now, from our nation's capital, this is Bloomberg Sound On.
The Biden administration says we're making good on a long-held promise. Ballooning budget deficits in Washington.
We're in a bizarro political world here.
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
Most people, including most Republicans in Congress, understand that we need to get aid to Ukraine.
Who's going to take us in a rational way into the future and lead our country?
This has really become kind of the new frontier in American politics, is this battle between red states and blue cities.
Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
President Zelensky makes the case in person this time. Welcome to Hour 2 of Sound On. As Zelensky meets with senators and House leaders, officials at the Pentagon, and the president all today. But will it make a difference in the funding debate? That's a big question hanging over the Capitol, and we'll discuss the stages of Zelensky's visit, what it might mean for a possible government shutdown in the future of funding the war effort as well, with Brett Bruen, president of the Global Situation Room, former diplomat in the Obama administration. He'll be here in just a moment. Some say a shutdown's more likely after what happened today in the House. We'll explain that when we spend some time with Bloomberg's Mike Dorning this hour. And new early state polls bring tough news for Ron DeSantis. He's now trailing Nikki Haley. We'll hit the trail later with Bloomberg's Wendy Benjaminson. So let's get started, as always, with a look at Wall Street. For that, we turn to Charlie Pellet. Hey, Charlie.
Hi, thank you very much, Joe Matthew. Indeed, stocks lower across the board, right between a screech and a whistle now, with the S&P down 43, drop there of 1%. The Dow down 163, a decline there of 0.5%. The Nasdaq Composite Index down 148, lower by 1.1%. 10-year yield 4.47%, with a 2-year 5.14%. Spot gold down $10 the ounce to $19.20, a drop there of 0.5%. Crude at $90.09 a barrel. We're talking about West Texas Intermediate crude up 43 cents a barrel now, higher by 0.5%. Oil resumed its rally after Russia banned gasoline and diesel exports, further tightening an already stressed global fuel market. But what has been behind the recent run-up, this quarter in oil prices? That question this morning for Ed Morse, global head of commodity strategy at Citigroup Global Markets.
Well, it's quite simple. A bunch of countries that had a lot of surplus capacity decided to rein it in and pull back. If you look at the oil market, there's no more oversupplied market in the world based on supply and demand. But those that have the supply have pulled it back, and they pulled it back because they didn't like the revenue that they were getting.
And you can hear more of the conversation with Ed Morse on the Surveillance podcast. You can download it wherever you get your podcasts. Oil stocks, though, they are trading lower right now. Case in point, ExxonMobil down 0.5%. ADRs of BP lower by 0.5%. Chevron right now down 0.3%. Again, recapping, stocks lower. S&P down 44 points right now, a drop of 1%. 10-year 4.46%. The 2-year 5.13%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Right, Charlie, thank you. Welcome to Hour 2 of Bloomberg Sound On. I'm Joe Matthew in Washington alongside Kaylee Lines. Here she is in a whole different studio. Good to see you. You were up on Capitol Hill for a good chunk of the morning, and I was too. Impossible to get around because every street is closed around the Capitol because Zelensky, well, at least was there. And pretty interesting here. We're all talking about a potential shutdown after what's been going on even today with that failed vote in the House on military funding getting cloture, or at least moving through that procedural vote, Kaylee. But the argument for Ukraine funding is pretty loud today, too. Yeah. He's going to the Pentagon for the first time, then he's going to the White House later on. But you talk to a lot of lawmakers who have a lot of different views on whether we're going to shut down a week from tomorrow.
I did. I mean, I talked to some of those hardliners, including Republican Congressman Matt Gaetz of Florida, who told me there will not be sufficient Republican votes for a continuing resolution. And then he went on to say, if they have moderate Republicans who want to join up with Democrats, they'll be signing their own political death warrant. So I think that just speaks to the mood amongst some Republicans on the Hill right now. But to your point, Joe, of Ukraine being one thing and funding battles being another, I would argue that they are tied, because one of those that flipped on McCarthy, one of the individuals who decided not to vote for the DOD funding bill, was Marjorie Taylor Greene. And I asked her why outside the Capitol, and she said, I wanted Ukraine funding out of that. They should have spun it off into a separate bill I could have voted no for. They didn't do that, so I voted no on the rule, and I'll vote no on the bill.
Michael McCall, meantime, says, fine, we'll write it into the budget for next year. He was talking to reporters earlier as well. Let me just bring that up for you to hear from the chair, by the way, of the House Foreign Affairs Committee.
Right now, as troops are going in with no air cover, they have to take the mines by hand at nighttime. We wouldn't send our troops into that situation. So we need to give them everything they need. If this administration won't give it to them, then I submitted that we write it in our appropriations bill. We write the weapons that he asked for, that this administration won't give. We write that in our appropriations bill. And I think the Democrats at the table, whether it be Steny Hoyer to Nancy Pelosi to the whip and Chairman Mr. Meeks, we all agree.
Nancy Pelosi still in charge of that? You were in that scrum. He was just emerging from his meeting with Volodymyr Zelensky.
Correct, that he was there with Speaker McCarthy, and he said that Speaker McCarthy did press Zelensky on the accountability question that a lot of lawmakers have been raising, but that also McCarthy has been strong in his support for Ukraine. And he was asked about that $24 billion in supplemental funding for Ukraine that the White House has asked for if it'll pass. And McCall seemed pretty firm that Ukraine is going to get that aid, that the House is going to make that happen. It just might be kind of hard to get that done, given the rhetoric we're hearing from some other members.
Yeah, absolutely. It was not only McCall, by the way, who was talking about his meeting with Zelensky. In the other chamber, we heard from Senator Chuck Schumer.
There was a single sentence that summed it all up, and I'm quoting him verbatim. Mr. Zelensky said, if we don't get the aid, we will lose the war. That's a quote from him.
Was there pushback from Republicans in that room?
No answer to the questions. Let's bring in Brett Bruen. I've been looking forward to it. The president of the Global Situation Room, former U.S. diplomat in the Obama administration, is with us right now, and a reliable voice when it comes to Ukraine, and of course, all geopolitical matters. Brett, it's great to have you back. We've spent so much time talking about this war effort, in the run-up to war, in the execution, going through the counteroffensive, and now the fight for money. Does this visit make a difference for President Zelensky?
Well, I have to say, Joe, it could not have come at a more important time, as they are hashing out not just, questions overall of government funding, but very specifically, will they authorize those $24 billion that the Biden administration is asking for? And it is hard to look Zelensky in the face, to see that pain on his face and to turn him down. And I think it will be more difficult tomorrow and in the coming days for many Republicans to hold that line that somehow our support, that $100 billion or so, is not being well spent, when you see the sacrifice, you see the bravery that Ukrainians are demonstrating on the battlefield.
Well, when we talk about what we see, I wonder what kind of message it sends, at least optically, for someone on the outside looking in, like Vladimir Putin, to see when Volodymyr Zelensky was walking into the House meeting, he was flanked only by the Democratic leader, Hakeem Jeffries. He was not there being escorted in by Speaker McCarthy. And I feel like that just visually also underscores some of the discord we are seeing. How does that play?
Yeah, Kaylee, I think this is really important to remind folks here in Washington that every appearance of doubt, division, is an opportunity for Moscow, and they will exploit it to the fullest. When I was at the White House back in 2013, 2014, focused on Russian propaganda, they take those sound bites and they amplify them. So I think it's really important for leaders on both sides of the aisle to be responsible with their questions. Yes, we should make sure that our money's being well spent. We shouldn't just write blank checks, but at the same time, this notion that somehow we're just not going to send any more support, that hits really hard in the trenches of eastern Ukraine.
So how's this going to end? He's making his trip through Congress, stopping by the Pentagon, and then talking to the president, Brett. It's that first visit that's really going to matter. He did get with Speaker McCarthy, and to your point, it does seem that being in person maybe loosen up the mood a little bit with some of the limited commentary that we've heard from Kevin McCarthy. But this is probably not going to be part of a continuing resolution. What can President Zelensky actually get done today?
I think it's really important at the White House that President Biden and his team start to articulate what does success look like. We want $24 billion extra dollars, and this is what we think that we can see in the coming months in terms of progress, because up until now, it has just been one announcement of more money after another. And I think Republicans are taking advantage of that. They're exploiting the fact that, the administration says, we'll just send more money over. We've got to start looking at what are those goals? What does success look like? And I think that will help to ensure that everyone remains focused on what all of this is for.
Well, on that subject of defining success, Brett, when Congressman McCall came out of that House meeting and was talking to a group of us reporters, he said that this can't be a war of attrition, that there needs to be a plan for victory and it needs to happen quickly. And the speed of things was something he kept coming back to. Also, the idea that Ukraine just isn't getting weapons fast enough, even if the U.S. agrees to send them, that the process is just too slow. What's your take on that? Even if, okay, here, Ukraine, you can have what you want, but it still has to get to those front lines. It has to get there to start making a real difference. And I just wonder if it is too slow to make a difference.
And I agree, Kaylee. I think we are in this situation where over the last year and a half, Ukraine has had to go down a laundry list of asks. Every time the administration here in Washington saying, I don't think so, only to reverse course. That chews up valuable time. It chews up valuable resources that could be spent on executing a strategy, on getting further support. So I really hope as we head, unfortunately, towards that 2-year mark, there is an effort to articulate these are the things that we're going to need in order to get to where we think we could be a year from now. And that helps, I think, everyone across the NATO alliance to understand what they have to show up with, because right now it's kind of like a potluck meal.
We're talking with Brett Bruin at the Global Situation Room. Brett, I've got to ask you about what's happening in Poland. This, of course, Ukraine's neighbor, whose premier says the country is halting weapons supplies to Ukraine. We are no longer, this is a direct quote, transferring weapons to Ukraine because we are now arming Poland with more modern weapons. Went on to say his government has no intention to, quote, risk the security of Ukraine, unquote, and will not interfere with arms shipments from other countries through this country that, of course, has become the hub for these transfers. How much of a problem is this? And is this coming down to a personal dispute between Poland and Ukraine?
Well, look, Poland also has an election coming up. Some of this is domestic politics. But what I will say is that it raises the challenge of our defense production capabilities, both here in the U.S., but particularly in Europe. And I don't think that enough has been done to ramp those up, because we've been sending an extraordinary amount of arms and weapon systems over to Ukraine. We have to backfill those. We have to expand capacity, not only in the European theater, but obviously we have a significant threat that is developing over in the Taiwan Strait. So we've got to focus on a broader strategy, and I think we've been too myopically looking at some of these issues. I served in Iraq as a diplomat with an army commander who was saying you can be so focused on the problem that you miss the threat. And I think we are really focused on Ukraine. We've got to ensure that our European allies also have what they need.
So on the subject of the threat, those who are proponents of continuing to help Ukraine in this war, to continue to provide funding, essentially see anything that is giving in any way or relenting in, the battle against Russia is sending signals elsewhere to, places like China. Brett, what do you think about that? Not just that the signals that whatever is happening in the U.S. Is sending to the Kremlin, to Vladimir Putin, but to others as well, other adversaries.
Well, on the positive note, I actually think that Beijing has been given more reason for pause when it comes to a potential invasion of Taiwan, because they have seen the way that the West came together. And while certainly there are critiques of the slowness with which it happened, I think now the fact that it has happened, that we do have a model for how we come together as a community of democracies in support of a nation that's threatened, is important. Nonetheless, and this is where, when I talk about the post-American era, I think you need only look as far as places like India, Saudi Arabia, Brazil, not to mention some of, the other major adversary challenges. And what we're seeing is an effort to try and disrupt the old order, to take advantage of places where the U.S. and our European allies are disengaging, Africa certainly being a big one. I worry that we are going to see over the coming years efforts that will create more friction. There will be more instability. And I think for listeners on Bloomberg Radio, one of the challenges is that global crises will become more common. What we're seeing play out right now between Armenia and Azerbaijan is only going to multiply.
This is quite a headline, Brett Bruin, in the New York Times today. Zelensky tells UN Security Council it's useless, while Russia has a veto. When you consider that, the fact that so many world leaders did not attend the UN General Assembly this week, Xi, Putin, Macron, Sunak, I could keep going here, and that was supposed to advantage Joe Biden. When you step back here and look at the General Assembly at this point, is it broken?
I think there are a lot of broken parts and pieces in the UN system. It was never perfect, but it was designed to prevent the kind of conflicts that are now playing out, particularly in Ukraine. And the fact that the UN Security Council has been so impeded in taking any action really demands that we look at how we come up with new systems. How can we create new structures? Because what we have certainly isn't working. And this week up in New York at the UN General Assembly has laid bare how irrelevant the UN system has become, not just on these conflicts, but even in response to the global food crisis, to climate change, to a whole host of other challenges. So I think it's incumbent upon the democracies of the world to come up with a new structure. We need essentially a NATO for democracy. We need something that's broader than just a North Atlantic alliance, because that's what the challenges of the world demand today.
Well, I think you just named your calling, Brett. That's going to be your next job.
I'll look forward to it.
He's the president of the Global Situation Room, where I'm pretty sure he's got his hands full already, Kaylee. Yeah. I could see Brett Bruin leading this Commission for Democracy. It's great to have you back, Brett, joining us from the Global Situation Room, as always, on Bloomberg Radio. He's not done. Zelensky continues the rounds today in the Capitol.
Yeah, he should be shortly at the White House with President Biden.
Not doing the whole formal arrival today. They're just sitting down to meet. We'll have details on that coming up as well. I'm Joe Matthew, along with Kaylee Lyons. Glad you're with us on Bloomberg Sound on the radio, and on YouTube, and, of course, only on Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:21 on Wall Street. We do check markets all day long at Bloomberg. We've got the Dow, the S&P, and NASDAQ in the red. S&P very close to session lows. Right now it is down 48 points to 43.54, a drop of 1.1%. Dow Jones Industrial Average down 202 points, lower by 1%. Now we've got the NASDAQ Composite Index down 165 points, a decline of 1.2%. 10-year yield 4.46%. Now we've got the 2-year yielding 5.13%. Gold down $10 the ounce to $19.20, a decline of 0.5%. And West Texas Intermediate crude up 0.1%. 89.70 a barrel, has been fluctuating right around the $90 level. Stocks are dropping. Treasury 10-year yields rising alongside the dollar as the latest reading on the labor market reinforces the case for the Fed's higher for longer stance. After earnings, FedEx shares are rallying today by 5%. Rival UPS is down 1%. Recapping, stocks lower, very close to session lows now, with the S&P down 48 points, a drop of 1.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Keely Lines on Bloomberg Radio.
I love the headlines today. I woke up, Kaylee, to McCarthy caves to his right flank. I see now on the terminal, McCarthy ambushed.
Not a great day for the speaker.
Hardliners changed course. And how was he ambushed? Was that the Trump thing, or who ambushed him? I guess it was same right flank.
So this is, you know how there's this whole thing going on about how they'd like to be, some of these members, passing appropriation bills one by one.
Yeah.
Well, they're trying to pass the defense spending bill.
Mm-hmm.
They've tried a few times now.
By 3, actually.
And once again today, it didn't work.
Right.
On this vote, the yeas are 212, the nays are 216. The resolution is not adopted.
That math doesn't work.
Right. And 2 of those nays were 2 people we didn't think would be nays. One of them being someone who we understand is fairly close to the speaker, or at least has been to this point, Marjorie Taylor Greene, the congresswoman from Georgia.
Of course, Kaylee, you can even watch this video on the terminal as well. Kaylee ran into Marjorie Taylor Greene to ask this.
What have you been telling the speaker? Have you had just one-on-one conversations with him about this?
I've told him everything that I've told everybody else. I'm completely transparent in every conversation I have. We should have been passing our appropriation bills back in August is what I believe, and we should be passing our appropriation bills right now. And I've been very clear about take the Ukraine money out of the defense bill and put it in a separate funding bill so that members like me can vote no and other members can vote yes if they want to. It's the easiest thing to do. They still wouldn't do it, so I just voted no on the rule.
Done.
And I'll be voting no on the bill.
Done.
Yeah.
Okay.
Meanwhile, Speaker McCarthy said that wasn't the impression he had gotten.
All right. This is, by the way, why Kaylee Line shares the byline on the ambushed story on the terminal. Talked to half of Congress this morning. You're a regular Mike Dorning. Who's with us right now? Hey, Mike, it's great to have you. Bloomberg politics reporter. You live for shutdowns, don't you? You've lived through a couple of them.
Lived through quite a few now.
So are we done? The military spending can't even get a debate. Donald Trump is telling Republicans to vote against a continuing resolution. That is this guy Kaylee talked to, Matt Gaetz.
There will not be sufficient Republican votes for a continuing resolution. Now, if we've got some of these moderate Republicans who want to go and join up with the Democrats, they will be signing their own political death warrant.
He's talking about pulling a moving truck up to the Speaker's office. What in the world is going on?
Well, one thing that doesn't look like it's going on is the government staying open past October 1st. I'll tell you that much. The Republicans can't even get something passed that's laden with all sorts of deep spending cuts, immigration rule changes, things that are anathema to Democrats. McCarthy's been trying to do this for more than a week. And, even on the defense bill, which is probably their favorite bill, they've had 3 strikes now, and there's something about what happens after 3 strikes. It's looking very much like a shutdown will occur. The interesting thing is, like, there's not really a bottom line or a unified, cohesive theme about why they're shutting down the government at the moment, which could be problematic as they go forward.
Well, one thing I heard from a number of individual members to Congress today, Matt Gaetz was one of them, but others like Dan Bishop as well, they just don't want to keep doing CRs. The concern is that you sign one continuing resolution to fund the government temporarily until October 31st, but then you still, even in that next month, can't actually get this done. And then you do it again and again, and the cycle repeats, and that's the concern.
It's a legitimate concern, especially when you're doing it 1 month at a time. I mean, remember, they really have not gotten much in the way of spending bills passed, and there's supposed to be 12 of them. They can't even agree on the defense one, so a 1 month temporary funding package probably isn't going to get them all the way there. That's why some of the moderates want to do like a 3 month spending package where they might at least theoretically work things out. But the Republican Party itself is very divided over this, much less actually coming up with something where they can agree with the Republicans in the Senate, the Democrats in the Senate, and the White House.
I was speaking with a Republican member of the House this morning, off the record, to be clear, who said this is really a matter of branding. Speaker McCarthy should just call this a limited sequester. And we'll vote on it, and people might actually go along with that. This idea of the continuing resolution, continuing, call it a limited sequester. That implies some cuts and continuation, and we can get through this and maybe see the light of day. Is there any wisdom there?
I mean, some of it is in the branding, obviously, in these things. And earlier last weekend, they were trying to come around this idea of focusing a shutdown on some border demands, which might have more hope of getting broader support, including in the swing districts where the Republicans can be really vulnerable. I'm not sure the limited sequester quite rolls off the tongue to the American public.
I think it fits on a bumper sticker either.
An LS.
Yes. But that way, the Matt Gaetz is going to say, we didn't do a CR. No, I voted for the sequester, and can face voters when he goes home.
Yeah, I'm not sure very many people know or care what a CR is either, but that's why I always like to say temporary funding.
Right. Yes.
But I don't think that's quite the right branding strategy that's going to capture the imaginations of the American public.
I'm trying to come up with something here, Kaylee.
Yeah, anything that's catchy.
I mean,
it needs to be like alliterative.
To a shutdown,
right?
You've still got 9 days, and it doesn't matter. It's a pretty bizarre world that we're in, and I still ask this. I asked Mark Goldwine at the Committee for Responsible Federal Budget a little while ago.
No.
Kaylee, why doesn't he just bring the debt ceiling deal back to the floor? Everyone here already voted on it, and say, guys, we made a deal. Let's bring it back down and see what happens.
Theoretically, that should work, right? Except after that deal was done, it's these very same hardliners that were unhappy with it that would probably be unhappy with it once again. And at that point, is this really, Mike, a question of, okay, he could pass it, he just might not keep the gavel.
He might not survive if he did that, because he could get the votes for it. He's gotten the votes for that before, but the whole point is these hardliners are demanding that they get more, and they threatening to unseat him. And if you're a Republican, you might be thinking it's better to have a shutdown now this year than this time next year, because the cost of doing that could be that McCarthy could be decapitated as Speaker, and have someone else in who has even less control.
Should we be assuming that, though? Let's say Matt Gaetz finally pulls up the moving truck and drops the motion to vacate. Are the votes there?
Well, you could
to fire the Speaker.
All you would need is for Democrats to not vote for a Republican Speaker, which in theory they shouldn't be doing, or usually wouldn't be doing, and 5 Republicans to vote against him. So you could unseat him, and it seems very likely you could unseat him. The question is, like, how do you replace him?
There's no one next in line.
And the one who would be most likely, if you had to turn to someone, is Steve Scalise, who's got health issues, and I'm not sure, like, this is the thing that he's looking for to improve his recovery.
I feel like there might be just enough Democrats, Kaylee, to say, you know what, we're having fun watching you in that job.
Well,
go ahead, Mr. Speaker.
Fair enough. I also the wheels turning in my brain, Mike, considering that it may come down to he needs Democrats in order to prevent the government from shutting down or to reopen it eventually if it is shut down to actually get spending done, which could be the thing that ultimately threatens his speakership, that triggers someone to file a motion to vacate. And then the Democrats, because he worked with them, could come back and save him. I mean, maybe that's the scenario.
Maybe there's potential problems with the impeachment inquiry. A lot of the Democrats are not keen on that. There is a sort of a workaround theoretically where Democrats could vote present instead of voting for him, and that would lower the threshold he would need. So you, in theory, wouldn't be vulnerable to a primary challenger later saying, hey, he voted for Speaker McCarthy who did this, this, and that. But it still would be a very precarious situation. And John Boehner was offered this same chance some years back, and he just said, no, thank you. I just don't even want to go down this road. I'd rather just leave.
What's he doing right now? Is he's
making a lot of money.
Well, I know, but is watching this, I mean, he's got a glass of red wine in one hand and I guess a joint in the other. And he's laughing. He's just laughing.
Yes. He's got a glass of red wine in one hand and a bag of money in the other and laughing.
That's a better way to put it. I can't imagine what must be going through Mike Dorning's mind watching all this happen. Stay in touch with us, as always. Bloomberg
Great
News,
to be here.
Deputy Congressional Editor. I think he's got a fancier title than that now, but
he just knows all the things.
He's the man around here. That's correct. I'm Joe Matthew with Kaylee Lyons. Let's get a check on world and national news with Nancy Lyons now. To the Bloomberg 99.1 newsroom we go in Washington. Hi, Nancy.
Thanks, Joe. The exchange of gunfire is intensifying in Ukraine as Russian troops push toward Bakhmut. Russia also launched the largest missile barrage since early spring on Ukraine's power grid. The grid operator says the attack left parts of 5 regions without electricity. Well, this ramped-up fighting comes as President Biden hosts Ukraine's President Volodymyr Zelensky at the White House. National Security Advisor Jake Sullivan says Biden today will be offering more support.
President Biden will announce a new package of military assistance today that includes significant air defense capabilities to help Ukraine protect its people. These capabilities will help Ukraine harden its defenses ahead of what is likely to be a tough winter, filled with renewed Russian attacks on Ukrainian critical infrastructure.
Again, National Security Advisor Jake Sullivan. The United Auto Workers Union is weighing an expansion of its strikes against the big 3 automakers. Union President Shawn Fain has said the targeted strikes could hit more plants by noon Eastern time tomorrow if the companies do not sweeten their deals. Yolanda Downs is a union member and says she's ready for the walkout.
I want the levels to be balanced. I want everyone to make a good living and a fair living.
Analysts expect plants that assemble the popular F-Series, Silverado, and Ram trucks to be the next targets in the walkout. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:40 on Wall Street. We do check markets all day long at Bloomberg. The Dow, the S&P, NASDAQ, all in the red, with the S&P now lower by 1.1%. It is on track for its lowest close since June. Mega cap tech stocks leading the way lower. NASDAQ is down 171 points, down 1.3%. The NASDAQ 100 index also down 1.3%. The Dow now lower by 207 points, a decline of 0.6%. 10-year yield 4.46%, with a 2-year that's now yielding 5.13%. Spot gold down $9 the ounce to $19.21, a decline of 0.5%. And West Texas Intermediate crude down 13 cents a barrel, 89.52 right now on WTI, lower by about 0.2%. The leading economic index fell 0.4% in August, down for the 17th month in a row. Dana Peterson is chief economist at the Conference Board.
We're trying to look ahead. And when we look at what's going to be facing the consumer and businesses going forward, we're looking at very elevated interest rates for longer. Certainly the Fed indicated that it's not going to cut interest rates that much next year. Maybe they have one more hike this year, but then only 2 cuts next year. And we're also looking at a situation where consumers are going to have to pay down their debts, and those debts are going to be much more expensive going forward.
And you can hear more of that conversation on the Tate podcast. You can download it wherever you get your podcasts. Cisco Systems shares lower. Splunk is soaring. Cisco buying the software company Splunk in a deal valued at about $28 billion, marking the computer networking equipment maker's biggest acquisition. Shares of Cisco down 4.1%. Splunk up 21%. Recapping stocks lower, S&P down 49, lower now by 1.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Keely Lines on Bloomberg Radio.
What is happening to Ron DeSantis? Don't answer that. We can tell you. He's falling further in the polls. In fact, we have 3 new early state polls that we want to take a look at here that spell trouble for the governor of Florida. And Kaylee, spell success so far, at least progress, for the former governor of South Carolina, Nikki Haley, looming large in all 3 of these polls. These are early state polls, which is why they're important. We can do nationals all day long, but we're actually looking closely here at New Hampshire and Iowa.
Yeah, well, New Hampshire, this is the new CNN University of New Hampshire poll that came out yesterday. Trump's still up top.
Sure.
That's not really what's relevant here as much.
That would not be news.
As what's happening behind him. Because now Ron DeSantis has dropped 13 points from when they did this poll in July. He's now just at 10%. And guess who's above him?
Yeah.
Vivek Ramaswamy, correct myself, Nikki Haley, and Chris Christie. He's in 5th.
This is a fall.
All within the margin of error, sure, but still.
It's a huge move. And this is specifically in New Hampshire, where he's being criticized
for not being
for
there.
spending too much time in Iowa. But listen, this is the job here, right? If you're going to go to 99 counties in Iowa, you need to figure out how to get to New Hampshire because they're basically back-to-back.
Yeah.
In Iowa, Fox Business has a couple of polls out as well showing Nikki Haley doubling in Iowa since the last poll. And DeSantis falling further. In fact, he's 8 points as well in a separate poll here behind Nikki Haley in South Carolina. You would think that would be favorable for her. But there's a trend here for Ron DeSantis. Wendy Benjaminson joins, but looking forward, as always, to spending time with Bloomberg's Washington senior editor, who's always got her eyes on the campaign trail. Wendy, you're hearing more and more people say it's done, it's over. This is Jeb Bush, Ron exclamation point. Is that irresponsible at an early stage here?
No,
or are we not so early anymore?
Well, we're not so early anymore. He did not do all that well in the last debate, and this Wednesday we'll have another debate where we'll see if he practiced a little more and and tried to do essentially what Nikki Haley did, which got her up in the polls this time. She came armed with facts. She presented herself as a conservative, anti-union, anti-abortion rights conservative, but also with a handle on foreign policy and some smarts to counter Donald Trump. Ron DeSantis so far has been just focused on this anti-woke policy, which most voters are not that moved by.
So it wasn't Nikki Haley's Bloomberg interview, is what Wendy's saying.
Oh, I'm sure that was Nikki Haley's
that had a lot to do with it. Yeah.
Well, and she's going to get another chance on the stage. She's one of the candidates that seems to have qualified for that second debate out in California. There's not going to be as many of them probably this time because you need to hit that 3% threshold in polls. And for all our talk of polling, there are some people who are just barely registering still, some of these candidates. How much is riding on that second debate? For Ron DeSantis, sure, as he's seeing his polls go one way, but also for those like Nikki Haley who are seeing them go in the other direction.
Absolutely. That second debate is really critical. You're right that DeSantis, if he doesn't own that debate, I think we can stop thinking too much about Ron DeSantis. I think the trend is there and he's just going to
and the donors may stop.
And the donors are going to stop. The guys, especially Bloomberg terminal readers, do not throw good money after bad. That's how they're in the rich go function on the Bloomberg terminal. And Nikki Haley has to show that wasn't a fluke. Yeah. She has to be just as good and even better. And I think Haley would agree with me that that's how women have to approach every day. But she really has to get out there and be just as good, if not better, than she was before. And DeSantis has to paraphrase a quote from a New Hampshire Republican, get his butt to New Hampshire.
Well, I saw that quote, by the way.
That's a real retail politics state.
He's going to come out swinging next week, right? If he feels like that everything's riding on this debate, it's going to be Ron DeSantis attacking everyone. And they'll all be ready for that because they look at the same numbers we do. Of course, the man who will not be there is Donald Trump, Wendy, and he's making a really interesting move here, going to talk to union workers. Of course, nothing screams Republican like the UAW. Although we have seen polling suggest that the rank and file are voting Republican, he feels he's got an opportunity here. And I'll remind everybody, we've got a Friday deadline that the UAW has put in place. Listen to the language Sean Fain uses in this video in which he announces the deadline to his members.
I have been clear with the big three every step of the way, and I'm going to be crystal clear again right now. If we don't make serious progress by noon on Friday, September 22nd, more locals will be called on to stand up and join the strike. That will mark more than a week since our first members walked out.
I love this music video thing.
My head was kind of bobbing.
Right.
I was going to say, does that soundtrack follow him around from plant to plant? That's awesome.
It's like halftime with Sean Fain. Look, we have no reason to believe that there will be a breakthrough, that strikes will be scaled up, as they say. Does Donald Trump show up there and say, I'm with you, I'm effectively on the picket line with you as a billionaire?
He wanted to go on the picket line, but the Secret Service or his protection detail said the logistics of that were just too difficult for him to be in it. And, as we've learned over the last 7 years, nothing can solve a problem like Donald Trump getting involved in it. But in this case, this is proof positive that this is not the Republican Party that we grew up with. This is a Republican Party who is facing corporate CEOs who are multimillionaires, who should be Republicans, but they're pushing for more electric vehicles. They're pushing for more green policies that will reduce the number of auto workers. In contrast, you have these auto workers who are Trump's base. They're the people who first elected him. Not necessarily auto workers, white, working class men.
Yes.
That's who elected Donald Trump. That's who's on the picket line. I'm not sure how Sean Fain feels about Donald Trump per se, because the union leadership has been with Biden. The union rank and file have been with Trump.
Fain has criticized this. He's denounced the visit. He said he does not want Donald Trump to come, and I'm pretty sure, Kaylee, that will not matter.
Does it ever?
No.
Is
an invitation required?
Thank you for understanding.
And the weird thing is it's a primetime speech, so I don't think they're on the picket lines normally at 9 p.m. in the dark. So.
Yeah, I guess serves two purposes.
Yeah.
You go try to get the UAW endorsement, perhaps.
Yeah.
Also, your counter-programming.
Absolutely.
Exactly right.
All the while, Joe Biden's saying, how come I'm not on the picket line? I'm the union guy.
Wendy, thanks for joining. Wendy Benjaminson, Bloomberg Washington senior editor with Kaylee Lines. I'm Joe Matthew. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. We begin with a developing story and a headline right now from the Bloomberg Professional Service. Blackstone and Permira said to be weighing a bid for eBay-backed Advanta. FedEx, a proxy for global growth, rose up now by 4.7% after a bullish outlook. Profit topped analyst estimates last night. FedEx also increased to the low end of its earnings forecast. While FedEx is up, rival UPS is down 1.1%. Amazon is scrapping a planned fee on merchants who do not use its shipping services, according to documents reviewed by Bloomberg. And with more on that story, here's Bloomberg's Kimberly Adams.
Charlie, the abrupt reversal suggests the company is being more cautious about how much money it tries to extract from online sellers amid an escalating antitrust investigation. Amazon announced the 2% fee on merchants in August, and it was set to take effect on October 1st. The levy was interpreted by Amazon merchants and consultants as a brazen move since the U.S. government is poised to file an antitrust lawsuit against the e-commerce giant. The federal case is expected to focus in part on Amazon's alleged efforts to coerce merchants into using its logistics service services. Charlie?
And that's Kimberly Adams reporting. Darden Restaurants, the parent of the Olive Garden, Ruth's Chris, and Longhorn Steakhouse brands, is seeing more softness among households with incomes above $125,000 compared to last year. That according to CEO Rick Cardenas. We've got shares of Darden down by 1%. Those are our top company stories at this hour. I'm Charlie Pelletan. This is Bloomberg.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
Live from Washington, thanks for joining us. Let's bring you up to date as we do always at this time. Nancy Lyons joins with world and national news in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. While Ukraine's President Volodymyr Zelensky makes the rounds in Washington looking for U.S. aid to fight Russia, Treasury Secretary Janet Yellen is warming to a new plan to aid Ukraine's reconstruction. We got more from Bloomberg's Nathan Hager.
Secretary Yellen says the U.S. is discussing a European Union proposal for a windfall tax on frozen Russian assets. In an interview with Bloomberg reporters and editors in New York, Secretary Yellen called it a reasonable proposal, something that would be different than seizing assets. The Biden administration's been under pressure to take over frozen Russian assets outright, but Yellen says that would be illegal under current law. The EU's legal service came to the same conclusion. In Washington, I'm Nathan Hager, Bloomberg Radio.
There is optimism a deal could be close between TV and movie writers and Hollywood studios. It comes as those out of work held a parking lot flea market in Los Angeles to try to earn some cash. Prop maker Greg Gilday organized it.
I'm guessing somewhere around 60 people or 65 people are selling here today, all in the industry. We've had people that are industry dependent. They're not unionized, but they're accountants just for film production companies, stuff like that.
The Writers Guild has been on strike since May. A deal could be finalized as soon as today. The outlook for the strike between the UAW and automakers is looking less promising. UAW President Sean Fain will make another Facebook announcement tomorrow at noon Wall Street time if a deal has not been reached. It's expected he'll announce additional walkouts, possibly at plants producing more popular models. The torch is being passed at Fox and News Corp. Today, 92-year-old Rupert Murdoch announced he's stepping down following a nearly 7-decade career. His son, Lachlan, will take over CEO duties. Bloomberg media reporter Jerry Smith does not expect much to change.
The news really solidifies Lachlan's control over the entire empire. So to the extent that Lachlan and Rupert are still very in touch, it's hard to see much changing there.
Smith says the older Murdoch will become chairman emeritus of each company. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Joe and Kaylee.
Hi, Nancy. Thank you. You know, we bring you news throughout the day here on Bloomberg Radio and on YouTube. But now this is cool. You can get the latest news on demand whenever you want it. And to that end, you must subscribe to Bloomberg News Now to get the latest headlines at the click of a button, Kaylee. Get informed on your schedule. This is on demand. You can listen and subscribe to Bloomberg News Now on the Bloomberg Business app at Bloomberg.com, plus Apple, Spotify, anywhere else you get your podcast. So when you go to subscribe to the Sound On podcast, I've got something else for you to get done there.
Okay.
Bloomberg News Now. We are in an on-demand world, Kaylee. You don't need me to tell you that.
No, but we do need you on demand.
Well, yeah.
Right?
I guess. That means we
and
work
everybody else.
24 hours a day. When you call, we're there. And that's going to be the case, apparently, for a bit, because we're waiting for some kind of a break in this government funding saga. And Kaylee and I are hearing a lot of weird stuff about what might or might not happen in the next couple of days. I do wonder if we get a vote on this thing, if there is a thing to vote on Saturday.
We'll see if it is a working weekend. All we know for sure, Joe, is what the deadline is, right?
Yeah.
We got 9 days till
9
September
days
30th?
out. Yes, indeedy.
To figure this out or not.
Because if they go home this weekend, they'll have essentially, 3-4 days to figure it out next week.
Yeah, because they're off Monday for Yom Kippur. And then it's Saturday. That's when the clock runs out. No more sand in the thing. What's it called?
Right, the hourglass.
Yes.
Like sands through the hourglass, Kaylee, so are the days of our lives.
Oh.
Now this, I'll tell you what, that doesn't mean you can't have fun around here. We live in the nation's capital. This is what we do, everybody. And I'll tell you, look at the calendar. You see what day it is. This just started playing in my head when I woke up this morning. and now it's yours for the rest of the day. Uh-huh. 21st night of September. Yes. We disco our way out as we hand the baton back to New York. Bloomberg Business Week starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
What about to that music? That was kind of fun.
Joe and Kaylee having fun.
Kaylee like bopping it.
Yeah, that was cool. It's a great show. You got to listen to that show.
Party on, man. We're going to party on for the next 3 hours.
If you're not like along this market, you can party.
Hey, where there's a long, there might be a short.
Okay.
Got to remember, right? Welcome, everybody. Bloomberg Business Week on this Thursday, September 21st, 2023, live in our Bloomberg Interactive Broker Studio on YouTube and, of course, on Bloomberg Originals. 24 hours, Tim, since that last Fed decision. S&P at its lowest level since June in 3 months. We're going to talk a lot about the trade today. And yes, equities, but it's really because of what's going on in terms of the inflation picture and really the interest rate picture.
Yeah, with that in mind, a lot of focus on the Fed and the rate picture today, including what former St. Louis Fed President Jim Bullard says the Fed may still need to do. Does that have something to do with today's moves, Carol?
I don't know.
I woke up to that news.
I think the Fed said, hey, folks, we get a little reset. You think we're going to cut rates soon? We ain't. So I think you're seeing that play in.
Former St. Louis Fed president.
Yes. But remember, he was the one who was like, banging on the drum saying, wait, we got inflationary problems. We got to deal with it. So he was out there front and center. So he's an important voice. We're also going to get into what traders believe are the next actions for the U.S. Central Bank. We'll do that with Ira Jersey. And then the Fed's dream of that Disney-like soft landing is facing a bit of a triple threat.
Yeah, we had a little preview.
And we're not talking about dancing, singing, and acting.
All I'm saying is we had a little preview of what's to come yesterday from Yelena Shalietova and also Stuart Paul, who joined us. I feel like after that conversation, this article is just perfect.
It's perfect. Frank Sorrentino is going to be with us, Chairman and CEO of Connect One Bancor. Speaking of perfect guests, thank you, Paul Brennan, our producer. He's going to talk about rates, lending, the business environment, especially small businesses, medium-sized businesses that they play into. Really important voice for us.
Also, it's the end of a media era. Rupert Murdoch stepping down as chair of his empire.
Wait, are you watching Succession?
I've already watched it. This is like real life Succession.
We're going to get into that, what it all means. We're also going to, we're talking a lot about banking. Speaking of that, we have got someone who is really working to connect the really, really underserved. We're talking about Tara Nathan, founder and leader of MasterCard Community Pass. We'll get into the work that they are doing. And then we've got someone who's on the Time 100 list of the next 100 most influential people in the world. Love what she's doing.
Hey, I'd listen to this program.
I would too. And then we've got the Moby Dick of deals from Cisco.
Oh, yeah, that's a big one.
Don't go anywhere. We've got lots to come. Right now, though, we're heading over to our TV colleagues, talk about the markets. That's because Countdown to the Close starts right now.
Countdown to the Close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the Countdown to the Close. Romaine Bostic in Washington, Katie Greifeld in New York. We're joined right now by our colleagues Carol Masser and Tim Stenivek. Welcome to our audiences across all of our Bloomberg platforms as we count you down to the close. Markets really on the back foot here, Carol. An S&P 500 that could not hold that 4,500 level, an elevated VIX, Treasury yields all over the place. But they tell me, Carol, you want to talk about wine.
You set yourself up for that one, Carol. This was your choice.
I did talk to the producers. Listen.
I'm having trouble hearing you.
Listen, you may be down in Washington. Maybe you're meeting with Jay Powell. I don't know. Maybe you're trying to make more sense, digesting, deciphering
I think
what
he
the Fed
wanted
had
to
to
get
say.
away from me. I'm not quite sure. I'm lonely
Never.
on this
Nobody
side.
would want to get away from you. All right. Anyway. We still have a lot to talk about in the Fed. We're going to get into that soft landing idea in just a moment because you guys are actually talking about something of substance. What I want to talk about is Darden coming out, right? Out with their earnings. They did beat, but the company's officials coming out and saying what's
happening among their richer clientele, those I think making what? About
$125,000 a year and more.
They're trading down when it comes to what they're drinking, what kind of wines they're choosing.
This is actually
an economic indicator.
It is. It actually is important stuff, and it tells a bigger picture about the consumer. The story that it tells, though, we don't actually know, Romaine. I mean, the company said, okay, maybe some of these people who are trading down could have spent money on traveling to Europe over the summer. We know a lot of people did that, or perhaps the exuberance of 2022. You know, we're beyond that, but the company says it's not going to make any major changes or do any big discounts as a result of this. They're just saying, hey, we're seeing this pattern, and it might not be with us for the long run.
It's a reminder that the pocketbook is not endless for even some on the higher end of the income spectrum. Right?
Yeah, I mean, I tease you about this, but we speak to Darden a lot and Dine Brands and a lot of these chains here. And I do think it's interesting. They're all they've been saying the same thing. The idea that people are still coming in to eat and to drink, but they're not necessarily buying the more expensive items or buying as much here. And yeah, maybe that becomes the consumer spending story or lack thereof later this year.
Which, of course, feeds into the broader economy and this idea of a soft landing, that maybe it won't be so painful, the cost to get inflation down. Of course, we heard from Jerome Powell yesterday saying that soft landing, not the baseline expectation. It was interesting to see this article from some of our Bloomberg Business Week colleagues. You can see that chart there. If you look at media mentions, soft landings, it spiked, I guess that's 2002, 2003. It spiked, I would imagine, around 2007 or so. It's spiking now, but those yellow bars that you see, those are recessions around this current spike that we're living through. I don't know, maybe we'll see another yellow bar, maybe we'll actually pull it off.
I guess. Can you do that same chart for us, Katie, but with hard landing instead of soft landing? I'm curious, or maybe no landing. What does that look like?
I don't know. I would love to run this chart on no landing mentions, because I'm still trying to work out what that is.
The story makes a really good point, though, that there's a lot happening right now at the exact same time that's out of Fed Chair Jay Powell's control. He talked about some of it yesterday, UAW strike. We have resumption of student loan payments, potential government shutdown. These are all things that could affect whether or not the U.S. sees a soft landing, and
energy prices.
Energy prices spiking. I mean, this is like a quadruple threat.
Here's why we care. Bloomberg Economics, Anna Wong, hold on, shows that since the early 80s, consensus predictions that the U.S. economy would achieve a soft landing have peaked right before the economy started to sour. That's why we care. Go ahead, Romaine.
Okay, I care too, Carol. Thank you. No, I got nothing. I mean, you stole my thunder there. By the way, last time I should point out, last time I went drinking with Carol, I think what? Yeah, we're not on the same page. But I was going to say, last time we went out drinking, I think Carol ordered like a $200 bottle of wine.
Actually, I believe you ordered a 200, maybe even two.
Wait, why wasn't I invited to this dinner?
Don't rat me out.
I'm like, I know. I'm like, do you need my credit card?
I don't care who ordered what. I just wasn't there. That's not cool.
Just saying. What happens in restaurants should stay in restaurants, I guess. All right, guys, we're going to be back. Our cross-platform coverage, we're all over the place. We're in New York, we're in Washington, and we're going to be back, of course, on TV, radio, also on our streaming service, Bloomberg Originals, and, of course, on YouTube. Don't go anywhere, because we're going to count you down to the close on this Thursday.
Yeah, I mean, still trying to make sense of it. I know certainly the bond market and the equity market is trying to make sense of it as well. We're continuing to talk about the top voices on the Fed and the interest rate picture. Our team reaches out to the likes of former Federal Reserve Bank of St. Louis President Jim Bullard, who talked today with our own Bloomberg's News international economics and policy correspondent, our Fed guru, who's still in Washington after attending the Jay Powell presser, and asking him what many would say, Carol, was such a key question.
Absolutely. Mike, in our D.C. bureau, as you said.
Oh, that's who we're talking about?
Yes,
Michael
we
McKee.
are.
Okay.
Michael McKee. And we've got Bloomberg Intelligence Chief U.S. Interest Rate Strategist Ira Jersey. He's on Zoom in New Jersey. Hey, Mike, let's start with you. 24 hours after that FOMC decision of yesterday, how are you thinking about the news, what we got from the Fed in terms of updated projections and the Jay Powell presser? Any questions left unanswered for you?
Well, there are a lot of questions left unanswered, which I think Ira would agree with in terms of where the Fed is going from here. It's a little bit like a jungle overgrowth. You have to cut through a lot of the verbiage and a lot of what are seen as forecasts but aren't exactly forecasts from the Fed to try to figure out where they are. My takeaway from it all is that the Fed is, barring any kind of surprise, done with raising rates. They think they are, at this point, probably restrictive enough, and then as inflation comes down, real rates go up, and they stay restrictive and maybe even get more so. But they're definitely in the soft landing camp now. They think they can pull this off by bringing inflation down without a big jump in unemployment and without the economy going into recession.
Mike, can they pull this off in your experience covering the economy, in your experience of covering the Fed? Like, is this going to happen? You look into your crystal ball for us.
Well, as an economist would say, there's not a statistically valid sample here. The number of recessions that we've had and the number of times the Fed has raised rates to head off inflation, just not enough to be able to say with certainty what's going to happen. It is true that they have not been able to pull this off in the past except for 1994-95. And so the thinking has been among pretty much everybody on Wall Street and in the economics community that you'd probably end up with a recession because that's what always happened. But everything has been so weird with the economy coming out of the pandemic that there is certainly a chance that this could happen, because it may be that the kind of inflation we got was pandemic-induced and not the kind that you would get when there's a normal kind of wage price spiral that the Fed has to clamp down on really, really hard to get it to stop.
Yeah, the pandemic impact still lays on over everything. I feel like it's a layer over so much in our world still in terms of how we think. Hey, Ira, come on in on the trade. 10-year rates set for their highest since October of 07. 2-year yields dropping back a little bit today. That differential, though, between the 2 and the 10 has narrowed. Talk to us about trader expectations and indications following that Fed decision.
Yeah, so the curve is actually steepening quite a lot today, right? So the 2-year and 10-year is about 10 basis points steeper, with 2-year yields lower and 10-year yields higher. What's a little bit surprising to me about the trade in the rates market is that the 5-year yield hasn't moved significantly higher yet. Yesterday, you saw 2-year yields move up quite significantly because of the change primarily in the dot plot. Just the idea that the Fed's not expecting itself to cut interest rates quite as much as it originally had, and then continue to cut very modestly even in 2025. So the move in 2-year yields was completely intuitive. It made a lot of sense. In fact, my fair value model suggests we should be at around 5.1% on 2-year yields, so we're close enough there. But 5-year yields are too low if the Federal Reserve is going to be on hold for any significant period of time and not cut interest rates aggressively anytime in the next 2 or 3 years. So I think that the fact that we're just selling off and steepening, I think it's almost like a herd trade today, as opposed to anyone looking at, hey, where is actual value on the curve, or no value or less value on the curve. So you're seeing this weirdness. And I have to say one thing.
Yeah.
We came in with Billy Joel. That's my green bar. That Billy Joel is my green bar. The good old days weren't always good, and tomorrow ain't as bad as it seems. And that's what you've seen. I think to Mike McKee's point about the economy and certainly the Fed yesterday, the future doesn't seem so bad given the data that we've gotten. Today's claims numbers and all of the data, even the retail sales data, even though things are slowing, they're not slowing quickly enough that I think you have to worry about an impending recession.
All right, by the green bar, we mean our message 9. So that means if we message people internally on the Bloomberg terminal, we all can kind of put a little message in there. And Ira's is, good old days weren't always good, and tomorrow ain't as bad as it seems. So hence the Billy Joel. Hey, Mike, come on back, because speaking of maybe not so bad, I feel like your conversation with Jim Bullard talked about maybe things not being so bad in terms of economic growth. We have a little snippet of Mike's conversation with the former head of the St. Louis Fed, Jim Bullard, earlier today on Bloomberg. Let's listen to that first of all.
The committee left the additional rate hike this year in the dot plot. I think that may be a good thing to do as insurance to make sure that core inflation especially continues to come down. I think the risks are building that inflation could hang up at a higher level or even go higher based on the idea of a reacceleration in the U.S. economy.
And that, of course, is the former president of the St. Louis Fed, Jim Bullard. Mike speaking to him earlier on Bloomberg. Mike got a green bar, message 9 for the Bloomberg after that conversation with Jim?
Well, I would put up dots go, I guess, for those with Bloomberg's. And if you click on the button that says previous, you can see a comparison between the dot plot in June and the dot plot that they just released. And in that June one, there was one lone dot all by itself, way at the top, at 6.25%. That was Jim Bullard. That's disappeared now, but his view of the economy has not really changed. He thinks that things are strong enough that you could see inflationary pressures generated by the low unemployment rate and the seemingly inexhaustible consumer demand. And so the Fed might have to do more. He's not arguing that they needed to do it yesterday, but he does think it's good to have, as he said, as an insurance policy.
Hey, Ira, come on in here and just give us an idea of what's going on with the 10-year. As Carol mentioned, Carol, what hyacinths go back all the way back to 2007 at this point. Is this a return to normal for the 10-year? Is this where things are supposed to be when it comes to yields?
And 07 was the great financial crisis. So, I'm trying to get my head around it because it does not feel like that.
Well, remember, Carol, it was back in 07 before we had the massive rally when the financial crisis started, right? So you're talking about the first half of 2007 when things were chugging along and slowing down, but it didn't seem like we were in a crisis mode yet. And the Fed really didn't start to cut super aggressively until the spring of 08, right? So so you really didn't see the rate rally until late 07 and into 2008. In terms of, are we normal right now? Pretty close. We're getting there. I think when you look at things like real yields, you look at TIPS yields, for example, at a little over 2%. That's still lower than what we had in the 1990s and the early 2000s. Was that normal? No one really knows because we didn't have TIPS until the mid 1990s. So, but it does seem like somewhere around 2% might be, normal probably over the long term for TIPS yields. So I think real yields are probably where they need to be. I would suggest that maybe the 10-year yield ultimately will rally a little bit. And one of the reasons that you're seeing such a big impulse today is we broke through a very important technical level late yesterday on pretty light volume at after 4 o'clock, after Jay Powell spoke. So that's 4.35% was a pretty important technical level. Now that you've broken that, you have a lot of kind of weak hands, I think, selling. So a lot of this is stop loss selling, I think, and people just getting rid of duration after some technical moves following the hawkish Fed yesterday.
Ira, really quick, do you have a target in mind though on that 10-year that you're keeping kind of on your radar? Just quickly.
I'm still looking for 4% at some point. Ultimately, if Anna Wong and her team are right, and we do get a recession or at least a significant slowdown in the economy, it would be hard to see a massive trend. 4.72% is the next really important technical level on the 10-year.
Hey, Mike. Speaking of data points, we got some data on unemployment benefits, lowest level since January. Job market's still strong.
Job market is still strong. These may have been distorted somewhat by the Labor Day holidays, but the important thing to keep in mind is that starting next week, we may see some real distortions in the jobless claims, because if you're on strike, you're not eligible for jobless benefits. But if your factory's closed down because some workers are on strike, all the other workers are eligible for jobless benefits. They didn't have time to start filing last Friday because it was just the end of the week when the strike began. Yeah. But starting next week, we might see some real distortions, and that won't tell us much about the labor market.
You guys, so cool. We so appreciate it. Bloomberg Intelligence Chief U.S. Interest Rate Strategist Ira Jersey, and of course, Bloomberg News International Economics and Policy Correspondent Mike McKee.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. Post-Fed fallout. We've got stocks at the lows of the day, and this update brought to you by Glenmead. Glenmead offers sophisticated wealth and investment management solutions combined with the personalized service you deserve. Your wealth, your mission, your investment. Let's talk. Visit Glenmead.com to learn more. Stocks lower across the board. Treasury 10-year yields climbing alongside the dollar as the latest reading this morning on the labor market. Jobless claims reinforces the case for the Fed's higher for longer stance. 10-year yield 4.47%. The 2-year yield 5.13%. S&P 500 index right now down 60 points to 43.41, a decline of 1.4%. Dow Industrials down 275, a decline of 0.8%. Nasdaq is down 210, a drop of 1.6%. Spot gold down $9.50 the ounce to $19.20, a drop of 0.5%. West Texas Intermediate crude down 6 cents now, 89.60, back below $90 a barrel, down by about 0.1%. Tech stocks are leading the way lower today. Lori Calvasina is head of U.S. equity strategy at RBC Capital Markets, and she was interviewed this morning on Bloomberg Markets.
I actually like tech longer term. I'm keeping my overweight on. We do those calls on a long-term kind of 12-month view, but we're acknowledging that there are some tactical problems here. And so you take that crowded overvaluation situation with the growth trade and you slap on all this talk of higher for longer, it gives you a catalyst to rotate out of something that probably needed to take a breather anyway.
And you can hear more of that conversation on the Markets podcast. You can download it wherever you get your podcasts. Among mega cap techs, we've got NVIDIA down 2.7%, Alphabet down 2.1%, Meta Platforms down 0.8%, Apple lower now by 0.6%. Cisco buying Splunk. More on that story coming up in a moment, but Cisco down now by 4%. Splunk is up 21%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really do appreciate it. Get the latest news whenever you want it with Bloomberg News Now. Top stories from our global team of reporters at the click of a button. Get Bloomberg News Now on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
All right, so I'm going to take Tim just kind of pointing out there was some great writing in a story on that Cisco Splunk deal today. It says, if the deluge of data...
I got to give Charlie Pellet the credit here. He's the one who told us this.
He did. Charlie...
I think he's left, but but we love you, Charlie.
Well, Charlie, we love you. All right, so if the deluge of data in the modern world is increasingly overwhelming, Splunk claims to have been ready for it for 20 years. The company's name reflects the act of burrowing deep down into the earth to explore caves, the adventure of data spelunking. And so Charlie, of course, just talked about this deal. We're talking about this because Cisco did its biggest ever deal, and it bought Splunk.
$28 billion for a company that was started by three friends back in 2003. The co-founder and ex-chief CEO of Yahoo drawing on his past, or I should say ex-chief executive officer drawing on his past building search engines at Yahoo.
We just talked with him.
Yeah, it's really cool.
It's a very cool company, right?
Yeah.
Does it make sense for Cisco?
I don't know. Cisco shares are down more than 3.9% right now.
All right, so let's get into it because they're paying $157 a share in cash, 31% premium to Splunk's closing price yesterday, and the purchase represents roughly 10% of Cisco's market value. That feels like a lot. With us is Bloomberg Intelligence Senior Technology Analyst Woo Jin Ho. He's on Zoom from BI headquarters in Princeton, New Jersey. Woo Jin, thank you for being back with us. You described the deal as the Moby Dick of deals that's been talked about for quite some time. Tell us more on what it means for Cisco.
Sure. So I think you characterized it fairly well, right? Splunk actually burrows really deep and try to fairly understand an enterprise's data. If you think about where all the data traffic flows through, it has to go through one of Cisco's boxes. So Cisco is trying to help their users and customers better understand the data that goes through their boxes. And now they can monetize the information that goes to their boxes via a Splunk deal.
Okay, so explain what that means for, someone like me. Carol's also, I think, in this camp because she's looking like, okay, what's going on here? How does that work?
Why does Cisco need this? Is it just a case of making everything more secure and that's crucial?
Well, it's all about network visibility, right? I don't know what is going through point A to point B, if there are good guys or bad guys going in point A to point B, or even something a little bit more benign, such as how much YouTube is going through my network, or how much social media is going through my network, and you want to
But
better
wasn't
manage that
Cisco
data
doing
traffic.
this before? Forgive me for interrupting, but wasn't Cisco doing this before Woojin, or no?
They were, they are.
Okay.
Right. The issue is that they want to better understand the data traffic patterns that are going there. Now the challenge for Cisco is how do they make a software deal large enough, or the software business large enough to make it more meaningful as part of their business transformation, and that's one of the reasons why they made that this deal. It was a business decision as much as a technology decision.
How do you explain this price? This is quite the premium. 31% premium to the closing price on Wednesday, $157 a share, 10% roughly of Cisco's market value. Cisco shares down close to 4% right now. How do you explain the deal size?
Well, I'm actually quite comfortable with the deal size. If we walk away from the actual $28 billion on the largest deal that Cisco has ever made, Cisco rarely does large software acquisitions. They make small software acquisitions and try to tuck it in. What they've learned is that it hasn't been successful in driving what they want to do on the recurring revenue side. They need to pay up a software valuation. And if you look at traditional software M&A metrics, this Splunk is going at 6 times forward sales, and faster growth software companies typically go anywhere between 8 times to 12 times sales. So you're getting a lot of good value from the sense of recurring revenue base, which is something that Cisco has been trying to grow over the last couple of years, and you're getting that with Splunk. You're getting a high margin software revenues, and you're getting that from Splunk. And one of the reasons why Cisco could not get into the software business was because everything was just so darn expensive back in the pandemic days. And now they found the window with the valuations coming down.
So explain the share price reaction from Cisco right now. And granted, we're having a down day across the board for tech companies.
But not that much.
But not that much.
Yeah, 1.6% lower than
fair question. So I was running the math, and it's actually the deal is going to be diluted for the first year by about 2 to 3%. So that's going to explain that a little bit. That's one. Number two, when I was listening to the conference call earlier this morning, I think some of the analysts wanted a faster growth software company with more modern network architecture. The one criticism about Splunk is that they still cater to the legacy older technology and making that transition to modern clouds, and it's a slog, right? These transitions don't happen overnight. These are multi-year transitions. But for Cisco, that's okay because they still have a lot of customers on older technologies also trying to make this move to the modern cloud. So Splunk will give them a little bit more growth, faster growth. About 100, 200 basis points, and they get the software that they want. If we look at it from a growth perspective, Splunk is growing at around 12% based on consensus forecasts, and Cisco is growing at 1% next year, steady state 5%. So it's a win-win for both companies.
Do we need to see Splunk's CEO, Gary Steele, stay with the company? Is that crucial, important in your view?
In the interim, yes. If we think about where Splunk is going to sit in the Cisco ecosystem, we're talking about roughly 8% of total revenue, and it's going to be 5 times the existing software revenue, the observability piece, right? So they'll need somebody to help manage the integrations, I suspect, and also help the Cisco sales force, who will need to wrap up fairly quickly on selling the Splunk products.
I know you don't say to our audience, yeah, this means it's a reason to buy or sell Cisco, but does it make Cisco a more attractive company? Because I think they've been working on a transformation of sorts and maybe trying to be more relevant.
Right, and thanks for that disclaimer. The one thing that I can say is that what I've noticed from other hardware companies that have made this transition from perpetual sales to recurring revenue sales, that could drive valuation expansion, multiple expansion, because of the reliability of cash flow.
Do you think Cisco's done making acquisitions for a while?
Oh, I don't think they're done making acquisitions. What I do think they'll do is try to digest Splunk and make several smaller acquisitions around it, whether it's adding more semiconductor technology or some hardware technology or even more software technology, but maybe in the hundreds of millions instead of the billions.
But this is one that moves the financial needle, correct, for the company, for Cisco?
Yeah.
And builds out some business.
Exactly. So if we think about it from a software revenue perspective, I said it's 5 times their five times the size of their existing enterprise software base, but their overall software mix is now going to go to roughly about 35% of total sales, 35 to 40% of total sales, and that's a good thing.
Hey, really quickly, forgot, totally spaced. 15 seconds. Any regulatory problems with this one? Really quickly.
Nope. Very little China business. It's going to go through 1% overlap. No issues.
That was quick. Ask and you shall receive.
Nope. You listen, man. I love it. Love it. Bloomberg Intelligence Senior Technology Analyst Woo Jin Ho joining us on Zoom from BI headquarters in Princeton, New Jersey. Woo Jin, thank you so much. And as Tim mentioned, Cisco shares under pressure. No surprise, though, often as the acquirer, but it's also in a down market.
Well, let's get a check on the latest world and national news. Let's go to Washington, D.C. to our 99.1 newsroom where we find Nancy Lyons. Hey, Nance.
Thanks, Tim. President Biden is welcoming Ukrainian President Volodymyr Zelensky this afternoon at the White House. Zelensky has been meeting with lawmakers and Pentagon officials as he makes the case for more U.S. aid. The Pentagon's General Pat Ryder says President Biden will be offering more support during this afternoon's meeting.
What you can expect the package to include will be more air defense and artillery capabilities to support the Ukrainian armed forces.
Ryder says Defense Secretary Lloyd Austin assured Zelensky the U.S. and its allies are still behind him. Well, it's happened again. The House has failed to advance a Defense Department spending bill after several GOP lawmakers voted no.
On this vote, the yeas are 212, the nays are 216. The resolution is not adopted.
It's a major black eye for Speaker Kevin McCarthy, who has criticized his own members for taking down votes proposed by their own party. He says it looks like some just want to burn the whole place down. It's looking more and more likely there will be a government shutdown if hard-right Republicans refuse to compromise. Government funding runs out October 1st. A changing of the guard at Fox News and its parents' company. We get details from Bloomberg's Steve Rappaport.
Rupert Murdoch is stepping down as chairman of Fox's parent company and his News Corp Media Holdings, but the 92-year-old will maintain a presence as chairman emeritus of both companies. Fox says Murdoch's son Lachlan Murdoch will ascend to chairman of News Corp and retain his role as Fox Corp CEO. Lachlan, in a statement, expressed gratitude that his father will stay on to provide counsel for both companies. Rupert Murdoch got his start with a small newspaper in Australia and worked his way up to a global media empire with a vast portfolio that includes the Fox News Network, the Wall Street Journal, and television properties in the U.S. and the U.K. Steve Rappaport, Bloomberg Radio.
Global news 24 hours a day. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. The slide is getting uglier. We do check markets all day long here at Bloomberg. S&P 500 breaching a key level. The Dow, the S&P, NASDAQ, all in the red right now. Let us head over to the first word breaking news desk for today's afternoon call with the very latest. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks under pressure from the start today, with the Dow currently down 322 points. S&P's dropped 63, and NASDAQ is down by 1.6%. The U.S. 10-year yield at 4.48%. Gold is down 9. Oil trading little change, and Bitcoin is lower by 1.9%. Among the main 11 S&P sectors, all were trading in the red, led by declines in real estate and consumer discretionary. And leaders to the upside in the Dow, UNH and Disney, while Dow Inc., Salesforce, Caterpillar, and Nike each fell 2% and led to the downside. In deal news, Cisco to buy Splunk for $157 a share in cash. And in other news, Rupert Murdoch is stepping down as chairman of Fox and News Corp. Wrapping things up, Broadcom fell on a report that Google is considering dropping the company as a supplier. Live from the first breaking news desk, on Bill Maloney. Charlie?
Very much Bill Maloney. Lots going on. Bill's got us covered into here live. Breaking news over your Bloomberg. Type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just looking through a right-through here on the Bloomberg. We've got stocks falling toward their lowest since June. I got the 10-year yields climbing. Latest reading on the labor market, reinforcing the case for the Fed's higher for longer stance. S&P 500 right now, as Charlie mentioned, down about 1.5%. Tim, all major U.S. equity benchmarks breaking below their 100-day moving averages, seen as a bearish signal by some technical analysts. So there it is, folks.
You know what looks pretty good right now?
That looks pretty good.
Money market funds that yield over 5%.
Exactly.
I don't know.
Why wouldn't you, right?
Why wouldn't you?
Exactly. Well, let's see what Hillary Kramer has to say. She's back with us. She's CIO at Kramer Capital Research. She's here in our Bloomberg Interactive Broker Studio. Great to have you back with us. Why wouldn't you just throw everything in a money market right now and just don't worry about, just take all the risk off the table and just go all in?
Well, I have to say that you really do want to keep your powder dry, and it is an opportunity here. The notes I sent early this morning were, I think, a lot more optimistic than as the market started to unfold today, and I saw the bond market, leading stocks lower, and stocks in general are really weak, and it's really about earnings season. And interesting, it's the banks, especially the regional banks. These depositors are drying up, and that's one of the data points we were looking at this afternoon. We used to love U.S. Bancorp.
Right.
Love it. We won't touch it right now.
We're actually going to be speaking in just a few minutes with the founder, chairman, and CEO of Connect One Bank, Frank Sorrentino. We love talking to him because regional banks are just a great read on the U.S. economy. And he can tell us, he can answer that question. Are depositors actually fleeing for high-yielding interest accounts?
And I just want to mention the KRE, the regional bank ETF, it's down about 27% year to date.
Yeah, and it may drop even more than that because we're just talking about depositors. What about credit quality? What about origination? Okay, it's going to take a long time to get from 7.5% mortgages down to back 4% mortgages. It doesn't just happen overnight.
So don't buy banks right now?
I would not be looking at the banks. We're going to really look to the banks to see what they have to say and what kind of color they give us on the market when they start to report earnings. And then, just think about something like restaurants. Like Cracker Barrel used to be a go-to stock. It's in the toilet. There's just no other way to put it.
Well, so what's the conviction you have in a market like this? We keep talking about what's going on with the Treasury trade, and we're talking about what the 10-year back to levels we saw in 06, 07 actually. And this just before everything started to come undone in the great financial crisis. I keep saying it doesn't feel like the great financial crisis, but it does feel like there's there's a lot of ifs out there. So I don't know. What's the conviction you can have in this market
The
for either buy or not buy?
Well, there's conviction always to buy to some extent, and that's where portfolio management obviously comes into play, and making sure that you pick your points, go in slowly. But there are still opportunities out there. Yesterday's earnings, I thought that General Mills, looked really good. It was at 20% off of its highs from the year. So some of these food stocks look pretty good. We've seen just some stocks that fundamentally are good but have had issues like 3M, with their big lawsuit that they just settled.
So does that mean stock pickers market or what?
Oh, totally, it's a stock pickers market. Now, that being said, so many investors, including some of the large, smart investors, don't realize the extent to which these Magnificent Seven have just simply been up because everyone buys ETFs, and that's why Apple and Microsoft and Amazon continue to rise. And even today, I think Microsoft was up actually a little bit middle of the day. Where is it right now? It's probably about even on the day. Apple was doing okay, and that's because there is still that.
Microsoft's up about 0.25%. It was up about 1.4% earlier in the day.
Yeah, and there we go. That's pretty good. I think
But help me out here, because if I bought NVIDIA in January and I'm up 182%, I'm pretty happy.
That's not bad, Carol.
I was talking to my brother. He's like, yeah, I bought it back in 2020. I was reading about it. I'm like, good for you, buddy. And he's like, I'm really happy. So I'm just wondering,
How come you're not like your brother, Carol?
I can't really pick and choose stocks so easily. Doing this
That's why
job.
we do this.
Yes, exactly. So I'm just I hear, I don't know. What is this? What your clients tell us what they are doing and what they are concerned about, or what kind of calls you're getting from the folks that you either help manage money or give advice to.
They're sitting on their hands, and many of them are looking to sell. They're looking to liquidate. Remember, we have a very different demographic today where the next generation, whether it be lower, middle, or upper class, the parents, are paying for those that are, young adults, and there's a need for liquidity. There's a need for money that we didn't used to have in a previous time. But as a stock pickers market, we've had a stock, I still think
that sounds to me very bearish.
But it's bearish. But remember, the Fed is going to come in and save the day. They're going to slash rates.
When?
No, they're not. No, they're not. The Fed, I thought Jay Powell was really clear yesterday.
That he might even tighten another quarter percentage point. But at the minute we have clarity.
Higher for longer. Do you think he's just over optimistic? Who thought he is? Former U.S. Treasury Secretary Larry Summers thinks that basically the Fed is, drinking the soft landing Kool-Aid.
The Federal Reserve is trying to play mind games.
Telling our David Weston that,
the Fed is playing mind games. I thought it was very interesting. I thought Powell was just so vague yesterday. It was very disappointing to hear him not wanting to really answer the questions in the Q&A the way he should have. But what we will see is we're going to see maybe a little bit of a bounce up, but I think we're going to see the market come back down. We're going to have, a drawdown that could be 5 to 7% over a 2 or 3 day period.
Rival what we saw last October.
That's not so bad. And then he comes in, and that's when we see that because he's overdone it.
But when he says he's data dependent, he's not watching the S&P 500.
Labor market's still tight. We got another reminder of that.
Exactly. And CPI's, PCE is not to 2%.
Right.
Okay. Well, that's something else. It's interesting, Carol. You just brought up the labor market. As soon as we see some layoffs start to happen, that's when the consumer becomes undone. That's when all bets are off, and that market starts. We could see it between now and December 31. I mean, I think that there might be some gearing up. We saw Amazon hiring 250,000 employees for the holiday.
$20.50 an hour as an average wage. That's a lot of money.
Right, but AI technology, many of those jobs has really taken a lot of people out of the market.
We know the packages delivered with drones. Yeah, Hillary.
we know that the financial industry is really in dire straits right now and is actively laying off, regardless of what we hear. We hear it in little bits and pieces, but there aren't those jobs out there. But the consumer is really going to get nervous. Look, Home Depot and Lowe's. Here's another proof I can
Real
have
quickly,
for you.
got about
Okay,
15 seconds.
Home Depot and Lowe's doing terribly today. That's proof that everyone knows you're not going to move a house in a 7.5% mortgage environment. You're just not going to, and it's not even worth trying to fix up your house to sell
unless
it.
you just had another baby. Because that's what we're doing.
Although I know,
We're
right,
moving.
you are,
Did
but
you
I
go?
know somebody
You just
else.
have another
I know
baby. Okay, so
somebody
you're
else is
moving.
looking, and they're like, "There's no inventory." Hillary Kramer, CIO at Kramer Capital Research. Be well. Thank you.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. 7 minutes to go ahead of the closing bell. Lows of the day right now. We're watching markets. S&P down 68, down 1.6%. Broadcom on track for its biggest decline in 3 weeks, following a report that Alphabet's Google is considering dropping the company as a supplier of artificial intelligence chips as soon as 2027. And with more on that story, here's Bloomberg's Denise Pellegrini.
Charlie, the information is citing sources saying Google executives had set a goal earlier this year to move away from Broadcom after a prolonged standoff over the price it pays for chips. And separately, the search engine giant has worked since last year to shift to Marvell technology for chips that connect servers to Ethernet switches. Tech companies, including Google and Microsoft, they have poured money into developing AI models, helping fuel a boom among semiconductor makers that can produce chips for the technology. And Broadcom Chief Executive Officer Hock Tan had told investors in June that he Unexpected AI-related chip sales, Charlie, could account for more than a quarter of the company's revenue soon.
And that's Denise Pellegrini. Shares of Broadcom right now down 2.3%. Alphabet, parent of Google, lower by 2.2%. Cisco Systems buying Splunk. It's a software company. The deal valued at about $28 billion, marking the computer networking equipment maker's biggest acquisition. Cisco shares, they're lower on the news, down 3.9%. Splunk up 20.7%. Those are our top company stories, and this is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
All right, everybody, just got about 4.5 minutes left in today's trading session. Yeah, I know.
Okay. Wow.
There's a lot going on. We're still kind of digesting everything from that Fed meeting yesterday and Fed decision. An update on projections, but it's really been about the Treasury trade and maybe the rethink in terms of valuations on the equity side of things. If we are in this higher for longer environment, what does that mean? And what if we get these growth projections wrong? What if it isn't a soft landing?
It's really interesting that Hillary Kramer thinks rates are going to be cut soon.
Yeah, she's
very bearish.
Yeah.
Very bearish.
Yeah, I thought so.
I feel like this has been a really bearish week in terms of commentary.
Why? Why do you say that?
Notwithstanding, just a lot of our guests this week have been a lot more careful in the way they're talking about the outlook, at least in the near term.
It's really funny because it was like, I feel like everybody was beating the soft landing drum.
That was like 2 or 3 weeks ago.
Like forever. Then all of a sudden it's like, well, maybe not.
Maybe it's a consensus thing where they're like, okay, if everybody's saying this, then it can't be right.
Got real things going on, right?
Yeah.
You got Hollywood strike. You've got car strike that if it expands to all of the UAW, you're talking about thousands and thousands of workers. It starts to become more substantial. All of those
That's
things.
a big one that can be inflationary too, because if there's a car shortage and people need vehicles, well, we'll see the prices of those cars go up.
Just as we got our supply chains kind of back and running.
I think there's also the government shutdown as a concern, but as Stuart Paul from Bloomberg Economics yesterday told us, at least when the government shutdown if it's not averted, if there is a government shutdown, those employees who did not get paid will get paid once the shutdown ends.
Yeah, that's
They'll
true.
get back pay.
But if the shutdown goes on for longer and longer, that's when you start to have an economic impact. You can't go back to
Can't go to the
weeks
zoo.
before. Right, you can't
go
get
to
that
national
back.
parks.
Right?
Those things, yeah.
You can't
It's a big
redo
deal.
those things. So I don't know. Ifs and buts were candy nuts. We'd all have fun at Christmas. Having said that, one thing it looks like we can say maybe will be happening here in New York City. The mayor, Eric Adams, calling for construction of a little more housing in every neighborhood, maybe 100,000 more homes if he gets a zoning revamp.
Yeah, Adams on Thursday outlining a zoning overhaul that would allow for the development of an additional 100,000 homes for 250,000 people. That's over the next 15 years, Carol.
Yeah.
Measures he supports include allowing construction of 2 to 4 story additions on top of ground floor commercial spaces.
I don't know. I know people keep talking about a lack of supply, so maybe that's one way to get some. Wait, what about those offices in Midtown? Can we not convert?
That's hard to do. It's expensive.
I've read about that.
Communal bathrooms.
All right, don't go anywhere, folks. Just a few minutes left in the trade. We're going to count you down to the close with our TV colleagues. That's because Beyond the Bell starts now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlett Fu. We're counting you down to the closing bell. You're here to help take us beyond the bell. It's a global simulcast with our friends Carol Masser and Tim Stenivek. Welcome to our audiences across Bloomberg Television, Radio, and our partnership for those folks streaming on YouTube. Guys, you remember back in late August, we had that run on the S&P 500 back above 4,500. Did not hold that. We had another run to 4,500 just over the past couple of weeks, and now that is not holding. Now flirting with 4,300 here on what is the worst day for the S&P 500 since the spring.
Don't you feel like all the technicians are out there and like rethinking these numbers and rethinking what the trend lines maybe that are being taken out today? Because you've got all major U.S. equity benchmarks breaking below their 100-day moving averages. It's seen as a bearish signal by some of the technical guys. So it is interesting when we break out these levels. Doesn't mean things can't turn around, but nonetheless, I do have a feeling that the technicians are kind of rethinking where we go from here.
I was just saying to Carol, guys, that it's been a week where we've just had a lot of bearish voices in our studio. You're just joined by Hillary Kramer, CIO at Kramer Capital Research. And she is so bearish, she thinks that we could see another 5 to 7% drop this year in the S&P 500, and even was talking about the Fed cutting rates this year if the market sees that. I pushed back on it, but she was pretty insistent.
Cutting rates later this year, even after they just came out and said that they're reducing the number of rate cuts for next year?
That's pretty much what Carol said.
All right, well, you know, I'm glad we're thinking alike here. Totally. I look at the indexes and how they are below these key technical levels. Volume, it should be noted here, is higher than average, about 6% above, I should say, the daily average the last 5 days.
And remember, for all the changes, the upside changes that we've seen in price targets, a lot of those analysts and strategists have said that it is possible we could go back and test some of the year-to-date lows, and at least for today, we're starting to see that effect. The Dow Jones Industrial Average lower by about 1% on the day, down about 370 points, right around that 34,000 level, while the S&P 500 looks like it's going to finish the day right around 4,329, down about 72 points or 1.64 below that 100-day moving average. Similar story for the NASDAQ Composite, which is lower by about 1.8% on the day, and the Russell 2000 also lower by about 1.6%.
Yeah, Romain, in a sign of the bearish sentiment and risk-off trade, look at the S&P 500, 465 names to the downside today, 37 to the upside, 1 unchanged. If you look at the NASDAQ 100, you've got 95 lower, Scarlet 6 higher for the day. So really investors not really wanting to even think about being even a bit bullish, it feels like, in today's trade.
Yeah, well, look at
Can I just say, too, this was one of those days where you had basically 90% of the S&P in the red, and that's something that is, at least as of late, has been relatively rare.
Absolutely.
And that shows up in the industry sector performances, too. This is the S&P 500's 24 industry groups. You can see everything is down. In fact, there are at least 8 groups that are down by more than 2%. So that's notable here. Real estate, investment trusts, retailers, and consumer durables and apparel, that's the home builders, all down by 2.75% at least. The better performers, healthcare equipment, transportation, and household and personal products, your defensive sectors.
All right, a lot of red there. So it was a little tough to find some green, but I got an assist from my co-pilot here, Tim. FedEx, obviously, we broke down their earnings after the close yesterday, finishing way off its highs. Guys, it was up about 7% at its best levels of the day today, but finishing still with about a 4.5% gain. Top in the S&P 500 today. Profit topped analyst estimates, an increase to the low end of its earnings forecast. And I got to say, the analysts were out in full force. Evercore, Wells Fargo, Raymond James, B of A, Morgan Stanley, among those that raised their price targets on the company. Very positive on the company's progress in terms of cutting costs and also highlighting the strong performance at its ground unit. So the guidance is still conservative. So maybe looking for some more upside there in terms of the company's performance. Fox, big story. I know you guys are talking about, we are too, certainly a big media deal. Earlier this morning, 92-year-old Rupert Murdoch saying he is going to step down as chairman of the boards of both Fox Corp and News Corp following a nearly 7-decade career. He's going to become chairman emeritus, his son Lachlan taking over as chairman of those companies. Fox up about 3% and top performing the S&P 500. How to do Splunk? It is obviously the target for Cisco, the takeout. Cisco buying Splunk for $28 billion, an AI play in a big way for Cisco, but also giving it more security for everything that runs on Cisco's infrastructure systems. Splunk, by the way, up about 21% in today's trade. But again, makes sense. It was the target. It was the takeout.
Okay, well, let's look at Cisco, the company paying $28 billion for Splunk, finishing the day down by more than 3.7%. 3.9% is the decline that we're seeing there. I asked Woo Jin Ho, our Bloomberg Intelligence senior tech analyst, Romain, why the stock was lower, apart from, everything else being lower today. And he said that he was actually quite comfortable with the deal size. Oftentimes, though, we do see the company that making the big acquisition move lower on the day. He did say that on the call today, announcing this acquisition, some analysts were still looking for a company that has faster growth software company and more modern network architecture.
Needle, right?
Oh, yeah, biggest deal in the company's history. Let's look at Amazon. It's the worst performer on a points basis in the S&P 500, leading a decline in mega cap stocks, down more than 4.4% today. Closed down for its 6th straight session, longest losing streak since February. The stock losing more than 10% over that 6-day period. And then TKO Group Holdings. This is the company that owns World Wrestling Entertainment, UFC as well. finishing the day down, close to 18%. Came after a new deal to broadcast its matches on the USA Network disappointed some investors. Geetha Raghunathan saying that the new deal is estimated to be 40% higher versus the prior deal that was on Fox, slightly lower than the 50 to 70% hike seen in recent renewals. So a little disappointing that the company didn't get more money for these media rights.
Yeah, a lot of stocks down here on the day, a broad-based sell-off. The VIX elevated around 17, a sell-off in the commodities space, and a sell-off once again in treasuries, this time mainly in the belly and in the long end of the curve. You take a look at that 10-year yield right now at 4.48 and change right now, up about 8 basis points. We're higher by about 12 basis points on the 30-year yield. Now, you did see a little bit of a downdraft in 2-year yields, ever so slightly, down by about 3 basis points, excuse me. But I thought it was interesting, too. We had the latest MLive Pulse survey that was conducted immediately after the Fed's decision yesterday here. And in that survey, most of the participants, the majority of them, said 2-year yields have yet to peak.
So where do we go
raises
from
the question,
here?
exactly. What's the next level?
Yeah, I mean, really, like, what are we at? 514 right now. So how much further can we go? We were up near, what, 5, almost 5.2 on it. So I don't know. What is the top point? And then what does it mean in terms of the Fed trying to get inflation lower? Like, do they need to kind of rethink, once again, that target that many say that 2% is not realistic?
They've been so clear that they are not going to rethink that target at all. I think it points to the fact that, rates are going to have to be higher for longer if inflation doesn't come down to that 2% target, Romain.
But it's a totally different conversation to say rates are going to be where they are higher for longer. It's another conversation if you actually believe that we haven't actually hit that peak yet. So you mentioned 5.14 on a 2-year yield. I remember there were people last week talking about that 6% was not unrealistic, and I kind of guffawed, I think, the first time I heard that. But now maybe I'm starting to become a believer in that as well. And then that gets back to what you were just talking about, Carol. You pull out your Excel spreadsheet or your TI calculator or whatever you're using to do your financial model. I know you don't do anything, Carol, but for those folks that do that, it changes the calculus.
No, it does. It's a major rethink in kind of how we do everything. We're going to talk with a bank CEO, regional bank CEO, and I'm just curious about whether he thinks that this is, kind of a rethink in terms of the lending environment, the costs of capital. The guy keeps thinking about the costs for companies and their debt loads, ultimately, if they have to refinance and so on and so forth. I mean, this changes the dynamics. It changes the equation. It changes the spreadsheet, if you will. It's a different environment.
And the cost for consumers as well. We've already seen mortgage rates top more than 7%. I mean, it gets ever more elevated in a market where there's actually no transactions because no one wants to give up their almost zero rate mortgages that they've locked in before the pandemic. So that combined with the resumption of student loan payments and other expectations that perhaps at some point the job market will soften or anxiety will rise is going to mean curtailment on consumer spending.
If we're on the topic of regional banks, are you actually going to keep your money in that bank if you can get a 5.5%, Romain, in a money market fund or at the short end of the yield curve?
Yeah, I am curious, guys. I mean, kind of what comes next here? Because the market was so focused on what the Fed was doing or not doing, and we've kind of seen, I guess, the end result of that. And, I mean, is it earnings? I mean, is that going to save this market, or are we kind of just listless for the rest of the year?
I think it's government shutdown. I think it's UAW strike. I think it's those things that are outside of the Fed's control.
I think it's earnings. I think earnings always helps us give us some clarity. If CEOs say, yeah, folks, we got it, but you know what? Look, Cisco did a deal. They felt confident to do it. We had IPOs this week. Like, there are still companies making decisions and doing things, and I think that's a really important.
But does this shut the door?
Three of those IPOs have already broken the price. I mean, to the downside. I mean, what does that tell you? I mean, it's good that they came in the market, but there's no enthusiasm in the secondary market right now for these.
Yeah, it might shut the door for further IPOs. All those Birkenstock, who knows whether they'll go public.
You want to go to Ruth Chris Steakhouse and get a cheap wine? What do you say?
Or a trip to Europe.
If you're buying.
What about a trip to Europe?
As long as you bring your credit card, Romain, I'm in. All right, guys, that's a wrap. Our cross-platform coverage. Talking about the markets on this Thursday. It's confusing, it's complicated, and certainly more to come. Our cross-platform, radio, TV, YouTube, and of course, Bloomberg Originals. We'll all catch you tomorrow. All right, we are going to take it to the bank. We're going to take it to a bank CEO who's going to give us some clarity. My fingers crossed in terms of what's going on. We're definitely seeing the effects of the Fed moves. We just talked about it, but let's get right to our guest.
Yeah, very pleased to have back with us founder, chairman, and CEO of Connect One Bank, Frank Sorrentino. Connect One Bank has about 24 locations in New York, New Jersey, and Florida, and Frank joins us this afternoon from New York City. Frank, good to have you with us. I don't know to what extent you were able to catch the tail end of our conversation there, where I kind of gave away all the questions that I wanted to ask you, but I want to dive right into it. I mean,
thank you for that preview.
Yeah, no problem.
Right?
But we do love it when you join us because you guys have such a great read on the economy. So let's start big picture here. What are you seeing right now in September of 2023 when the markets are in turmoil, rates are high? Give us an idea of what you're seeing at your locations around the country.
Look, I think there's some anxiety relative to the direction of interest rates. I do think that what we saw and heard yesterday is that rates are going to be at these levels for at least the foreseeable future, the next couple of quarters. And I think there needs to be some clarity about the direction of rates. People are holding back doing things because they think maybe rates will be lower. Other folks are concerned if rates are going to go higher. And so the idea that the Fed pretty much said we're sort of where we are and we're probably going to stay here for a while, I think gives a little bit of clarity to the environment that we're in. The vast majority of our clients and our business owners are still optimistic. They're still doing transactions. Builders are still building, developers are still developing. There's still a lot of opportunity in the market. Everybody still has a job. Everybody's comfortable that they're going to keep their job or that they can move to a different job. And I think that level of optimism continues as we move forward. There is now a cost of money that has to be imputed in every transaction. And I heard a little bit about that before. And I think that's really the important part. People can still do things. You just have to include what is going to be the cost of the transaction to do it.
Okay, so are people still taking out mortgages?
Yes, people are still taking out mortgages, despite what what was said before. I think people are still buying homes. We are woefully underbuilt in this country and certainly in this market. We're some 1.5 million homes short. And so every builder that we represent, when they put product on the market today, it's selling. And so I'm very optimistic about that. Rentals are still staying strong. Every project that we've gotten behind relative to financing in the multifamily space is renting up as soon as it's completed.
Wow.
So a lot of good indications out there.
All right, the devil's in the details, and sometimes it's like nanometers that gives you an idea of maybe a new trend being built. So, Frank, are you seeing any signs of softness, stress, concerns, defaults, maybe, terms being renegotiated? Give us an idea. Because again, the devil's going to be in those small, minute details for us to kind of figure out if we start to see a change.
Look, we've certainly seen that our group of clients are being much more thoughtful about various projects, transactions, or business opportunities because of that added cost of financing. And so the volume of things is certainly down. I can definitely report to you that. And so we're seeing that not just here at Connect One, but we're seeing that across the industry. Lending, for the most part, has slowed down quite a bit, and that will make its way through the economy, which is something which the Fed is actually engineered to happen. So we are seeing a level of people thinking about things in a very different way, adding that cost of funding, thinking about whether or not certain things make sense. And there are things that made sense in a 0 interest rate environment or a 2% interest rate environment that don't make sense today.
Like what?
So those things are off the table.
Like what?
Well, any transaction that you would look at, even a builder who's going to develop a project, today the cost of money requires that project to have a different outcome, a different sales price, a different rental pro forma, and certain projects don't pencil out. Others do, and the ones that do, there's money available for them, and they're continuing to move ahead and do those things.
Frank, give us an update on deposits. I mean, we're in an environment, I've said it, a dozen times today, where money market funds are yielding over 5%. You've got some high interest savings accounts at some upstart banks that are yielding close to 5%. I think Citi has some sort of promo out, 5.5%. for 6 months if you put like, $100 grand over there or something? It's like, what are deposits looking like for you guys right now?
So again, we're mostly a commercial institution, and so we cater to the vast majority of businesses and small businesses, and we are seeing deposits tightening up a bit. People have a little bit less liquidity on their balance sheets today, and that's what's causing the competition. Again, engineered by the Fed. All the qualitative easing that was brought to market in 2020 is now being let out of the economy through qualitative tightening. And so there's less deposits to go around. Deposits are the fuel for banks to make loans. And so there's heightened competition amongst banks, amongst non-banks, money market funds, all the various actors that you mentioned before. That's driving up that cost to banks and a benefit to individuals who are either opening accounts or investing money. And that's having an impact on the economy as well. So yes, we could get into an economics lesson here where, M2 declined for the first time a few months ago. It has flattened out recently. I do believe the Fed is going to take their foot off the accelerator pedal there a little bit and allow some additional liquidity in the system so they don't break anything. And so we do have a soft landing. But I do believe that competition for deposits, which I think is the question you asked, is going to continue for the foreseeable future.
Hey, Frank, remind us, is it 60% of your portfolio is commercial? I know you said you're really commercial. Is it about 60%?
About 60% is commercial, small businesses, all different types of businesses in and around the New York Metro.
So I am curious, how much of that portfolio, those portfolio of loans, is coming due anytime soon and is going to have to re-up potentially at higher rates? And are you seeing any strain or stresses in that portfolio?
Yeah, it's a fairly small amount that come due every quarter or even on an annual basis. We have a fair amount of fixed loans. We also have loans that reprice, obviously, on a variable rate basis. With the underwriting that we've done here at Connect One Bank, we've always included an interest rate shock, and so the vast majority of the loans, as they're coming due, are well within those parameters relative to.
So no calls from small businesses saying, "Hey, listen, Frank," or to your team and saying, "We're having a little bit of a tough time. We need some help here. We've been banking with you for years. What are you going to do for us?"
Well, I will tell you that everyone is making the call.
Okay.
But the question is, are they really struggling or not? We're seeing, at the same time that we're seeing interest rates go up, we've also seen inflation push up the pricing of everything. So if we look at restaurant receipts, they're up. Maybe not because of more people seated there, but we're seeing that the average price per meal has gone up. If we look at rent roll incomes, they're up because rents have gone up. So there has been a move up in pricing for everything. And I think that's important for people to keep in mind. It's not just the interest rate component that has driven up the price of something.
Right.
Revenue streams have also gone up.
Yeah, you talk to landlords
really
and, they're saying the price of insurance has shot up so much that they've got to raise the rent in a commensurate way.
And they are raising the rents, right? We're seeing rents across the New York metro market are up somewhere in the 30% range over the last 2.5 to 3 years.
Frank, we only got 30 seconds left. You have a branch in West Palm Beach, and you have branches throughout New York and New Jersey. Where's the economy strongest right now based on your branches?
I still say the New York metro market. Don't, anyone who tries to discount that market, don't bet against New York. Florida's doing really well for us at Connect One, but don't bet against the New York market.
Got a word to describe the economy right now? And just got 10 seconds.
I still think it's robust.
Robust.
All right.
Great.
There it is.
We were looking forward to talking with you. It's like the perfect guest the day after the Fed. Frank Sorrentino, Be Well, founder and CEO of Connect One Bank on Zoom in New York City. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, and NASDAQ all declined. Late day selling. Stocks fell to their lowest since June. Treasury 10-year yields climbed as the latest reading on the labor market. This morning's jobless claims report reinforced the case for the Federal Reserve's higher for longer stance. 10-year yield 4.48% right now. The 2-year 5.13%. S&P today at 4330, down 72 points, a decline of 1.6%. The Dow dropped 370 points, down 1.1%. The Nasdaq Composite Index was down 245, lower by 1.8%. Bitcoin down 1.9%, 26,569 on Bitcoin. Spot gold down $10 the ounce to $19.20, a decline of 0.5%, while West Texas Intermediate crude finishing the day below $90 a barrel at $89.50. That was a drop today of less than 0.1%. FedEx, a proxy for global growth, rose after a bullish outlook. Profit last night topped analyst estimates, and it increased to the low end of its earnings forecast. FedEx shares today did advance by 4.5%. Rival UPS, though, lower by 1.4%. Recapping, lowest level for stocks since June, with the S&P down 72, a drop of 1.6%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Bloomberg Business Week is brought to you by Glenn Mead. Glenn Mead offers sophisticated wealth and investment management solutions combined with the personalized service you deserve. Your wealth, your mission, your investments. Let's talk. Visit glenmead.com to learn more.
All right, so the rollout of the latest COVID vaccines, they are underway. Beginning, I believe, last Friday, you got Pfizer, Moderna, recommended for those 6 months and older. So we wanted to really kind of get, I know people who are going out and getting them, but we wanted to get some clarification for everybody about the latest strain in the vaccines and kind of what we should be doing, Tim.
Very pleased to have with us Dr. William Moss, professor of epidemiology at the Johns Hopkins Bloomberg School of Public Health. It is supported by Michael R. Bloomberg, founder of Bloomberg LP and at Bloomberg Philanthropies. He's also executive director of the International Vaccine Access Center. Dr. Moss joins us on Zoom from Baltimore. Good to have you with us. I was surprised last week to see the news from the vaccine makers saying that they expect 24% uptake for this vaccine. The COVID one, at least, which is actually higher than it was in previous boosters. What do you make of that number?
Yes, thanks, Tim, for having me. I mean, it's disappointing, but probably realistic. We know that of individuals who received the primary series, only 17% overall received the bivalent booster. That proportion was much higher in the highest risk group, which is a good thing, in those older than 65 years of age, but was still only about 43%. Unfortunately, I think people have gotten tired. There's a lot of misinformation about the COVID-19 vaccines. And so I think that probably is a realistic expectation. I hope we do better than that.
Do people who are not in high-risk groups actually need to get vaccinated against COVID-19?
Yes, it's an important question to ask, and I think there are three reasons why people would want to get these updated COVID-19 vaccines. You know, the first is to prevent illness in themselves, and we know that within the months after vaccination, when antibody levels are highest, people are really protected against getting infection, or if they do get infected, get a very mild disease. We know that protection against severe disease, particularly hospitalization and death, lasts much longer, months, even perhaps a year or longer. So the first reason is to get protected against disease. And even in individuals who are younger and healthy, it can be very disrupting to have a severe, an illness that puts you in bed for several days, you miss work, you miss school. The second reason is that there's increasing evidence that the vaccines can prevent long COVID. And so even individuals who have mild infection infection can go on to get long COVID, which is a complex disease with multiple different signs and symptoms. The third reason is to protect those around you from getting infection or getting severe disease, particularly those who are most vulnerable, and also infants younger than 6 months of age who aren't eligible for vaccination.
So, Dr. Moss, is it a yes, yes, and yes, go get it, essentially?
I think so. I can understand, and that there is some controversy about this, particularly, let's say children 6 years to 17 years of age, healthy, and particularly if they've had the primary vaccination series, or if they've had COVID before, they're going to have immunity. They're at very low risk of severe disease. But I think, what this updated COVID vaccine does is that it targets the Omicron variants that have been circulating recently. We know there's cross-reactivity and cross-protection from laboratory work against the current circulating strains. So I would say it is a yes, yes, and yes, but I can understand why people are asking questions, particularly young people who are healthy.
All right. Is there a certain group that you should say, absolutely yes, you shouldn't even hesitate?
Yes, for sure. Older adults. Now, where you draw that line is somewhat arbitrary, but people are going with 65 years and older. They're going to be at highest risk of severe disease, hospitalization, and death. Even if they've had a prior vaccination, they're at higher risk. Particularly those older than 75 years of age, and obviously those with underlying medical conditions that place them at high risk. Particularly those who are immunosuppressed for various reasons.
What about kids? Should kids get the vaccine? I mean, I got to tell you, before the vaccine was available, gosh, my son was 3, so he wasn't able to get it. He ended up getting it last September, the vaccine. But before he got the vaccine, he got COVID. When my whole family got COVID, he basically had a fever for a half hour and then was totally fine after that.
Yes, so obviously the CDC recommended these updated COVID vaccines for children 6 months of age and older. It will provide additional protection. Again, as we were saying, they're young children who are otherwise healthy, who've been received the primary series before. They're definitely at lower risk. So, we want to prioritize those who are at higher risk, but I think everyone can potentially benefit. We have seen children hospitalized. I've seen children hospitalized, who otherwise well. It's rarer. The risk, the probability of that is much smaller. There's no doubt about that. But there is a risk nevertheless, and these updated COVID vaccines can provide protection.
What's more important if you could only get one of these vaccines for a kid, the flu vaccine or the COVID vaccine?
Yeah, that's an interesting question, and it's hard to predict a little bit what the epidemiology is going to be in this coming season. The risk of long COVID, I think, is an important one. Also, children have had before with COVID-19 multi-inflammatory syndrome that can also be quite debilitating. So, in my mind, some of the adverse events or impact of the disease may be worse with COVID, but that's a hard trade-off, Chris.
Well, having said that, so then what about flu, COVID, RSV vaccine for kids? What do you choose?
Yeah, so the RSV vaccines that were just recently authorized and recommended are really for adults older than 60 years of age. So they're the ones who are going to be eligible for the 2 new RSV vaccines. That decision, the way it's kind of written by the CDC, is that it should be done in consultation with the physician, where there's a discussion about the risk, the benefits or pros and cons of that. So for children, it will be a decision of COVID and an influenza vaccine, and I think it's quite easy when a person goes to get one vaccine to get both. All experts recommend that they could be given simultaneously the COVID and the influenza vaccines. So I would recommend that everyone get both.
I think my husband might have done the trifecta. I'm not quite sure.
Good for him. He should get like a sticker.
You can.
Can you do it? And is it okay to do it all in one shot? No pun intended.
Yeah, I think, we don't really, there's not a lot of evidence of administering the new RSV vaccines with other vaccines, and particularly with the COVID vaccine and influenza. I don't see any theoretical reason why you couldn't do it, but I know some experts are saying to space them out. And one way to kind of think about it is, what are the infections that we're seeing now? What are the infections that are likely to, come sooner? We are seeing RSV cases now, not as much influenza, so maybe get the RSV earlier. But we want people to get the COVID vaccine and the influenza vaccines probably by mid-October at latest.
All right, are you marking my calendar?
I emailed the doctor yesterday to ask about the kids. I was like, when do we go in to get the flu vaccine? Is it too early to do that? And he wrote back, no, it's not too early. Anytime before October, especially with our youngest, who's just over 6 months. She's now eligible for flu, but she has to get a flu vaccine booster after 4 weeks. So you have to spread it apart by 4 weeks.
Well, Dr. Moss, you really gave us some things to think about and some clarification, so appreciate it. Dr. Bill Moss, he's professor of epidemiology at Johns Hopkins Bloomberg School of Public Health, of course, supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. He's also, Dr. Moss, that is, executive director of the International Vaccine Access Center. So, man, he's like the guru.
You know what's good is when you take your kids to the pediatrician, sometimes you can get a flu shot there, too.
Like,
they'll give you the kids. They have them. I do it.
In?
Yeah, it's fine.
It's like however you have to get it done.
Exactly.
You know who's also getting it done?
Nancy Lyons. She's in our Bloomberg 99.1 newsroom in Washington, D.C. with a check on world and national news. Hey, Nance.
Thanks, Tim. The exchange of gunfire is intensifying in Ukraine as Russian troops push toward Bakhmut. Russia has launched the largest missile barrage as well since early spring on Ukraine's power grid. The grid operator says the attack left parts of 5 regions without electricity. The ramped-up fighting comes as President Biden hosts Ukrainian President Volodymyr Zelensky at the White House. National Security Advisor Jake Sullivan says Biden today is offering more support.
President Biden will announce a new package of military assistance today that includes significant air defense capabilities to help Ukraine protect its people. These capabilities will help Ukraine harden its defenses ahead of what is likely to be a tough winter, filled with renewed Russian attacks on Ukrainian critical infrastructure.
Again, National Security Advisor Jake Sullivan. The House continues to have trouble finding common ground on government spending, failing again today to come up with the votes to allow debate on a Republican-drafted defense bill. Bloomberg Government's Jack Fitzpatrick spoke with Bloomberg Sound On about the ongoing tensions.
The defense procedural vote failing is a sign that they don't have support to move ahead on anything at all. The defense appropriations bill usually would not be the problem, and it really is not the problem now. It's just that there's a broad sense of chaos in the House regarding anything on the topic of funding the government.
Bloomberg Government's Jack Fitzpatrick. A new study suggests a link between diet soda and autism. Researchers at the University of Texas Health Science Center found that pregnant moms who drank 1 can a day were more likely to give birth to a child who's on the spectrum. The study looked specifically at the sweetener aspartame. Global news 24 hours a day, powered by more than 2,700 journalists and analysts.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks sink the most in 6 months. 10-year rates approaching 4.5%, a level last seen in 2007. A bad week on Wall Street, turning dismal today, right to the numbers. S&P 500 index lower today by 72 points at 4330, down 1.6%. The Dow dropped 370, lower by 1.1%. Nasdaq down 245, a decline of 1.8%. 10-year yield at 4.49%. The 2-year, 5.14%. Spot gold down $10.50 the ounce, down 0.5%. And West Texas Intermediate crude at 89.62 a barrel, lower today by less than 0.1%. Hillary Kramer is Chief Investment Officer at Kramer Capital Research. She was a guest today on Bloomberg Business Week, and she spoke about what to be avoiding.
I would not be looking at the banks. We're going to really look to the banks to see what they have to say and what kind of color they give us on the market when they start to report earnings. And then, just think about something like restaurants. Like Cracker Barrel used to be a go-to stock. It's in the toilet. There's just no other way to put it.
Cracker Barrel lower by 0.4%, and home improvement retailers Home Depot and Lowe's also declined.
Home Depot and Lowe's doing terribly today. That's proof that everyone knows you're not going to move a house in a 7.5% mortgage environment.
Home Depot down 1.3%, Lowe's down by 2%. Again, recapping stocks lower across the board today with the S&P down 72, a drop of 1.6%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Mr. Pellet, thank you so much. Charlie Pellet with the Bloomberg Business News Flash. Thanks, everybody, for watching and listening. Bloomberg Business Week on this Thursday.
I like hanging out with all these people. Thanks for hanging out with us.
Totally. And what's really been interesting this week is, we've been talking about it. The UN General Assembly has been in session this week alongside New York Climate Week, which means we've had some really cool people hanging out with us, catching up with companies and institutions that are working on the world's most significant issues, Tim.
Yeah, one of those people is Tara Nathan, founder and leader of MasterCard Community Pass. It's a digital platform that enables the delivery of what it calls critical services to remote, frequently offline communities. She joined us on Zoom in New York City. Good to have you with us this afternoon.
Thank you for having me.
Okay, so explain what exactly you guys are doing at MasterCard with Community Pass, who it's reaching, and how you choose those locations.
Sure. So, around the globe in many communities across Africa, across India, Southeast Asia, and even frankly in Latin America, in our own backyard, there are billions of people who live in communities that are completely offline. At best, in the best of circumstances, they'll have intermittent mobile connectivity, often no power at all. And what that means is that these are communities that frankly are precluded from getting access to basic services that you and I take for granted. Things like access to credit, things like the ability to make a digital transaction, the ability to purchase something online, right? And so billions of people around the globe lack, the capability to do this. And so Community Pass seeks to solve for this, provides the digital infrastructure in these communities to reach people where they're at.
It's interesting, Tara, and you head to your website and you guys remind us that there's 1.7 billion people in the world that do not have a bank account, something we all take for granted, right? But, most people or a lot of people do not. And then you've got almost half of the world today struggling to meet their basic needs, whether it's food, education, basic healthcare. It's something that Tim and we look for guests to talk about, what's going on in the broader world, the developing world, because it's very different certainly to what we experience here in New York City, although there are people who are struggling here also in major cities, certainly in developed world as well. But tell us about how long you guys have been around and the impact you have had.
Sure. Well, actually, I'll just build on the point that you make. We talk about, you're right, financial inclusion and sort of the billions that lack access to something like a bank account. I think it would be maybe a surprise to some of your listeners that there are billions. There's over 1 billion people on this globe who lack access to something as fundamental as an identity. So imagine what that means. It means you and I have multiple identities in our wallets, right? We've got a school ID, a work ID, you've got a bank ID, you've got several credit cards. Hopefully they're all MasterCards. You've got several, you've got all kinds of identification. There are over 1 billion people around the globe who lack something as simple as the ability to say, my name is Tara Nathan, I live at this street, and this is what I'm entitled to. And if you want to think about a digital identity, that number can be north of 3.5 billion people, right? So when you think about where we look to focus our efforts, it's really in those communities. It's the communities where there is no access to a foundational identity, a digital identity, and where the communities predominantly are transacting in offline communities. These are communities typically where people are farmers, smallholder farmers. So they maybe have a hectare or 2 hectares of land, right?
We don't have a ton of time, so I just want to get a couple more questions in, Tara. Yeah. But I'm wondering about mobile phones and technology, and we've talked a lot this week about leapfrogging technology because you can go to places now with satellite technology, with mobile phone technology, and you can have your bank on your mobile phone. So weren't mobile phones supposed to fix this? And doesn't and even flip phones,
right? And we've been talking about this for years.
Yeah,
this idea, right, the
and a lot of phone companies are increasingly, you have places in Africa where phone companies are doing banking.
Yeah, no, you're spot on. And I think when you look at mobile banking and you look at mobile phones, they've done a great job, I think, at leapfrogging and giving many communities access to banking services, et cetera. And yet still, there are billions that I talk about who are still left, disconnected and without access to the most fundamental service, like an access to a credit or a bank account or health services, education, markets, et cetera.
I guess we would love to get to is what is it? Are we making progress? Tell us about what you guys have been doing and maybe getting people so that they do have the identity, they can be part of this system. And I'm curious about where it's working, or is it a lot of women? I remember with microloans doing tons of stories 20, 25 years ago about, a small amount of money would be given to a woman because it made a difference in a family's life, if you will. So just a little bit about kind of the progress you have made and what it tells you.
We're making great progress, I'd say. Look, we started out less than, I'd say, 3 to 4 years ago. We're already crossing, we've crossed 3.8 million. We're coming on 4 million users on the platform. And when I say 4 million users, what I'm talking about is, again, a smallholder farmer. Talk about what the benefit is. Somebody who earns $1 or $2 a day. That's the person we're trying to service here. And what we're doing is we're getting her access. In many markets, the majority of these farmers are women. And we're giving her access to $5 of credit because she's now connected digitally to a bank. We're giving her $5 of credit so she can purchase seeds to plant them, to purchase fertilizer, to purchase pesticides so that she can increase her productivity of her land. Which is very important, sort of in the climate and the sustainability conversations we're having now in UNGA. And we're doubling her income. And I think that's the impact that we're trying to do. We're trying to look at how can digital technology make that smallholder farmer get paid more and faster so that she can expand and increase her sort of economic outlook.
I hear what you're doing, and the sort of like crypto skeptic and comes out in me.
I knew there's going to be a crypto element.
I mean, because the crypto people say, hey, blockchain fixes all this. Yeah. Are you guys leveraging blockchain tech at all?
Just got about 25 seconds.
Okay. Look, the technology is not the hard part here, right? So whether you talk about crypto or blockchain or whatever, what we're really doing, the hard part of what we're doing is building the ecosystem that serves this farmer. And that is crowding in the buyers and the input manufacturers and the bankers and the ag techs and the health techs. That's the difficult work that we're doing. So we're out in about 6 markets now around the globe, like I said, crossing 4 million users.
Wow.
And we're crowding in all these actors to service this smallholder farmer.
Well, Tara, look forward to hearing more updates in the future and appreciate time. And I know it is a busy week for you all. Tara Nathan, she's founder and leader of MasterCard Community Pass, joining us on Zoom in New York City. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Affirm Holdings is exploring the introduction of a subscription service in a bid to create more recurring revenue beyond interest collected from its buy now, pay later plans. The company's work was discovered inside code hidden within its iPhone application. Affirm shares today down by 8%. Several money managers are closing funds that focus on environmental, social, and governance, commonly referred to as ESG. And with more on that story, here's Bloomberg's Steve Rappaport.
Charlie, BlackRock, and other money managers spent years rolling out sustainable funds, seeking to capitalize on surging interest in ESG investing. Now they're abandoning an increasing number of those products in the U.S. amid political backlash and investor scrutiny. According to data from Morningstar, State Street, Columbia Threadneedle Investments, Janus Henderson Group, and Hartford Funds Management Group, among others, unwound more than 24 ESG funds this year. Charlie?
And that's Steve Rappaport reporting. Garden Restaurants, the parent of the Olive Garden and Longhorn Steakhouse brands, is seeing more softness among households with incomes above $125,000 compared to last year. That according to CEO Rick Cardenas, who told analysts on an earnings call today that consumers are still resilient but are being more selective. He also says Darden will not engage in, quote, deep discounting. Darden posted quarterly sales and earnings results that exceed analysts' expectations. Olive Garden, by the way, dishes up about 50% of the company's revenue. And those are our top company stories at this hour. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenovec on Bloomberg Radio.
It is Bloomberg Business Week. Tim Stenovec and Carol Masser live from the Bloomberg Interactive Brokers studio. It is. Here we are.
I thought we were doing surveillance.
No.
Okay.
Never forget that this is Bloomberg Business Week,
I
okay?
will
3 to
never
6,
forget.
Wall Street time.
Yes.
Well, let's get a check on the latest world and national news. Nancy Lyons in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. While Ukraine's President Volodymyr Zelensky makes the rounds in Washington looking for more U.S. aid to fight Russia, Treasury Secretary Janet Yellen is warming to a new plan to aid Ukraine's reconstruction. We get more on that from Bloomberg's Nathan Hager.
Secretary Yellen says the U.S. is discussing a European Union proposal for a windfall tax on frozen Russian assets. In an interview with Bloomberg reporters and editors in New York, Secretary Yellen called it a reasonable proposal, something that would be different than seizing assets. The Biden administration's been under pressure to take over frozen Russian assets outright, but Yellen says that would be illegal under current law. The EU's legal service came to the same conclusion. In Washington, I'm Nathan Hager, Bloomberg Radio.
There is optimism. A deal could be close between TV and movie writers and Hollywood studios. Both sides resumed talks today following progress yesterday. They've been divided on issues of pay, the size of writing staffs on shows, and the use of artificial intelligence in the creation of scripts. But the outlook for the strike between the UAW and automakers is looking less promising. UAW President Sean Fain will make another Facebook announcement tomorrow at noon Wall Street time if a deal has not been reached. It is expected he'll announce additional walkouts, possibly at plants producing more popular models. The torch is being passed at Fox and News Corp. Today, 92-year-old Rupert Murdoch announced he's stepping down following a nearly 7-decade career, and his son Lachlan will take over CEO duties. Bloomberg media reporter Jerry Smith does not expect much to change.
The news really solidifies Lachlan's control over the entire empire. So to the extent that Lachlan and Rupert are still very in touch, it's hard to see much changing there.
Smith says the older Murdoch will become chairman emeritus of each company. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Carol and Tim.
All right, Nancy Lyons, Carol Masser, along with Tim Stenovec, live here on Bloomberg Business Week. There's nothing as entertaining, and it always pops up on the most read on the Bloomberg when there is an acrimonious split.
People just want to know the details.
High-profile divorce where we're talking about lots of money at stake.
Yeah, hedge fund billionaire John Paulson used a sham purchase of a luxury penthouse apartment in Puerto Rico to improperly enrich himself by $10 million at the expense of his family trust. That's according to a claim his wife makes in a suit accusing him of hiding billions of dollars in assets
during their divorce.
Yeah, Jenny Paulson or Jenica
Connection
Paulson
lost.
is